President Trump vowing U.S. help for Iranian protesters. In an early morning social media post, Trump said, if Iran shoots and violently kills peaceful protesters, which is their custom, the United States of America will come to the rescue.
Oh, yeah?
We are locked and loaded and ready to go. Authorities say at least 7 people have been killed in growing demonstrations linked to Iran's suffering economy. Shopkeepers began protesting earlier this week over the Iranian government's handling of a sharp currency slide and rising prices. The country's civilian government has signaled that it wants to negotiate with demonstrators.
Coming up, the price of new cars is on the rise, and buyers have been financing with terms as long as 100 months. We'll dig into auto affordability next.
Okay. Well, they're going to get back on that affordable automobile thing. How I feel about that. That's what I thought. Okay, well, let's kill it today. I'll be back.
We're concerned about
That is Times Square, the quiet after the storm that was New Year's Eve. There's still a lot of confetti that is rolling around. It's made its way into the building, into the parking garages all over the place. Yeah, but here we are. Things are a little quieter today. It is almost 7 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Among our top stories this morning, Tesla expected to roll out annual deliveries numbers this morning, 2025 deliveries are expected to drop by 8.3%. Tesla shares this morning up by about 2% ahead of that news. Russia's government has asked the United States to stop the Coast Guard from chasing an oil tanker that was heading towards Venezuela, but is now sailing in the Atlantic Ocean. The New York Times says that Russia's formal diplomatic request was delivered to the State Department on New Year's Eve. The United States has been monitoring that tanker for almost 2 weeks. And authorities are working to determine the cause of a fire that broke out after midnight on New Year's Day at a bar in Switzerland. That fire left about 40 people dead and roughly 115 people injured at a ski resort in the southern part of the country. It was one of the worst disasters in Switzerland's history.
Let's check the futures. Actually set for a pretty good pop at the open for the new year. The S&P 500 up 40 points. That's, well more than half of 1%. The NASDAQ is where the strength is, due to be up 270 points, more than 1%. Almost all 100 NASDAQ 100 stocks were down on Wednesday. There was definitely some mechanical and extra pressure on some of the tech stocks. They're now getting a little bit of relief here. Treasuries, not a lot happening. The yields did go up to kind of multi-month highs. You now see the 10-year basically flat, 4.15%. Still some resilience on the long end there. The 30-year 484. Let's check out gold and silver. A lot of the hot money is kind of dancing around these metals, and they continue to do so. Silver, of course, made that high above $80 an ounce last week, then cracked, now up 4.5%, kind of rebounding there. Gold back above 4,400, up 1.5%. Copper's also been quietly quite strong. Cryptocurrencies, Bitcoin's been really unable to get much of a lift off of this base it's been trying to build in the mid to high 80s. It's 89.5 just about right now, up modestly, and you see the other coins also up between 1 and 2%. Let's get to Leslie Picker with a look at this morning's pre-market movers. Hi, Leslie.
Hey, Mike. Good morning, everybody. Let's start with a check on some of the biggest furniture makers. Higher, really across the board here after President Trump delayed higher tariffs that had been set to go into effect on the sector. It puts off an extra 30% tariff on furniture and 50% tariff on cabinets and vanities for a year, but it keeps in place 25% tariffs the president imposed in September. Meantime, shares of Samsung jumping about 7.2% in South Korea trading today. In a New Year address, the company's co-CEO quoted customers as saying, quote, Samsung is back. He said customers have praised its next generation high bandwidth memory chips. In October, Samsung said it was in talks to supply its new memory chips to NVIDIA. Shares have climbed about 141% over the past year. And we'll finish with a check on U.S. listed shares of Baidu. They're soaring about 11.5% after the Chinese tech giant's AI chip unit filed to go public on the Hong Kong Stock Exchange. It didn't provide details about the size of the offering, but Jeffrey says the company is likely to be valued at between $16 and $23 billion. Analysts there hiking their price target on the stock to $181 from $159. That's an implied 38% upside from Wednesday's close. For more on that and other top analyst calls of the day, head over to cnbc.com/pro, where subscribers can get more access to detail and analysis of the day's big calls and stories. Mike.
Thank you, Leslie. Yeah, people have been asking where the AI IPO boom is. It's in Asia right now.
Exactly.
It's not really in the U.S. Thank you, Leslie.
Thank you.
Some big changes in Omaha, Nebraska this week, and the business community at large is taking note. Warren Buffett has officially stepped down as CEO of Berkshire Hathaway. That's the company he built over the last 60 years. He's handed over the reins to Greg Abel. Buffett remains chairman, of course. That announcement from Buffett about this transition coming back in May at the company's annual meeting came as a surprise to not only the shareholders, but most of the Berkshire board and to Abel himself. So, what changes for Buffett today? Well, listen to what he told us just a few days after that surprise announcement.
Everything will be the same. I will come in. I won't be up there speaking at the annual meeting, but I'll be in the director's section. Maybe you'll interview me at halftime or something of the sort. Who knows? But Greg will be the decider.
Slow down, old man.
Can't imagine how much more he can get accomplished in a week than I can, or a month. I mean, he just, and And at the same time, he's not a distorted individual. You know, I mean, he likes to play ice hockey with his kids, and he lives what would look like a normal life. And my guess is that if the neighbors didn't know who he was, they wouldn't have any idea that well, on January 1st, he is going to be the decider on a company that employs close to 400,000 people, and has got plans around to be around 50 or 100 years from now. And who knows what will happen, but it has a better chance, I think, of being here 100 years from now than any company I can think of.
Abel is inheriting Berkshire Hathaway with a huge stockpile of cash, over $381 billion as of the end of September. And after a year when the company gained just over 11%, while the S&P was up by almost 17%. Abel will be running all of Berkshire. He'll have the final say on both the investments and the holding companies. Buffett offers high praise of his successor.
Greg's operated more than I have when you get right down to it. I mean, he's gone over to England to run something. He went to, he came to all one time to run a business for a few years, and there's no secret formula that only CEOs have or anything of the sort. So I'd rather have Greg handling my money than any of the top investment advisors or any of the top CEOs of the United States.
That is a huge endorsement.
It is a huge endorsement, but it's an endorsement we've made, and I am going to have him handling the money of it. You know, in effect, he knows business.
Greg knows business, so does Warren. In fact, Warren's stepping down after a phenomenal run. He's still going to be there as chairman, but again, what he's done over the last 60 years in the investing world is unrivaled. If you just look back over the last 20 years, you'll see Berkshire B shares up by 755% versus gains of 448% for the S&P 500. But if you were looking over the last 60 years, I mean, the statistic that really jumped out at me was that stock had dropped 99.2%, and he still would have outperformed the S&P 500 over the last 60 years. The gains are...
The starting point for the price of the A shares is basically zero.
Yeah.
I mean, essentially, on a chart, it looks like zero, and it's like 3/4 of a million or whatever it is now. What's interesting, I ran a 20-year chart on Wednesday of Berkshire relative to JP Morgan. And JP Morgan, Berkshire still outperformed, but JP Morgan's like right here, getting close and gone vertical in the last little while. So as the market looks for, another kind of bulletproof source of stability in the financial sector.
Becky, I know you've seen this, but the number of long-term holders of this stock, the people that have held this stock for decades, the amount of family wealth that he has created for so many Americans. I mean, you could write a book, and hopefully someone will someday, about the families that have owned and kept this stock for decades, and the amount of wealth that's created for so many. Wouldn't call them everyday Americans, but certainly not the super rich.
Even locally. Like, it's so material that there's been that much wealth generated by this company because people who just happen to have bought a few shares
Because they were partners or
decades ago.
And it may not have been them, it may have been their
Or
parents.
friends and family.
Friends and family along the way. I think what he is most proud of with that is the number of those long-term shareholders who have then turned over millions, and in lots of cases, hundreds of millions of dollars to philanthropy.
Following his example.
Following his examples with that. I mean, that's the thing.
Well, thank you, Becky.
He does talk to me about some of these things. He'll forward some of the letters that people have sent them, and when they are following that example, people who didn't even know still had the shares, or that the families still had the shares, and that they are turning over that money and doing lots of charitable work with it. I think that is what makes him the happiest.
That's amazing.
To see out of any of these things. And folks, we do have a programming note for you. While Buffett has said that he's going quiet, the sound that you just heard from him is part of a new primetime show that we're going to be bringing you right here on CNBC on Tuesday, January 13th. That will be at 7 p.m. Eastern Time. It's a series of never-before-seen interviews where we spoke to Warren about his philosophies on business, philanthropy, and life. We talked about how his perspectives have changed over the decades. Buffett's three children, Susie, Howie, and Peter, also join us to talk about the monumental task that their father has given to them, and that is to eventually give away his entire fortune. He'd like to see it done in the 10 years or so after his death. But the very interesting thing is they're doing that while they are kind of maintaining a family control over Berkshire Hathaway. You know, the 30% they still have of the voting rights. He still owns the voting rights there. And they want to make sure that Greg Abel has a very long runway to set him up for success. I think what has happened over the last 5 years has really helped a lot. When Charlie Munger first slipped about 4.5 years ago and said that Greg would be the one who would be taking care of the culture, that signaled to the world that, yeah, Greg Abel was going to be the next one. He's been running all of the non-insurance operations for years, and he's done it in close concert with Warren Buffett, kind of there as a friend, a guide, a mentor.
And it's amazing that you got the three of them to talk about it. I'm so excited to watch that because they're going to be, you know, I cover the world of philanthropy, and every nonprofit in the world is now going to be very interested in how they see the world. Are going to be, so that's going to be great news.
All right, the price of new cars is up more than 30% since 2020, and some car loans are stretching terms to 100 months. Joining us now, Sean Tucker, Kelly Blue Book managing editor, who's been writing about vehicle affordability. Sean, good morning. Obviously, the way it works for a lot of people in this country is they buy as much car as they can afford with a given monthly payment. So what are now the implications of this as we try to essentially extend the maturities and somehow accommodate these higher list prices?
So the 100-month loan is an attempt to address an affordability problem in the car market. The average new car in November sold for $49,814. We expect it to cross the $50,000 line sometime early this year and stay there. That translates to a monthly payment of $776, which is just not easy for the average American family to take on. It's near a record, not quite a record. If you remember during the microchip crisis, it hit $795. But we do think it's possible we could see a record monthly payment next year. And with lenders and dealers can't bring down the monthly payment by changing the mix of cars that are built, but they can bring it down by extending the loan. The problem for the buyer is that a 100-month loan at today's interest rates will cost you about $5,100 more over the life of the loan than a 60-month loan would.
Is there any sense that this dynamic is going to restrain further increases in prices, or are the drivers of higher prices just, you know, continuing to force the issue here? I mean, obviously we know about, you know, tariffs and a lot of the big cost increases on basic materials, but just the fact that, you know, these are now, you know, computers on wheels, and they become more high-tech and more features get embedded in that.
We don't see a change on the horizon. A little bit of this is consumer choice. We're seeing near record numbers of luxury cars sold, and cars priced over the $75,000 line outsell those under the $25,000 line now. But all the automakers have noticed that, and they've tailored their lineups to address it. So, for instance, in 2017, they built 61 models priced $60,000 or more. Today it's 114. At the other end of the scale, in 2017, they built 36 models priced $25,000 or less, and today it's just 4.
Sean, I wonder, this tax change that I guess is retroactive and took effect this tax year, 2025, but certainly will continue next year, which allows car loan buyers to deduct up to $10,000 of interest on car loan payments. Did you see any impact from that after the tax bill was passed? Do you think that's going to be a tailwind going into next year?
We haven't seen terribly much impact from it yet. It's tailored narrowly enough that I don't know if it's going to have a significant impact. I think the bigger factor is really just the mix of cars that are being built.
So when you say it's tailored narrowly, in other words, it only applies to certain kind of buyers, or that $10,000 cap is not high enough?
A little bit of both. More that the $10,000 cap is not all that much in a world where the average car costs probably $50,000 or more.
Yeah.
And when it comes to this idea that, it's obviously consumer choice and they're skewing toward more expensive models and the manufacturers respond to that, is there not a bit of an opening somewhere else for a lower price line? Obviously I go back to the time when Ford Escort was the best selling car in the country.
Right. There absolutely is, and it's inevitable that someone is eventually going to figure out, I could build cheaper cars and have less competition. But we've seen very little of that yet. You may be familiar, there's a Jeff Bezos startup project called Slate Automotive that's trying to build a truck for under $20,000. I'm not convinced they're going to get there, but that's the first sign that I've seen of someone trying to address that market. But the major automakers haven't moved toward it yet, and they're making a lot of money not addressing that into the market.
And then on the lending side, the credit quality side, there has been a lot of, some evidence of uptick in delinquencies on auto in particular. Are there one-off factors related to, I don't even know what. I mean, people have even linked it to things like deportations. But I wonder if you think that that's going to be a continuing potential risk in the credit world.
It is a bit. There were a couple of prominent bankruptcies of subprime lenders last year that certainly played into that a bit, but we're not expecting a drastic change there.
No. Okay. We will track it. Sean, really appreciate your time this morning. Thank you.
Thank you. Good to be with you.
All right, coming up, strong gains for the major averages in 2025. We're going to get a few names to watch in the year that we're now in, 2026, including one of the Mag's 7. Squawk Box returns in just a moment.
Welcome back to Squawk Box. Joining us now for a closer look at the markets as we start 2026, Stephanie Link, Hightower Chief Investment Strategist. Steph, good morning and Happy New Year.
Good morning, Mike. Happy New Year.
So here we are, obviously a third straight, pretty strong year. The latter part of 2025, you started to see a little bit of that rebalancing of the market, tech underperforming, cyclicals doing better. What are your broad expectations for how things track from here?
Actually, I think 2026, we could see an acceleration, Mike, in the economy, not only from the consumer, which has been resilient, and we've been talking about it all last year, and the AI momentum, but now you have this year, you have more fiscal policies coming into place with the One Big Beautiful Bill, which will help not only the consumer, but corporations. You have bank lending, which is really important. The H8 data from the Federal Reserve, we've seen 10 consecutive weeks of acceleration in loan growth, and that will help to fuel the economy as well. Deregulation, M&A, and also we know that the Fed cutting, it's always a lag of impact. So I think as the Fed continues to cut, and I don't know if they're going to be very aggressive, but it should be a positive as well. So I think it all sets up for continuation of good earnings. Last year earnings grew 14%. This year I think you're going to grow about 10 to 12%. With revenues in the mid single digits, margins will continue to be strong, and you have continued buybacks. And so I think 2026 sets up well, but I am mindful that we've had 3 amazing years in the S&P 500, double-digit growth, and to have a repeat again, it might be a bit challenging. So I'm kind of expecting like 8 to 10% growth this year.
Yeah, I mean, especially when, if we're talking about a broadening of earnings growth, if that does come through as a lot of the consensus would have it, sometimes that doesn't have the most high leverage effect on the S&P 500 as we've been seeing, right? So, it could be a little bit lost in the wash. Where are you finding maybe individual opportunities? Because there was massive amounts of dispersion within the market last year, a lot of push-pull, even within the Mag 7. So where is that taking you?
Yeah, so I think first you want to own some of the laggard techs. And that would be, in my mind, Meta, and we can go through it. You also want to own economically sensitive companies like Union Pacific, some of the rails, which have actually lagged in the past year. You definitely want to own automation. That is in the early innings. That's like a Rockwell Automation. You want to absolutely continue to have exposure to consumer. I like it via Capital One or even something like an Estee Lauder. And and lastly, I've been a big fan of animal health. Zoetis was down 23% last year. This is an industry leader with 20% market share. So I think there's opportunity there.
Talk a bit about Meta. Obviously, there's been a lot of, each of these AI players, the hyperscalers, whatever you want to call them, have run hot and cold in investors' minds, and it's 17% off the high.
Yeah, and that's one of the reasons why I like it. It's 17% off the high. It's trading at 23 times earnings, and you're getting 20% earnings growth and 26% revenue growth. And I think 2026 sets up well for Meta because they have been spending so aggressively. And so AI is going to lead to better tools, new customer applications, messaging improvements, and also you have this cost-cutting program in Reality Labs that could be something like $5 billion. They have a $31 billion buyback. And I think there's a possibility you can see $38 a share in earnings power by 2027. So I think you add it all up, the fact the stock has lagged and people are mad at the company for spending, I think that spending is actually leading to better ROIs. We saw it last quarter with impression growth of 14% and time spent of 5%. So it's working. We don't like them spending that much, but it's working, and eventually you're going to get better operating leverage.
So you don't think that Meta has to do another one of these pivots to say, okay, we're actually not going to spend as heavily, we're not going to consume all of our free cash flow? They can just actually show the benefits of that?
I do, because I think they're spending now so that you can continue to see growth going forward. Look, they're spending a ton of money, and yet they're still able to grow earnings 20%. And revenues in the mid-20s. And I think revenues can actually accelerate, as I mentioned. So to me, I think if they just show better results in the face of big spend, that to me, at this valuation, is very attractive.
And the Union Pacific idea, how contingent is it on the consolidation story, or is it just more of a fundamental opportunity?
Well, I think Jim Venna, who's been at the company, who's CEO, has been at the company for 2 years, has done an amazing job on execution. So over the last 2 years, for example, they have done a better job in terms of seeing better volumes, margins, services, even dwelling times. Margins actually have risen 500 basis points in the past 2 years. So that speaks to execution, and this is in the face of a rail recession, right? But if I think that the economy is going to grow and maybe even accelerate, you want to have exposure to the rails. This stock is trading very attractively at 19 times the low end of its historical range. But as you mentioned, the big story is Norfolk Southern and the acquisition, and we're not going to know if they get approval until the second half of this year. I think they will get approval, but I don't think you need it for the stock to work over the long term. But if they do get it, I mean, they're talking about $3 billion in synergies. They're talking about $10 billion a year in free cash flow. It's just, and maybe even $17 in earnings power. So I like it for the fundamental reasons on the economy, but I also really like it for Norfolk.
Capital One has been a very strong stock. Obviously, the market likes the Discover financial integration. They've had a pretty decent credit loss experience, and it's sort of a counterpoint to the idea that you're having this sort of struggling K-shaped economy. So I guess the question is, now what in terms of, once it's had this nice little run?
Well, when I look at the company buying back $16 billion a share, $16 billion, which is about 10% of their float, they obviously have a lot of confidence in what they are going to be delivering. And I do think that the Discover Financial deal will be more synergistic than the company is saying. Maybe it's on the high end of the $1 to $2 billion that they're saying. And I also believe that they're, as a result of this transaction, ROTCE, which is the profitability metric, is going to move higher. I think net interest margins go higher because of the better mix. And I think that their customer base starts to change a little bit to higher FICO scores. So that should help protect delinquencies and net charge-offs and that sort of thing. So it's trading at 12 times, Mike. I mean, that's still very attractive. So, I continue to like, and I really like it because it's the consumer play.
Yeah, it's funny, when Discover was independent, it was always kind of half-pitched as they have their own payments network and all the rest, and maybe that wasn't at scale yet, but we'll see if
You're fired.
maybe that does change. You mentioned Meta. Are there other of the big guys that you either would continue to stay away from? I mean, we have Apple coming out, Raymond James reiterating it with a
Stay away from.
There's a kind of a sense out there that they remain a little bit under scrutiny for what they're going to be able to have pay off in AI.
Yeah, I mean, look, I think
Tell 'em to
Apple
shove
is
it.
a show me story, and what they do with AI is if it works, the stock is going to work. If it doesn't work, or if it's delayed again, the stock's not going to be as it won't be as well received. So, to me, the other of the Mag 7s, I think Amazon is very attractive. That stock has lagged. I think there's many ways to win at Amazon with regards to AWS, which actually accelerated last quarter and I think will continue to accelerate. You have retail. I mean, they're the juggernaut in retail, and they are putting up 9, 10, 11% comps in retail. International is starting to do better, and advertising doesn't get a lot of attention. That's their highest margin business. And so, to me, trading at 13, 14 times EBITDA, when historically it's traded at 18 times, maybe it doesn't get back there, Mike, but I do think that it's very attractive, and I do think they will continue to see better profitability, and that's what we've been wanting all along with the growth story. So that's the one over Apple that I would be focused on.
Yeah, it's been kind of just coiling there for quite a while, and that chart was just showing. Steph, really appreciate it. Talk again soon.
Thanks, Mike. Okay, Happy New Year.
When we come back, Fed Chairman Jay Powell's dilemma: when his time as chair is up, will he stay on the Fed as a governor? Steve Leisman has been digging around on that story, and he'll have the latest next.
Nope.
Right now, though, as we head to a break, here's today's Aflac trivia question. In 1839, the first photo of which celestial
There we go
body
again.
was taken? We've got the answer when Squawk Box returns.
question, whatever it was. Oh, that tastes real good. Shot.
We are back with the answer for the Aflac trivia question of the day. In 1839, the first photo of which celestial body was taken? Well, the answer, of course, is the moon. French photographer Louis Daguerre took that photo. And by the way, there will be a full moon tomorrow. It's called the wolf moon. Oh, anybody know why? I looked this up just really quickly. It's because it's what you call the first full moon of the year, because you used to hear wolf's moon, you're used to hearing them howl at the moon a lot more often in January, so they call it the wolf. I don't know why, but I'll be watching.
Be watching and howling. One of the big unknowns for the Fed in 2026 is, will Fed Chair Powell stay on as a governor after his term as chair ends in May? Senior economics reporter Steve Leisman has been reporting on the possibility and the non-answers from Jay Powell.
Right. Powell has been pointedly mum about the question of whether he will stay on board after his term as chair ends in May. It's a question that's not been asked in a while. Both Ben Bernanke and Janet Yellen, they left with time remaining on their governor terms. Powell could stay on the board for 2 more years as governor. You can see there when the term ends and how much time is left. But this is what Powell said about the issue in the December press conference.
I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
At stake, the makeup of the rate-setting Federal Market Committee and whether President Trump will have a majority of appointees on the powerful Board of Governors. That Powell has not said raises question of whether he is really considering staying. Fed observer interviewed by CNBC said they see it as a wrenching decision for Powell that pits the personal against the professional. A relatively new grandfather, Powell's thought to be more than ready for civilian life after 13 years at the Fed, including 8 as chairman amid unprecedented and withering criticism from President Trump. But after all that time, Powell also holds deep loyalty to the institution and likely some concern about its fate under the challenges posed to its independence by the president. 3 Trump appointees currently sit on the 7-member board. Governors Waller, Bowman, and Myron. Either Lisa Cook's removal by the Supreme Court or Powell's departure would hand Trump a majority that could vote for ultra-low interest rates or fire district bank presidents who don't vote to cut rates. There's considerable doubt, however, that all 3 would take such votes, especially somebody like Fed Governor Waller. For Powell, staying would be a political move that would open the Fed up to greater criticism from Trump, undermining the institution he'd be trying to preserve by staying. Most Fed observers contacted by CNBC think Powell is most likely to leave, though they would not rule out him staying even for a short time.
There was some speculation after that brilliant decision to renew the 5-year terms of the Reserve Bank presidents that perhaps, since they were now good, that this gave him a little more leeway to leave afterward. Do you think that's...
I think that's true. I think that's true, but look, there's a couple things. One is, do you stand in way of the freight train that is the President Trump presidency, right? I mean, there is no, I don't think of a single agency that has withstood his efforts to basically bring it or assert greater executive authority. That's one. But there are people who tell me that, look, even if he were in the minority, he could be a stabilizing force on the board there. So, appointing the presidents for the 5-year term is a start for that stability, but there's an argument that the Board of Governors could fire any president anytime they wanted to for their rate decision. This never happened before, but there's a reading of the Federal Reserve Act that allows that to happen.
Yeah, it's interesting because I always go back to wouldn't the market ultimately impose some kind of discipline? And just exactly how aggressive might the president be, especially considering that he seems to have just not gone as far as he wanted to go, even with actually attempting to fire Powell.
Mike, I'm working on this story, and I'm talking to some experts about this issue of, should we leave it up to the market to assert the independence? And I keep thinking about what is the market, and on days when the stock market does one thing and the bond market does another, the stock market, I think, cares less about inflation than the bond market does. Like, how profitable were these companies, to my surprise, maybe yours even, in the post-pandemic period? They raised prices more than their input costs went up. The profitability went up in that period. Stock market sees inflation, they can be like, hey, bring it on, buddy.
It seems to me that Bessent, the Secretary of the Treasury, pays probably more attention to the bond market than he does the stock market.
I think that's true, and there's a lot of talk about the efforts of the Treasury to essentially suppress the bond market, which, by the way, in one of my conversations, somebody said to me, given those efforts by the Treasury, are we really seeing the market's concern here about possible inflation from whatever happens? And in case you guys don't ask, I have to tell you that go ahead and ask. Did this ever happen? Did a Fed chair ever say?
Yeah.
Go ahead.
I was just going to ask that.
Did a Fed chair ever say?
Yeah. Did they ever say?
Mariner Eccles. Mariner Eccles.
The guy in the building after.
Thank you very much, Mike. Now, what's really interesting about this is this is one of the things where you never have, you don't put this in the main story, but it's still an important notebook thing. He stayed after his term ended, I think, at 48. He had been there for 14 years as governor or chair. They called him the chair governor back then.
He was appointed in 1934.
34 to 48. He stays on as Fed governor, and then he becomes instrumental in striking the Treasury Fed Accord, which is the thing that gives us our modern independence. What's interesting about that is, we gotta go. What's interesting about that is the Treasury had wanted the Fed to keep rates low to finance the debt. What does Donald Trump want the Fed to do? Keep rates low to finance the debt. So people think Powell's going to leave, but some people also suggest that it would be a stabilizing force on the Fed, and he might stay for a little bit longer. That's where I'm at.
Interesting. Glad we asked the question.
Thank you for asking the question, Robert.
All right, thanks, Steve. Coming up, we have a lot more on Squawk Box, including the backlash on a proposed billionaire tax in California. We set up a discussion with former Senators Heidi Heitkamp and Pat Toomey in the next hour. Squawk Box returns in just a moment.
Welcome back to Squawk Box. Equity futures set to rebound after a 4-day losing streak to end 2025. We see the S&P 500 up more than 0.5%. The Nasdaq looks quite strong, up more than 1%, 244 points ahead of the open. In the United Kingdom, the FTSE 100 passed 10,000 for the first time today. It then fell back about 0.3%. That index is up 21% in the last year.
When we come back, rising tensions around Taiwan, China's President Xi promising to take back the island nation as the military holds drills. We'll take a deeper look at the implications for U.S.-China relations right after this. Right now, though, as we head to a break, check out Taiwan's semiconductor and some of the other chip stocks. TSM, NVIDIA, AMD, Micron, and Broadcom all trading higher across the board this morning. Gains of anywhere from 1.5% to 2.9%. Squawk Box will be back in just a moment. In a New Year's Eve speech, China's President Xi has vowed to reunify China and Taiwan. Joining us right now for the latest is retired Air Force Brigadier General Robert Spalding. He is now the CEO of tech security firm Semper. Thank you, General, for being with us today. I mean, we hear about this, and I know it sets off some alarms for people. How do you read this latest move from Xi?
You know, I think they have the capabilities certainly to impose their will on Taiwan, but you have to wonder why they haven't done it. And I think there's a couple of reasons. One, I think they're concerned about the backlash and implications to trade, considering how their economy is going. And so I do think it does restrain them. You know, the other challenge, though, that we face is as they become further decoupled from the Western economy, then they may become more aggressive. So it's hard to say now what will happen with this, even because of the rhetoric.
If they do move to try and take back Taiwan, what is the U.S. response?
I don't think we'll have really the resources or the time to respond. I mean, it's just off their shore. They have immense military capability. I think the response is going to come in very much the same way that the Russia-Ukraine scenario has played out, and that is it'll be sanctions, it'll be a further cutoff of trade, and I think the United States will work to get the world behind cutting off China from economically from the West.
What does that mean from a perspective of the chokehold that China would then have on semiconductor chips, given all of the semiconductor production in Taiwan?
Well, I think that's why Biden administration and the Trump administration has continued to accelerate the movement of manufacturing back to the United States. I think one of the things that's been happening quietly behind the scenes is Steve Feinberg at the Pentagon has been working hard to reestablish an industrial base here in the United States and in friendly countries. And so I think that's what you're going to see, a continuation of rebuilding of our industrial base here in the United States.
But that is not something that's going to be accomplished in 2026.
No, it's not, but it's been going on for several years already. It's just accelerating now, and I think it's accelerating in ways that, quite frankly, the business community is oblivious to. I think if you were in the halls of the Pentagon, you'd see this very concerted effort to establish firmly in the United States the ability to produce the things that we need.
We've watched this play out already with rare earths and the relationship that the Trump administration is forging with Australia over that as an alternative source for some of those rare earths. But what would this mean immediately from the United States perspective if that were to happen?
Well, I think if we're going to have a crisis in Taiwan, it's certainly some of the things that we could see here in the United States is disruption to our digital infrastructure, to our power grid. We've already seen malware embedded throughout our country. I think we see further isolation and cutoff from things that are needed here. It could be rare earths, it could be other things that are part of the supply chain here. A lot of times the difficulty that we have is identifying Chinese components because they do get transshipped through other countries and then added into the supply chain, oftentimes unbeknownst to the actual supplier.
General, when you look back to April, there was this view, certainly April, even the beginning of the year, that the Trump administration and the tariffs would really be not so much a death blow to China, but certainly a big blow to their policy and economy. But if you look at how they have masterfully negotiated this past year with the rare earths and, increasing their manufacturing economy, it seems that, I wouldn't say it's only made them stronger, but they've certainly survived this. How do you see this year playing out for the China economy?
Well, I mean, we really didn't have a choice. Most of our things that we're manufacturing, the subcomponents, have their origin in China. So it's not like that we had the ability to not deal with them. I think the thing that people aren't aware of is how hard the Pentagon is pushing to change things. And I think that's going to pay off in the next couple of years, and you're going to see a wider rift between how products are sourced as from how they are now.
General, I'm still trying to figure out how likely you think this is of what you're describing is almost more of a hot war than a cold war. The way this could potentially play out, how likely you think that is, or if there is the potential for a reset between the United States and China?
I don't think there is, because the Chinese Communist Party is firmly focused on its goals. If you look at Taiwan itself, there are unknown numbers of American citizens on the island. So I think the way that this will play out is very much like Berlin, the separation between East and West Berlin happened. I think you're going to see a blockade of the island, and then I think there's going to be a negotiation for the United States to remove its citizens from the location. I don't think that China wants to, essentially create a conflict between the U.S. and China by killing a lot of American citizens who are on the island.
And your likelihood of this playing out in 2026?
It's hard to say. The Chinese clearly have the capability, so you have to wonder, why have they not moved so far? And as we can see with what happened in Ukraine and Russia, I believe that they're concerned about the impact to their economy. So as long as they continue to be concerned about the impact to their economy of a war, and don't forget, even though the trade that is coming into the United States from China has reduced, the numbers wise, it is probably still a good portion of that coming through via other countries. So if something happens, those avenues of trade are going to go away for them. So I think the Communist Party is worried about the job losses and economic decline that would come from an invasion. So right now, I'm really not expecting this in 2026.
General Spalding, thank you for your time this morning.
Thank you.
Squawk Box will be right back.
3 years of double-digit gains in the stock market have created trillions of dollars in new wealth. What will 2026 bring for the wealthy? Well, for the top 5 thieves for wealth this year, check out my latest Inside Wealth newsletter at cnbc.com/insidewealth. That's cnbc.com/insidewealth. I won't give you all 5, but I will say one of them is the great wealth transfer, and what we've seen there, which many people underestimated or didn't think was real. Now we're actually seeing those estimates increase, and it is the #1 issue for every wealth management firm and every wealth advisor right now.
By the way, congratulations on the newsletter. 2025 was the year of the newsletter. Thank the off. It's incredibly successful, and we love that it's here.
Thank you. Appreciate that. Thank you. All right, much of the new wealth powered by tech stocks and the AI boom. Our next guest has the names that could be poised to beat the NASDAQ in the next year. We have that and more when Squawk Box returns.
It is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Among our top stories this morning, the Trump administration delaying higher tariffs that had been set to go into effect on some home products. Those include upholstered furniture, kitchen cabinets, and vanities. President Trump signing a proclamation on the delay on New Year's Eve. It puts off an extra 30% tariff on furniture and 50% tariff on cabinets and vanities for another year. The U.S. lowering proposed new tariffs on several Italian pasta makers as well. That's according to Italy's foreign ministry. It said following a U.S. review of anti-dumping activities, tariffs for pasta makers will range from about 2 to 14%. Those are set to go into effect in March. And shares of electronics giant Samsung jumping in Korea today. In a New Year address, the company's CEO, the co-CEO, said that customers have praised its next-generation high-bandwidth memory chips. He quoted customers as saying, "Samsung is back," and that stock is up by 7.1%. If you take a look at the futures this morning, they're higher as well. Dow futures up by close to 200 points. S&P futures up by about 40 points, and the NASDAQ up by just over 250 points this morning. All three of the major averages ending 2025 with some big gains. The Dow was up by 13% for the year, the S&P by 16.4%, and the NASDAQ is up by more than 20%. Also, the small cap Russell 2000 was up by 11.3%. If you're watching the treasuries this morning, you'll see that the 10-year, the yield there flat at 4.15. The 2-year also flat. It's at 3.46. And right now we want to get over to Leslie Picker with a look at this morning's pre-market movers. Hi, Leslie.
Hey, good morning, Becky. Let's start with shares of Tesla higher by more than 1.5% ahead of this morning's expected annual delivery numbers. 2025 deliveries are expected to drop by 8.3%, a second straight yearly decline, and it comes following the loss of U.S. tax credits and rising global competition in the EV space. Shares still up about 20% over the past year. One of the companies that is challenging Tesla, at least overseas, is BYD. Those shares jumping about 3.5% in Hong Kong trading after its 2025 sales of fully battery electric vehicles jumped 28% to about 2.25 million, and that's well above the expected 1.64 million deliveries for Tesla. But BYD shares have struggled over the past year, down more than 36%, as it faces growing domestic competition in the budget space. And we'll finish with shares of Apple, higher by about 0.5% this morning as Raymond James resumes coverage of the company with a market perform rating. Analysts there say they don't expect near-term upside as Apple's current valuation reflects strong fundamentals and improving product cycles. Raymond James also saying gains from technology upgrade cycles will become more difficult to attain. For more on that and other top analyst calls of the day, head over to cnbc.com/pro, where subscribers can get more access to detail and analysis of the day's big calls and stories. Becky.
Thank you, Leslie. We'll see you later.
All right, it's the first trading day of the year. Let's talk tech stocks and the Mag 7 with Ray Wang, Constellation Research Chairman and AI Forum co-founder. Ray, great to see you. Happy New Year.
Happy New Year.
So when you look at the outlooks for 2026 by the Wall Street banks, they all really come down to what they think will happen with the AI trade this year. So what's your outlook for, I know when we say AI trade, we're talking about a lot of different components of the AI trade, but what parts of that trade do you think will strengthen, and will you think that some of it could weaken this year?
Well, definitely we're going to see strong demand again for chips, and we're also going to see a bifurcation in terms of apps and software companies that are able to use AI and create what we call AI exponentials. These are companies that can grow 10x, 100x, 1,000x with very minimal number of employees. We're also going to see a category of software where we're going to see applications, SaaS applications, transferring themselves. And so one of the ways we looked at the market, we said, who beat the NASDAQ in 2025 and who's going to beat the NASDAQ in 2026? And we looked at some of the laggards that were not beating the NASDAQ. We had C3, Now, Apple, Meta, Oracle in that mix. And we went back to see, would they be able to survive and make it? And then we also looked at 5 other stocks that had outperformed. Could they continue the momentum? NVIDIA, Google, AMD, Intel, Palantir were 5 that we chose to be able to make that move.
So you're keeping NVIDIA as one of the winners of 2026. What makes you so confident that that momentum and certainly that excitement among investors will continue?
Well, the acquisition of Grok confirmed something that we all realized, was that training is about to come over the hill and inference is about to pick up. And that's where you're going to need TPUs. And that licensing deal was brilliant on all levels, from a financial engineering perspective, from a risk-sharing perspective, and more importantly, allowing NVIDIA to get into the TPU market, which is the chips that allow you to do inference.
And you mentioned learning and inference. There's this view that actual gains in the LLMs has not so much come to a halt, but certainly slowed down. Is that a risk that we're seeing, if not a sort of stalling in progress, or certainly not living up to that expectation, perhaps more of a commoditization with the LLMs, and what stocks or other companies will that feed into?
Well, you're absolutely right, and this is why it's important to look at a full stack vertically integrated player like Google, where they're able to go from chip at TPU level to agent level. And what Google has is the ability, if you looked at Gemini 3, it continuously gets better because it's got all the data sources. It's able to actually take the full one Google, put it to use, and start applying that in almost every direction, which means they've got a huge advantage because they've got the data.
And you mentioned these companies that can, use AI to start up with 1 or 2 employees and reach millions of dollars in revenues. So is that something at this point that's investable, either on the private market side or eventually in the public market side? And what kinds of companies or what areas of the market will those be successful?
They're all across the board, and that's what makes that exciting. There's a site called tinyteams.xyz, and what you can see there are companies with 10 employees doing 200 million ARR, or 20 employees doing 200 million ARR. And these are companies that are about to hit IPO next year. So you see companies like Midjourney that are there, Lovable. These are the companies that are at Cursor. These are companies that are changing the environment with few employees, massive impact, and that's on the software side.
Yeah, I'm looking at that site now, Tiny Teams. I mean, you look at this 10 million ARR, 40 million ARR. So this idea that AI can actually help a single founder create a company with instant revenues, I mean, this shows it's actually happening already.
Robert, it's happening right now, and what we predict that in the next 3 years, 1,000-person company could take out the likes of an Accenture. 100-person company could take out the likes of our big SaaS winners that are out there, because the scale is incredible right now.
Ray, I know you mentioned that you think Oracle is misunderstood, and the idea that there's been this big rethink of their huge CapEx investment strategy to become a host for a lot of these sort of AI platforms maybe is not going to pan out. You think that this is actually a fruitful pursuit for Oracle?
In the long run, yes. If you've watched all the moves Larry Ellison has made over the last 50 years, it's been incredible, right? Sometimes he waits it out, says it's not worth the investment cycle. Sometimes he jumps in. And for this one, they really believe there's a shot for them to be one of the NeoCloud winners. And if you look at the relationships at the administration level, you've never seen that type of a relationship. And so those two factors alone, and the fact that you're seeing TikTok go to Oracle, you're going to see other organizations go to Oracle because they have a cost advantage that the current hyperscalers do not have. And in some of our clients, when we send them to Oracle, they're paying 1/5 of what they were paying Amazon, Microsoft, or Google.
And Ray, another one of your picks is Meta, which I know there's been also a lot of debate around just how much they are spending. If you look at percentage of revenues, they're up to something like 65 or 70% of revenues now for basically building out AI infrastructure. What gives you confidence that they know what they're doing, for lack of a better word?
Well, if you look at the way they divided the work, they put them into useful units, right? Where AI is going to go near term, where AI is going to go midterm, and where AI is going to play a role in AGI for long term. And if you look at internally in their operations, they're able to drive down costs like we've never seen before. So just like those tiny teams, what Meta is able to do, after looking at what Elon did at Twitter, they're able to drive down the cost of engineering, drive down the number of engineers they need. They're doing it also on the G&A side, and they're also doing it on the marketing side. So they're going to be one of the most efficient of the Mag 7 players going into 2026.
Yeah, certainly people hoping this isn't another Meta situation where they sunk all those billions of dollars into Meta without a lot of results. Ray, thanks so much for joining us. Great to see you, and Happy New Year.
Happy New Year. Thanks, Robert.
Coming up, we'll dig into some of the big issues with California's wealth tax proposal. Former Senators Heidi Heitkamp and Pat Toomey will weigh in after the break. But first, check out the stocks leading the S&P 500 higher in the pre-market this morning. Applied Materials, Lam Research, those semi-equipment stocks are both up more than 3%, as well as Qnity Electronics and Micron. So it is the AI hardware trade. Squawk Box will be right back.
Some troubles in the luxury world. Department store chain Saks is preparing to file for bankruptcy. That's according to a Wall Street Journal report that says the company has been struggling since taking on debt to buy Neiman Marcus in 2024. It failed to make an interest payments of more than $100 million to bondholders on Tuesday. The report says Saks is in talks with creditors about financing for the bankruptcy process. Now, along with the problems in department stores, this was really about the debt. You know, they wanted to create this luxury juggernaut by buying Neiman Marcus. They also have a 49% stake in Bergdorf. So the big question is what happens to that stake in Bergdorf? They were asking about $1 billion for that. So that's a big open question. But, you know, when you look at what's happened, especially at the high end where luxury companies, they want their own mono stores. They want their consumers to have their own curated experience where these luxury stores, especially the ones owned by LVMH, have become these sort of temples to a brand. They don't want to just be part of a department store anymore. Combined with the fact that Saks wasn't paying its vendors, and the vendors didn't give them supply or inventory this season, so they ended up losing out to the other stores.
Do they own the building?
I believe they did.
Yeah, because there was always the story where it's like that's as if that's the financial cushion, but unless you're going to sell it and build something on top of it, it's not really worth it.
So I mean, that was the argument for Sears and a lot of
Exactly.
well, the real estate's great, and it just wasn't enough. But the debt for this company has been trading in trouble for over a year, so we kind of saw this coming.
Yeah, usually it's not too much of a shock once it happens. All right, let's take a look at the futures. We actually have the S&P 500 still up. Well, let's call it a little more than 0.5%. NASDAQ is up 250 points. That is just about 1% off of a week close on Wednesday. Joining us now on the markets as we set to kick off trading for 2026 is Andrew Sliman, Morgan Stanley Investment Management Senior Portfolio Manager. Andrew, good to see you. Happy New Year. Is there a new story in a new year in terms of what we should emphasize as investors, or kind of continuation of sort of the earnings supported bull market?
Well, that's exactly right, Mike. Happy New Year. You know, you guys have been quoting Warren Buffett a lot this morning, and there's an old, or referring to him, there was an old saying by him, which is short-term stocks are a popularity machine, long-term they're an earnings machine. And, you know, in the fourth quarter, a lot of the tech stocks, the Mag 7 really underperformed, and yet there's no sign of earnings, you know, slowdown, you know, problems with earnings. So the multiple on these very large tech stocks actually start this year at a lower valuation than where they started last year, and but the fundamentals doesn't validate that. So I think there's an opportunity to take advantage of kind of a weaker performance in the fourth quarter for many of these big tech stocks.
And so in other words, do you think that the rotation we've seen towards cyclicals, investors positioning for a little bit more of a kind of stronger nominal GDP in the first part of this year, has that been misguided, or are we talking about everything working?
Well, I don't think it's misguided, but it's by the playbook. The playbook says that the Fed, you know, is going to cut, you buy cyclicals. But the question is now, some of these industrial stocks, in my opinion, are up a lot. So they've already priced in, you know, Fed cuts, and their earnings now need to come through to support the valuation. And I think that's the reverse of the large tech stocks, which they had their earnings and the stocks, you know, didn't deliver. So I wouldn't be surprised if there is a rotation back to more of these tech stocks early in 2026.
Yeah, outside of tech, the valuation ceilings seem to be a little more firm, right? It's hard to have this kind of open-ended idea. Yeah.
I do think financials are an exception here, Mike, which is, you know, as much as these stocks did great, they still traded, you know, 30% PE discounts to the market. And why is that? Oh, it's because of 08. You know, we have muscle memory. Remember the great financial crisis. But, you know, the regulation is going the opposite direction. So I think you have a combination there of multiple expansion plus earnings growth will continue to drive these stocks in 2026.
I mean, that's fair, but I mean, banks traded at a discount to the S&P for most of history, even before 08, right? I mean, I think the idea is that in good times, their earnings are kind of like, you know, the high estimate of eventually what they're going to get, because you don't know what the losses ultimately could be.
100%, absolutely. But keep in mind, dereg regulation is causing capital to be released, and as that capital is released, it's going to be deployed, and companies are going to come in through with earnings. So I think you got good earnings, and I don't see the risk of PE. PE's going down the way I do with the industrials, where they've had a very, very good run.
One of the big picture questions that seems going into this year is, will investors collectively have enough of an appetite for all the capital that might have to be raised continually for AI, both big IPOs that are on the way, smaller equity offerings, all the debt? Is that a concern on the supply-demand side? Because we're going to also actually have probably lower buybacks because of all the investment in AI.
Yeah, I mean, that's a really tough question to answer. Will the syndicate calendar be so huge that there will be no room for anyone else? I wouldn't base my investment decisions on that. Although on any given day with these big underwritings, I think that to come could suck the cash out of the market. I think that's possible, but I don't see that as a reason to be negative on 2026.
Yeah. Obviously, they could just sort of steal a little bit of the excitement away from the existing AI players and all the rest. We'll have to see how it plays out. Andrew, good to see you. Thanks.
Thank you.
Still to come this morning, a group of billionaires up in arms over a wealth tax proposal in California. After a break, we will talk about how the Golden State could implement a proposal like that and whether it's really workable. Former Senators Heidi Heitkamp and Pat Toomey will join us for that conversation. Stay tuned. You're watching Squawk Box, and this is CNBC. Mamdani vowing an agenda aimed at making New York more affordable for working people. In a speech following his swearing in as New York City's mayor, Mamdani promoted some of the central themes of his campaign, including universal child care, free buses, and more affordable rent.
We will answer to all New Yorkers, not to any billionaire or oligarch who thinks they can buy our democracy. We will govern without shame and insecurity, making no apology for what we believe. I was elected as a democratic socialist, and I will govern as a democratic socialist.
Mamdani's inauguration also featured speeches by fellow Democratic Socialist Senator Bernie Sanders of Vermont and New York Representative Alexandria Ocasio-Cortez.
And the big chant at that rally was tax the rich. That was the big chant. And speaking of that, we're going to go to a wealth proposal in California that has angered some of the state's richest and some in the startup community. One of the big questions around the proposed billionaire tax is valuation. So most of the 200 billionaires in California made their wealth in tech, usually a stake in a private or a public company. Tech companies, as we all know and have seen, are highly volatile. So let's say your stake in a tech company was worth $1 billion as of January 1st next year. You would owe $50 million tax. If that valuation falls, let's say, by half in a few months, you would still owe that $50 million tax. In other words, tough. The bill makes no mention of refunds or credits. Now, the issue is especially important given the volatility of tech stocks and valuation. Last year, the AI boom created 50 new billionaires, many of them in California. If AI valuations could decline, some of those AI billionaires will no longer be billionaires, but they still owe a tax on wealth that they no longer have. Now, the bill does make provisions for private companies or illiquid assets that allows them to pay over 5 years, but the amount that is owed actually doesn't change. And there are penalties of up to 20 to 40% of the amount owed for those who fail to pay. So a lot of people, I've talked to a lot of tax attorneys that are helping a lot of Californians either make plans or move out of California. The question will be, because this is retroactive to yesterday, you have to prove you're no longer a tax resident as of January 1st, 2026. Did they get enough time? Will it sort of withstand the legal challenges that it will inevitably face? But there are a lot of billionaires in California and soon to be billionaires that are trying to leave, planning to leave, at least finding out what it takes to leave California.
Well, there were a flurry of announcements that went out. Peter Thiel making a point of saying that his new office in Miami is set up. David Sachs said that he's got a new office that just opened in Austin, Texas. And I think Peter Thiel's signed that December signed the lease, right? Their extension on that. And what was Larry Page's?
Larry Page, same thing. He's got a family office in Miami. His family office head is now spending a lot of time in Miami. Now, the question of residency isn't just did you leave or were you out of the state for more than 180 days. It has to do with your bank accounts, where your kids are in school, where your pet goes to the vet, where your dentist is. So unless you've shown a pattern of all those things being in Texas or Florida for the past year, and the California auditors are very tough, even tougher than New York, when it comes to forcing you to prove that you have actually left. So that's going to be a question, along with, can you actually will the tax itself survive legal claims, but can you make a tax retroactive? That's going to be another big question.
All right, joining us right now for more on the wealth tax debate is Heidi Heitkamp. She is former Democratic Senator of North Dakota, also a CNBC contributor, and Pat Toomey, who is former Republican Senator of Pennsylvania. And welcome to both of you. Senator Toomey, why don't we give you first dibs at this, because I want to get into Heidi's more nuanced view of some of these things. But what's your takeaway on whether a tax like this is A, legal, and B, effective?
Well, so the bottom line is I think this is a remarkably bad idea from a state that is quite generous in providing us with bad ideas. First and foremost is the principle here. We are not anywhere in this country, to my knowledge, have we established the principle that the government is going to confiscate part of your assets to give them away to people who to whom they don't belong. This is something new and different. We definitely take income. We take a disproportionately high share of the income from upper income people, certainly relative to their share of earnings. And that's because we have an extremely progressive tax system, and it's one of the most progressive in the entire OECD. But this would be a whole new idea that we're going to just confiscate part of your assets after, in most cases, people have paid income taxes on whatever it is that allowed them to accumulate these savings. A couple of other points I would make about this particular proposal. First of all, it's a lot of false advertising when they suggest this is going to be a one-time hit. That's the way it's drafted, but it also stipulates in the proposal that any revenue from this new tax has to go to expanding healthcare, and that means Medicaid as a practical matter. As we've seen, including very recently with respect to Obamacare, anytime you expand an entitlement, the left intends that expansion is permanent. And when the funding runs out and the spending continues, they're coming back for more. And when the exodus of billionaires, it's not going to be just billionaires. People are going to realize there's no limiting principle here. If you can confiscate the assets of a billionaire, why not someone who's worth 500 million or 100 million? And so the exodus will be profound. And these are the folks that pay the lion's share of the revenue to California. This is a disaster in the making if they proceed with this.
Senator Heitkamp, I'd actually ask you to defend the principle here and take the other side of that argument, but I don't think you want to.
Well, I've long said you can't really be successful in taxing unrealized capital gains. I will disagree with Pat on one thing. He says this is a new idea. This is not a new idea. This is called a personal property tax. And this personal property tax has been tried and failed in many, many states. It's been tried in a lot of other places across the world, and they've had to put the car in reverse and say it didn't work. And so let's also recognize that this is an initiative. They're going to need to get a lot of signatures. The governor of California has already suggested that he doesn't agree with this. I think some of this is an overreaction, but of course, you know, when you're looking at an effective date of this retroactively, I think that causes a lot of concern when people look at it. But, you know, the bottom line is that this is intrusive. This is not consistent with what we would call a taxable event. And Becky, as you know, also on my resume is I used to be a tax commissioner. I used to do this for a living, and these are very, very hard to administer. And I think the left has gotten this idea that we don't really need to dig into the tax code to find those loopholes. What we really should do is just do another whole new tax. And I think there's a whole lot of ways to address income inequality, a whole lot of ways to address this the perception, if not reality, that rich people are not being taxed, than to simply embrace a wealth tax. I don't think it will work. I don't think it's going to pass. And I agree with Pat on one thing, that people, when they go to the polls, they say a billionaire today, it's me tomorrow.
Right. So because I don't think either of you is going to defend this in any way, shape, or form, or say you're in favor of it, maybe we should turn this into a little bit of a broader conversation about the inequity that's out there right now that has been growing since Occupy Wall Street all the way back in the financial crisis period, what we see in terms of populism at this point, and how you address that and how you get at it. It's certainly been exacerbated by the massive inflation that came around post-COVID or during COVID, and then beyond that, what we've seen. That still impacts people, and it's hitting them in lots of different ways. Pat, how would you get at trying to handle that and deal with it and maybe get at some of that inequality?
Yeah, Becky, I think a couple of things. One, I think we should keep in mind monetary policy can drive a lot of this, and excessively easy money help to drive up financial asset values in ways that are very beneficial for people who have financial assets. Lower income people tend not to have financial assets, so that's kind of unfair. But the most important thing, in my view, is two things. One, strong economic growth. Strong economic growth does lift almost all boats. We have seen that when the economy is growing strong, including right after the 2017 tax reform, for instance, real wages were rising, and they were rising fastest for lower income workers. That is the definition of narrowing the income gap. And then the last thing that's really, really important is that we have fluidity and mobility within income categories. So people who are born into the lowest category of, say, the lowest quadrant of earners, it's really important that we be in a society where that person has a realistic chance to move up. That has historically been the case. It's not as robust as I'd like to see it, but that's what I would focus on: economic growth and income mobility.
And Heidi, I just want to go back to Becky's point and follow up on that, because I think one of the challenges for voters here, when they look at someone like Larry Ellison, Sergey Brin, Larry Page, those are 3 of the top 5 wealthiest Americans, and they all live in California, is that basically all of them can live not tax-free income, but certainly use their shares. Larry Ellison owns 42% of Oracle, but he hasn't sold shares and doesn't need to because he can just borrow off those shares and use that income. How do you get at all of that wealth that for these folks will, some would say, never get taxed, especially if it goes to charity or is passed down through a trust to their children? Is there some way to tax that, or at least make sure that some of that income they get from borrowing against their shares faces some kind of maybe a capital gains tax? Or is there another way around that?
I think the first thing you need to address is stepped up basis. And so if my kids inherit my stock, they inherit Apple at a much lower basis than the fair market value. And that is a wealth multiplier, and it has created huge consequences, whether it is donations to charity or whether it is transfer at wealth. And so I think there's a lot of things you could talk about.
That has to be national policy.
Right. And but if you look at California has the ability to basically tax at death, and they can determine what the basis of that tax is. And so when you look at borrowing against those assets, that has been kind of the trick to avoid any kind of capital gains, and that needs to be addressed in terms of a tax loophole along with carried interest and stepped up basis. And so there's a lot of things that you could do if you really understood how the tax code worked. Instead of knee-jerking, we're going to impose a wealth tax and that's going to solve the problem. It won't solve the problem long term. And so do we need to have an absolute discussion? And, Pat, one of the things I would say is, yes, for the first Trump term, you saw the lower quartile, the lower third, wages raised. That's not been true into this, this tranche of the Trump administration. In fact, the lower quadrant is actually seeing less growth than the middle class or the upper class. And so there is the Republicans have to begin to address the affordability, the growing sense of insecurity of people who work in this country who feel like they're not getting a fair shake. And you see it in New York, and you'll see it probably in California during this vote. But the left has to be more sophisticated in how they address these issues. And you can't just knee-jerk, the latest trend. It won't work.
But now Heidi mentions a number of ways to raise more taxes from wealthy people without resorting to this terrible California proposal. I would just point out, and I'm in favor of closing loopholes that broaden the base on which we apply lower rates. I think that's the right principle for a tax code. But, the top 1% of American earners earn roughly 20% of all the income and pay roughly 40% of all the income taxes. So the fact is, upper income people are already paying a disproportionately high share of the taxes. And I never hear from my Democratic friends who want to get more still, how high does that have to go in order to be fair? Does they have to pay 3 times their share of income, 4 times their share of income? There's a lot of taxes being paid by upper income people.
Yeah, and Pat, I never hear from you a combination of payroll taxes along with these taxes. You lump in entitlements. Well, but you're talking about entitlement and entitlement reform. Yeah, well,
that is the justification for considering that an earned benefit, because it is supposed to be funded primarily by payroll taxes. The rest of government is funded primarily by income taxes.
Very smart conversation from two very smart people who understand the tax code so well. We appreciate it. It's good to see both of you, and we'll have you back to talk about some real issues that might actually help. All of these things that you two are bringing up are perfect. Heidi, Pat, thank you both.
All right, Happy New Year.
You too.
All right, coming up, Congress gets back to work next week with a potential government shutdown looming at the end of this month. We're going to go through it again. Hopefully now we'll tell you what to expect next. Squawk Box. We'll be right back. Congress returns to Washington next week, facing a deadline at the end of the month to approve a new spending bill or risk another government shutdown. Joining us now, Sarah Bianchi, Evercore Public Policy Chief Strategist. Sarah, great to see you. Thank you for joining us. So, are you fairly confident we're not going to have to go through another wrangle over a government shutdown, or is that still a risk?
It's certainly a risk, but I do think neither party really wants to relive this. I think the Democrats feel that they got what they needed out of the first shutdown. They have focused the country on healthcare costs and other affordability issues, and they don't want to risk getting blamed. They have a process in place to have a vote on the healthcare. And the Republicans, surely in an election year with their president having a bit more challenges than he had earlier in 25, certainly aren't looking for bumps. So it's always a risk because they do need 60 votes in the Senate, but right now it's not our base case prediction.
Yeah, you mentioned affordability there, and that was a big issue in the New York mayoral race. We just saw Mamdani inaugurated yesterday, taking office, using affordability as the big theme. What do you think the affordability issue, how will that play into White House policy? Will President Trump try to do anything? Will Congress do anything? Can they do anything to address affordability?
Well, affordability is certainly a hard thing to address. It's really hard to get prices to come down, and that's really what a lot of people are hoping for. I think the president will try things in the space of healthcare, his own version, drug pricing, maybe some housing. We've already seen some slight relief on tariffs in places that are salient to households. I think the big question for the markets is whether he's going to pivot to an additional stimulus and whether Congress really goes along with that. That would be the most impactful for consumers. It would also, of course, risk inflation and other things. So that's really the big one that we're watching. But, President Biden went through frustrations on this topic as well. We'll have to see if this president
you said additional stimulus. What could they possibly do? What are some ideas that you've heard there? I mean, are they just talking about further tax cuts or actual money in people's pockets? I know there's been this idea floating around of a tariff check of $2,000. That got quickly shut down. What are some ideas out there?
Well, they do have some additional stimulus coming in from the big, beautiful bill, and that should be helpful into the spring. But I do think the question of whether he tries to raise this tariff rebate, whether that gets any traction, any kind of real check to people, that's the thing that, would make the most difference in the economy and for the markets. For consumers, if he can just make it seem like he's on their side fighting for them in healthcare and food and other issues, maybe that's enough, but it's really not going to move the needle in terms of overall cost.
Sarah, I wonder if you think that the affordability debate and the impulse among Congress and the president to seem responsive to it is going to run up against the AI story when you talk about utility bills, the data center use of resources. It's obviously become very much in the air, and I wonder if at a national level that's going to lead to any initiatives.
Oh, I think that's a great point. It definitely showed up in the November 2025 election. So if nothing else, the governors of New Jersey and Virginia have to address it. But yet we are starting to see it on the national level. And we're starting to see some policies, again, that are pretty dramatic. Now, right now they're coming from the likes of Bernie Sanders and others saying we should have a moratorium on data centers. I'm not saying that's going to be the mainstream policy, but Steve Bannon and others have made the point that we ignore that even the MAGA movement, Trump ignores some of these AI concerns at his peril. So I do think it's something we expect to come to the fore more this year in the policy debate and certainly as we get into the presidential primaries.
Yes, sir. It's not just Bernie Sanders, but also Ron DeSantis, Republican governor of Florida, now calling for some kind of moratorium, at least more authority over how AI companies build distribution centers and how that affects electricity prices. So certainly something to watch on a state and national level. Sarah, thanks so much for joining us and Happy New Year.
Happy New Year. Thanks a lot.
All right, coming up, the KBW Bank Index slumping for the last 2 weeks, but posting strong gains for the year. The outlook for bank stocks in the new year is what we will discuss next. In the meantime, though, Greg Abel taking the reins of Berkshire Hathaway as CEO from Warren Buffett. He follows an unbelievable run that will probably never be repeated. Buffett took over as CEO of Berkshire Hathaway 60 years ago, and that in itself is a feat. That's longer than our chart data goes back. We can't call up a chart to say, here's how he's performed over that period of time, but he is the greatest investor in history. Among the many remarkable statistics, the overall return on Berkshire stock since Buffett took over the control of the company, Some people say 5.5 million%. I've seen 6.1 million% in terms of the growth of how this company has performed. Another statistic is even if the stock were to drop by 99.2%, he still would have outperformed the S&P 500 over that period of time. What we can give you is a look at the 20-year Berkshire B shares. Just those alone up by 753% over time, and Buffett has often pointed out how much harder it is to grow the larger you get. The biggest gains came in the early years. We're going to be bringing you a new primetime show right here on CNBC on Tuesday, January 13th at 7 p.m. Eastern Time. It includes a series of never-before-seen interviews on Warren's philosophies on business, philanthropy, and life, how he's changed them over time, including 2 extended interviews that we sat down with him just this year. It's something you don't want to miss. Squawk Box will be right back. Well, the beginning of January brings us closer to bank earnings, and joining us right now with his outlook for financials is Kenneth Leon. He is CFRA's Director of Equity Research. And what do you think in terms of what to anticipate for the financials in 2026?
Well, it's great to be with you, Becky. And banks are critical, mostly because if we're going to get breadth in the U.S. equity market, financials are critical. And when we look at the weighting, what drives the financial sector, there's roughly 12 stocks that are about 65% of the total sector. The 6 largest banks that I cover are in that list. And we think that the outlook is going to be very positive. One of the themes that we have at CFRA is about earning your multiple or valuation. And we think that there's good opportunity, as we'll see, first with the fourth quarter results in early January report, but for 2026 of upward earnings revisions. And I think that's going to be most critical. You can check the box. We have a rate environment from the Fed that's either rate cut or rate pause. We're seeing a steepening yield curve that's improving net interest margins. Loan demand, the U.S. economy still is very good, 2 to 3% growth. That means that we're going to see healthy growth in the traditional parts of the bank. But our call at CFRA was really the delta for earnings has been the capital markets. And we saw in the second half of 25, but really leaning into 2026, opportunities for very good investment fee income from M&A, also from equity underwriting. And by the way, IPOs, even in 25 with that second half surge, was $146 billion, up 30%. So I see really good opportunity for not only bank earning performance, but also for share price performance for this group, which is critical for financials and critical for the stock market.
You know, Ken, certainly that anticipated active capital market story is very much animating the stocks, right? So I'm looking at a Goldman Sachs, amazing performer. Obviously, a lot of the fundamentals are kind of in a sweet spot for them, but it's now 2.4% book value. Hasn't traded up there since before the financial crisis. Are we kind of paying up front for a lot of these good things we're expecting?
Yeah, you know, bank analysts are kind of a nervous conservative group, and when you look at things like price to net tangible book value, Mike, they're expensive. I kind of lean into forward price to earnings and just look at the opportunity for surprises on estimate revision, which is critical. That's worked so far. I think, again, that when you look into next year, we're just seeing, particularly in investment banking, and all the CEOs were at financial conferences back in November are really painting a pretty good picture for next year. Additionally, here's the key, Mike, is that from the regulatory side, and most investors don't pay as much attention to what's happening with Fed supervision and regulation. We will see for the first time, maybe in 15 years, some easing that allows the banks on capital release, not buildup, which means possibly buyback and also higher dividends. We haven't had that for a long time. The Trump administration has been very favorable to easing on bank regulation and pushing back other countries on something called Basel III Endgame rules, which is just onerous to the U.S. economy.
Gotcha. Ken, appreciate it. You're going to have to run right there. Squawk will be right back. Happening on Squawk Box this morning, the FTSE 100 in the United Kingdom passed the 10,000 mark for the first time. Raymond James says Apple has limited near-term upside and positives are already priced into Apple's $273 stock price. And a vote of confidence for the data centers. Barclays upgrading Vertiv Holdings with a new $200 price target. Stock now at $169.
Speed reader, good job. All right, guys, thank you for joining us today. I want to thank both Mike and Robert for being here. Thank all of you for being here with us, too, and I hope your New Year's resolutions make it through this weekend. We'll see you back here next week. Right now, it's time for Squawk on the Street.
Good morning and Happy New Year. Welcome to Squawk on the Street in a new year. It's 2026. I gotta get used to that. I'm David Faber, Sarah Eisen, of course, next to me here, live from Post 9 at the New York Stock Exchange. Jim and Carl finishing their week off. We're all back together on Monday. Let's give you a look at futures before we get started with the first trading session of the year. We are looking for a higher open after, of course, strong performance in our markets and many others around the globe in 2025. Our roadmap begins with tech stocks. Of course, will they continue that rally from last year? NVIDIA, Apple, Alphabet, Microsoft, all are trading higher in the pre-market.
Plus, the EV trade. Tesla due out with Q4 delivery numbers, facing increased pressure from the Chinese brands, with BYD on track to become the world's top EV seller. And President Trump delaying some expected tariff increases for things like upholstered furniture, kitchen cabinets, vanities, even pasta. We'll dig into what it means for the macroeconomic picture and for the stocks impacted.
All right, let's start with the markets, of course, as we begin 2026. Major indices are coming off what was the sixth positive year of the last 7. The S&P ended the year, there are the final numbers, 16.39% was the gain there. The NASDAQ, of course, a bit higher, 20.36%. For the gains. And as we talked about on Wednesday, very strong here and very strong in many other markets around the world. You just heard Mike talking about the FTSE hitting 10,000 for the
It's been a
first
global
time.
phenomenon.
As we begin trading today, what's caught your eye, Sarah?
The warmth of collectivism. No, we have a new mayor in New York City. Also, valuation, I think, is we're going to try communism here because it's worked so well.
You went right into it, huh?
Yeah, that's what's on you asked what's on my mind.
That's true, I did.
It's on my
I
mind.
did. I don't know that's going to be impacting the stock market, at least at this point.
Let's see.
Yeah.
Look, I think valuations are worth talking about. There was a good note from Tony Pasquarello, a trading note at Goldman Sachs, and he mentioned, valuations. This is a good stat for you. So last year, S&P began the year on a 21.5 forward multiple, PE. We are ending the year on a 22 times forward multiple. Last year, at the beginning of the year, everyone was saying no matter what metric you look at, the KINK metric, PE, all these ways of valuing the market, the starting point was high. And yet, we surpassed that. So it's just to say that that's not necessarily a barrier, but we do start 2026 with a high valuation. We also started, though, with companies like the Magnificent Seven, plus put in Broadcom, and expected to show 24% earnings growth this year. So, a bigger percentage of the economy and the market in high growing tech sectors. So is that justified or not? I think that's going to be one of the biggest questions. No doubt the bar is higher. Right, we've seen NVIDIA pretty much top out in October and do nothing since
That is
then.
true,
So,
yes.
so
In fact, it's given up some market cap since then. Yes, that's right. And of course, as our guests will continually point out as well, the PE for many of the names, the biggest mega cap names, are not particularly high, certainly given their growth rates. Speaking of Tesla, one of them certainly, and it is out with its latest delivery numbers. Phil LeBeau is here and he has them for us. Phil.
David, they are shy of expectations for the fourth quarter for Tesla in terms of total deliveries worldwide. The number 418,227 vehicles delivered by Tesla in the fourth quarter. Remember, the FactSet consensus was 426,000, and on Wednesday, Tesla took the unusual move of putting out an estimate based on analysts it had surveyed. That was at 422,850, so the total is 418,227. The total number for all of 2025, 1.63 million vehicles. That's a decline of about 8.5% compared to where the company was in terms of deliveries in 2024. energy deployments, a record of 14.2 gigawatt hours, and always what people are interested in is when will they hear from Elon Musk? It will be on January 28th. After the bell, that's when the company will be reporting its Q4 results, and that's likely when we will hear from Elon Musk. So again, Tesla deliveries coming in shy of expectations, guys, at 418,227.
To be impacting the stock price. I mean, Phil, weren't we once thinking, weren't there once estimates that could get them up close to 2 million deliveries?
3 million.
Yes. Yeah, that was the expectation. I would say probably in the middle of last year, right before the presidential election. Then once you had the election, and it was pretty clear that the Trump administration was going to take away EV incentives, which they did at the end of the third quarter. That's when everybody started dialing back their expectations. And then you saw increased competition in China, the pricing war that's going on when it comes to EVs in China, and huge increase in competition in Europe as well. That's really when people started dialing back their expectations. But there's no doubt, the 1.63 million, this sets up the question, David and Sarah, of whether or not for 2026, will Tesla deliveries be in that range or will they grow? Because they came out with what many called a lower priced vehicle, which was really sort of a stripped down Model 3. And there's no indication here in the United States that that lower priced model has spurred sales. Now, we should also point out, they don't break down in this report sales by regions, but when you talk with analysts who track very closely Tesla's sales around the world, the rest of the world, smaller markets that people aren't really paying attention to, whether it's Thailand, whether it's Israel, South Africa, whatever it might be, the sales in that area, that rest of the world bucket is growing quickly. And I suspect when we finally get all the numbers crunched, you're going to see deliveries last year for that region well up over 30-40%, probably in the fourth quarter up more than 50%.
Yeah, Bloomberg pointed out this time 2 years ago, analysts were predicting Tesla would deliver more than 3 million units. So clearly shy. And then we ask the question every time, Phil, is how much it matters these days for Tesla stock and for Tesla shareholders when the story has moved beyond the deliveries. I don't think it matters at all, Sarah.
Yeah. Yeah, they have moved beyond the deliveries. As you guys have talked about repeatedly, and when you've talked with analysts, everybody is focused on robotaxi, autonomous, as well as robotics and humanoid robots. And when you listen to Elon Musk, while he talks about the great potential that is in that area in the future, we really haven't seen metrics set up in terms of, hey, by the end of 26 we expect this, by the end of 2030, we've seen broad estimates in terms of numbers, the potential of the market, and what Tesla believes, millions of robo-taxis. But we haven't seen anything definitive in terms of near-term guidance. That's really what's driving the stock right now.
Yeah, I mean, he said, and I think continued to, Phil, last time we talked was in May, that we're going to be producing 1 million humanoid robots a year by 2030, I think was the prediction. That said, it is helpful to have increasing, it is helpful though to have increasing levels of free cash flow to help fund those efforts, isn't it? And that would not appear to be the case, certainly if your vehicle sales are flat to declining.
Correct. Exactly, and that's the importance of deliveries, David. You've talked about it, and we've heard a couple of analysts bring this up. There is that component of people who are saying, you do need to have these deliveries for free cash flow and the importance there, and then you have a contingent of analysts and bulls on the Tesla stock who are saying, it's all about the future with autonomous. It's all about robotics. It's coming, it's going to be a huge market, and Elon Musk will lead us there. But you don't see anything in terms of near-term metrics that are being established.
Yeah, I think the stock up 2% on disappointing deliveries tells the story. Phil, thank you. Phil LeBeau. The other big news that happened over New Year's was that President Trump delayed more tariff increases. And I think it's important because, a lot of people went into this year thinking, oh, maybe we should brace ourselves for more tariffs. I don't know. Maybe we should brace ourselves for more reversals of tariffs because the administration is focused on affordability and we have a midterm election. And it feels like they understand that now is not the right time to raise consumer prices for things like furniture and upholstered sofas and kitchen cabinets. Remember, they were supposed to see an increase of 30 to 50% in price starting yesterday. Now the White House put out a fact sheet that will be delayed until January 1st, 2027. They still have 25% tariffs, but this was all done in the name of national security. Of course, the Journal, who's been very anti-tariffs, at least in their opinion pages, says, oh, good news, it's safe now to buy sofas. It's not a national
as you say,
security
invoking
threat.
Section 232 of the Trade Expansion Act,
Exactly.
which would seemingly, what exactly vanity has to do with national security, you might ask the question. That said, it has a lot to do potentially with affordability. Even if the president wants to call it a hoax, it's clearly on the administration's mind.
No, exactly, and I think that they understand that home prices has actually been a particular burden when it comes to people and affordability. Home prices are high. It's hard to do much about that without pushing more supply onto the market. I know he's trying to get lower mortgage rates from the Federal Reserve, but when it comes to buying a home, and if you furnish the home and you put cabinets in the home, and so these things matter, and we have seen really strong price increases. You can pull up a chart of what's happened over the last few years to furnishings, home furnishings. That's broken out in the CPI report that we get every month.
Yeah.
And we have seen, that's the price. It is just, we saw it really take off after COVID because everybody was focused on their home, and that was driven by demand.
Yeah.
And it hasn't really eased. It's gone up even more, and so much of the product is made overseas in Vietnam and in China, and so the tariffs haven't been helpful. If you look at stocks like Williams-Sonoma and Restoration Hardware, RH, you can see the relief, I think, reflected there that it's not going to get worse.
Wayfair is another one, of course, China being a key area for manufacturing for that company, the
Also
stock of
pasta.
which was up sharply, as you see, over the last year.
Yeah. Did you see the pasta news also?
I did. I watch it very closely.
You do?
Given that
Because you love pasta.
I enjoy pasta
You
a
like
great
the pasta
deal.
from Italy, probably.
I will usually only have it from Italy. That is
So
correct.
it looks like some relief there too.
Although I will put Rayo sauce on it, and that's not from Italy.
No, now
That's
it's
owned
owned by Campbell's Soup. They're on it. It was one of their big acquisitions.
But pasta as well is no longer going to see a significant increase, correct?
Right, so it looks like they're having good talks, and the Italians were happy to announce that they had productive negotiations after the U.S. had accused 13 pasta makers, including Korea pasta, very popular,
Yes.
of unfairly dumping their products in America, and they threatened these retaliatory duties of as much as 92%, but it sounds like the Italian government says ain't gonna happen, so that's good for us, because we probably buy a ton.
For us pasta lovers.
Us pasta lovers. We agree on that. All right, when we return, strategist David Zervos joins us with his take on what to expect from the markets and the economy this year, and taking another look at the futures market. Looks like we're going to start 2026 positively. The Dow futures are up 161. We're at the end of the week, and it actually has been a tough week for the market. The S&P tracking for a 1.25% decline on the overall market. But starting green, NASDAQ futures up 234. More Squawk on the Street when we come right back.
welcome back. Analysts are generally bullish about the economy in 2026, set to be boosted by stimulus from the tax law and an expected easing of tariff pressures. Joining us now to chat that out is David Zerbas. He's the Chief Market Strategist at Jefferies. Happy New Year. Good to see you.
Happy New Year, Sarah. Good to see you as well.
How are you feeling about the market? I kicked it off talking about how the bar is high. It doesn't mean we can't surpass it because we started out expensive last year too. But what do you think? What do you think happens here?
I think it was a great segue you had. You basically talked about how everybody came in talking about these valuations being high, and then we went even higher. I think rates have come down. They came down quite substantially across the curve, almost 100 basis points at the front end and 50 or so in the back end. And if you continue to believe that those rates are coming down, as I do, then we can see PE multiples rise. That's part of the way PE multiples rise is when you have lower interest rates. I think the neutral rate structure is getting debated as we speak. It was lowered last year by many in the market, and I think it will continue to lower back toward its pre-COVID levels, which are closer to 2% than 3%. And that is great news for stocks.
You think rates will continue to go down more than the market thinks rates will continue to go down? We're, expect pricing in now 2 cuts?
I do. I think that the market and the Fed have overestimated neutrals since COVID, and they've kind of sloppily done this exercise because they raised rates so much, things didn't break, so they just assumed neutral went up. They didn't assume that their whole concept of how to calculate neutral was incorrect, and it was because of the balance sheet. Now that the balance sheet is back to neutral, I think rates will come back to where their pre-COVID neutral levels were, and again, that is closer to 2% than 3%. And I think that iteration, that process of iteration started this past year, which is why rates have come down and why folks were actually very wrong about interest rates. They saw a lot of 5% forecasts for 10-year yields last year, 5.5%, even more, and people talking about rate hikes even over the course of 2025. That all went away, and we saw the rate cuts, we saw rates come down. I think that process is still ongoing, and we are going to have a more dovish Fed. We're going to have a new Fed chair, a new Fed governor, maybe even 2 new Fed governors, depending on what happens with Lisa Cook, and I think they'll be much more inclined to focus on the supply side and those lower neutral rate structures that I'm talking about.
So you think that's the key? The key is that we will see lower rates from the Fed and, David, lower market rates as well? Because there's some question about what happens, especially at the long end of the curve, even if the Fed cuts.
Yeah, I think the long end is really getting kind of taken over by the Treasury. I think there's a lot more Treasury focus on the long end. Secretary Bessent has said that from the beginning. I think he's done an incredible job in the first year of curtailing some of the risks that we're entering into the long end of the bond market. He has the tool of issuance, he has the tool of buybacks to really beat back on the bond vigilantes of sorts or foreign nefarious sellers. So I think the long end will be very much in control, under control. And by the way, Sarah, even without that, inflation expectations are down. Inflation expectations, the forward break-evens, the surveys, they're all coming down. The inflation data has gotten better and better, much to the chagrin of the haters. And I believe that's going to continue. I think there's a lot of reasons to believe that the monetary policy is still restrictive, and that is keeping a lid on some of the interest rate sensitive sectors that is keeping inflation more in check and heading lower. And so I think the Fed needs to be thinking about that, especially with this other narrative that you and I have talked about, which is the fact that a lot of the productivity gains are making this much more a jobless economic growth story than a job-creating economic growth story. I think the Fed will pivot more to that as the year goes on.
Hey, David, you dip into the equity markets sometimes as well with a little bit of analysis and predictions. Given we haven't traded a stock yet for 2026, seems like a good time. What do you think in terms of the S&P this year? What is your sense?
I think I'm in my risk parity mode still, so it's a combo stocks bonds trade, the classic trade that I've always liked. But I think we could easily have a 15 to 20% year trade. I have no problem with that. I think a lot will depend on the interest rate outlook and a little bit on how the Fed operates. But in general, I don't think it's going to be that different from what we just went through. I know that might be unusual to see 3 years in a row of that kind of number, but I think the productivity gains, the supply side story, what's going on in the One Big Beautiful Bill, what's going on in DREG are all hugely positive for capital, capital markets, and the creation of returns on that capital. The question that we all have to ask is, are we going to be doing this with more jobs or less jobs? And the more we see the job market languish, the more I think the Fed is going to have to step in and stimulate some aggregate demand. And that may be more than we think, because a lot of this strength for capital is coming somewhat at the expense of job creation. And that's a danger into an election here.
No, it is, and we're trying to grapple as well with what will be the impact of AI. I think many of us don't simply know at this point, but on that theme, it's certainly going to seemingly have an impact and be something the Fed's going to have to grapple with as well.
Dave, we saw it come up in the latest minutes. They're thinking about it. Unfortunately, there's just been a lot of political undercurrents at the Fed. And I think those start to go away as we see the transition to the new Fed, and we can kind of get focused really on the real dual mandate, which is got the labor component to it, which has been weak, and it's been weak for 3 years. We've seen the unemployment rate rising in 2023, in 2024, and 2025. It's up a full percentage point from those lows at the beginning of 23. So this is not a new story. And it's a story that really, I think, is embedded somewhat in COVID and our ability to be more productive because of COVID, and just a general productivity story that's coming through technological advancement via AI.
And I think, just to correct, we just finished our 3rd year of double-digit returns on the S&P, so you think we're going for a 4th, which is unusual, but it's optimistic. David, thank you.
Very much so.
All right, David Zervas, got to get to the bell, from Jefferies. Taking another look at futures here as we count you down to the first trading session of the new year. Looks strong so far. Dow futures up 144, NASDAQ futures up 214. We'll be right back on Squawk on the Street.
right, take a look at the early gainers here. Of course, chips. Either those that make the equipment that makes them, or various parts of them. All looking like they have a very strong bid as we head to an opening bell. 4 minutes away. Don't go anywhere. And by the way, don't forget you can catch us anytime and anywhere by listening to and following the Squawk in the Street Opening Bell podcast. Welcome back. Let's bring in senior markets commentator Mike Santoli. He's at the NASDAQ. We count down to the opening bell. A minute to go here, Mike. What are your thoughts as we get started with a new year of trading?
Yeah, market seems to be benefiting from the way that we finished on the soft side for 2025. 4 straight down days. The NASDAQ 100, almost every one of those stocks was down on Friday. So I think the market came in, kind of softened up, 1.5% below the highs in the S&P, and also kind of hedged up. So there was a little bit of put buying. So we'll see. We're getting a little bit of a maybe kind of a release from some of those concerns with the New Year flows. And it obviously they went to the stocks that were leaders for most of last year, like the semis, that look like maybe they're giving a little bit of an easier entry point with these pullbacks.
Yes, but also some catch-ups. You know, Nike's the best performing stock of the week, and maybe some opportunities there, some turnarounds. Energy's the best performing sector so far.
Mike is going to stick around. Of course, there's the opening bell. Take a look at the Airtime Exchange back at our headquarters. Here's the big board, Robinhood, not the trading platform. The non-profit, been around a lot longer, by the way. Paul Tudor Jones, of course, one of its founders. It helps New Yorkers out of poverty. Great organization. And over at the NASDAQ, Nova Bridge Biosciences, focused on the treatment of cancer. All right, Sarah, anywhere you want to start? You mentioned Nike, of course. By the way, when we were last together on Wednesday, the stock was up.
Really moving.
We had a number of different references to it as perhaps the opportunity for this year as the turnaround really starts to gain momentum under Mr. Hill?
Well, he bought $1 million worth of shares, and it was the third insider in recent weeks, including Tim Cook, who's on the board, to buy shares. And then Dan Niles came, and he made it one of his top 5 stocks of 2026. Look, if you're looking for turnaround opportunities, Mike, in a market that's already expensive, and you look at companies that have lagged, that do have turnaround CEOs in place, perhaps Nike is a good place to look, especially when we've already started to see some stabilization in the numbers there, particularly on the revenue side. Not in China, but definitely in North America. So there are those green shoots, and it hasn't really been reflected in the stock because the stock finished lower by almost 20% or so. So Mike, looking for pockets like that.
For sure, and a story that's not really that macro dependent. Obviously, we benefit from a stronger consumer economy, but it's really not about that. It's an operational execution type story. And in terms of the laggards getting a bid, as you mentioned, Sarah, last week, I find that the market increasingly sort of anticipates the known seasonal patterns, if it can. So, the market was strong going into the Santa Claus rally period. We started to see a lot of laggards over leaders action last week, which is often a January story. So I do think you have some pull forward of some of these dynamics. Not to say that they're invalid or they're not going to show up in January as expected, but people try to get a little bit of a jump on them. I would also point out we finished weak in the S&P 500 in 2024 as well. And so it's not that unusual to have a little bit of a bout of profit taking at the end of a strong year, and it doesn't necessarily color exactly how the following year starts off.
Speaking of consumer names, I made a list, last night when I was thinking about the markets, as one does, of all the consumer companies that are getting new CEOs in 2026, and there are a lot of them. Some of them are turnaround stories and sort of self-help stories, and some of them not so much. But look at all these names that are getting new CEOs.
Target and Kraft, I know.
Target, Kraft Heinz, right? And they're going to have a split. Walmart.
Oh, Walmart, of course.
Coca-Cola also announced that it's going to have a new CEO in March, and I put Lululemon on the list too, even though we don't know who it is, but they currently had Calvin McDonald just step off. So that's an unusually high amount of consumer names who've had, Mike, some sort of mixed performance with new leadership.
Well, Walmart has been amazing, right? And we've made the point that nothing says that that the successor to Doug McMillon, thank you, is going to have the same level of success. Clearly, McMillan's
that's a continuation
period you
story.
can see right there was really incredible. And it comes up much more often now, and I asked this question the other day as well, I think it was to an analyst, but about their competition with Amazon, because they have done such an effective job of making online so much more robust there in terms of as a part of the company, not to mention using their store footprint so effectively in terms of distribution, that there are questions as to whether Amazon, not that Amazon is still not dominant in many ways or certainly a key player, but
You mean whether they're taking market share?
Correct.
I don't know. Is there evidence? And I feel like Simeon Siegel, the analyst at Guggenheim, who had sort of said,
I'm
they're
here.
both winners.
Yeah. Right, that's who it was. I've been hearing it, and again, then there's Target, of course, which is in a category of its own in terms of its struggles.
Certainly, Walmart's been taking share.
Without a doubt, but very different there, yeah, and whether. But it is interesting to look at the success of Walmart and/or Mike, of course, all these changes that Sarah just mentioned.
Yeah.
Because it's no guarantee of success just because you had success under one CEO that you're going to have it under the next one when it comes to Walmart, for example.
No, for sure. That's one where the bar is pretty high, although it seems as if the advantages Walmart enjoys are pretty entrenched, and it doesn't seem as if it needs obviously any fixing. I'm trying to figure out thematically if there's a reason that maybe we're starting to see a little more of this type of turnover. You're 5+ years out from the pandemic. A lot of stocks are up a lot, certainly not all of them. So if you're down a lot, it's time for a change. If you're up a lot, might be a decent moment to step away and kind of declare victory. So a lot of that, I do think also you see a little bit of a wave in December of these CEO announcements. So it is interesting. When it comes to the Walmart and Amazon thing, one of the more fascinating pieces of it is that investors of Amazon almost never really talk about the e-commerce business, as dominant and huge as it is. It's almost not the thing that swings the perception of the company's fortunes or the value of it. It's strictly about AWS and whether that's going to be exploited in the right ways in the AI world and what they're doing with custom chips and all the rest of it.
No,
No,
doubt.
market's already
That
open.
is true. Although, you know, when we do look at the CapEx numbers, it is important to remember that
Market's already open.
Amazon's do exceed many of the other hyperscalers, in
This
part
could be
because
a
they still
major-
do spend an awful lot of money on that network, Mike. In terms of the distribution centers, in terms of the trucks, in terms of so many other things, of course, as they continue to try to shorten
Market's
the
already
time
open.
between when you order and when you receive whatever item it may be. I can remember when I did the documentary on Amazon many years ago, and one of their executives said, "Yeah, we're going to have it down to the same day," and
they did.
Of course.
And they did.
That was, at the time, it seemed impossible to imagine something like that.
Yeah, and now I get annoyed if it's like 2 days.
Yeah.
No, I'm annoyed if you say one day.
Average. The bottom line is they think a premium for Apple's quality and scale. The iPhone is still the engine here. The 17 refresh cycle they think helped drive some performance.
There's so many mixed messages.
They're estimating that 2025 iPhone revenue is $217 billion, which is a little above consensus. Again, they think the drivers there is the
So many
Gen
mixed
AI,
messages.
just a higher storage base, so that helps the refresh cycles. But in terms of the base that Apple has, they say that the base of users is already, essentially at maturation, right? They have about 2.4 billion devices.
So many mixed
messages.
messages.
That scale, they say, Raymond James says, supports steady upgrades, but incremental growth will be harder because they already have a massive wheelhouse of users. I mean, we have our iPhones, we just upgrade when we need to nowadays. They think services is a bright spot. It's not a game changer, though. Services now makes up about a little bit more than a quarter of revenue. It's growing faster than other segments of Apple, but again, it's not the same kind of return that we see from the iPhone, right? The iPhone is still the crown jewel. Risk to watch, they say, still tariffs.
Okay, well, we've got today's the second.
And component costs, which probably has some relationship to tariffs, too.
Even though Trump cut the slack and said, hey, Tim Cook, if you invest hundreds of billions of dollars here,
definitely
we'll
cheap.
Obviously give you a little bit of leeway on those tariffs as well. But,
685s.
as far as some of the more challenging perspectives as far as, further upside for Apple compared to some of the analysts' notes that we've been talking about, particularly the bull down
685s.
And also, speaking of New Year, New Me, I mean, girl, Diane King Hall went to the gym yesterday, everybody. Round of applause. January the 1st. Wow. Okay, setting the bar very high. ASML upgraded as well.
And it's lifting weights this morning.
AMD pop.
Up 8%.
We had Meta pull back.
The indications in the pre-market
Apple
was higher,
pop.
but not to this degree. It's rallying off of a big vote of confidence from the analyst community. You have
IWM pull back.
Capital upgrading it. This is a double upgrade from a sell to a buy.
Okay,
Their price
685
target on
here
this
at
one
110.
doubling at 1500. That's up from
Okay, we're watching SPY right
750,
now.
So they see meaningful
Prepare
upside
ye
from
in the name of the
11%
Lord.
Before the 8% move that they have today. So it's a big analyst flip here on the sell side community here. They see the driver there being EUV.
685 calls.
EUV extreme
Lotto.
ultraviolet lithography. Yeah. Had to take a second to get that out. It's the most advanced chip making technology in the world. They think this is a big deal for them. They expect Taiwan Semi to install these machines. They think ASML will be a beneficiary of this. So memory chips are coming back. We know the memory story was big. They finished the year. It's big starting out this year as well. So.
And I would just add to that Tesla story a note out from Dan Ives, just as we were going to air, actually, as far as the Bell was concerned.
There's
Maybe
99.
on this as far as
Okay.
The upside that we're seeing in Tesla is
This
he's
is the
saying
position.
deliveries better than the Whisper numbers.
Okay, that makes sense.
Which I suppose makes sense.
Double bottom.
Set the bar low. And room for upside.
Thank you very much.
That's it. You were doing that at the gym. All right, Diane Kinghall, thank you so much. I'll catch you a bit later. All right, coming up, we've got
94
Peter
cents.
Tuckman, who's joining me at the desk to look ahead to the new year.
Come on.
Markets. Opening bell will be right back.
You can do it. Here it is. Uh-oh. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being
Follow me on all social media platforms
a Mormon.
at Diane King Hall, and connect with me on LinkedIn for more.
Yes, I was a Mormon.
Last year, my dad
Like many
had a
years ago.
big shock to see this person that I've always seen as a force in our family be vulnerable.
Baptized when I was in
Had a stroke? Yes.
8th grade.
Now we're in the
Still
car
too
together
young to
almost
know
daily.
any
I
better.
started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer.
That's
any
some good
questions I ever
information to
have.
know,
Makes a huge
James.
difference when you have someone that actually cares.
5 insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service
So it is
wealth
true
management
that-
skills in the biz.
Actually, I'm seeing something from Schwab.
One of their lifetime goals
Schwab lets you invest and trade on your own.
is to have 5 wives.
Not to mention,
Yes.
Schwab has a team of specialists for taxes,
It is
insurance,
true.
and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Come on, Carl. Snake, break out. 3 black crows, tweezer bottom.
Welcome back to Opening Bell. Time for the latest from the floor here. Joining me now is Peter Tuckman, Senior Floor Broker, Trademath. Happy New Year to you, Peter.
Same to you. Happy to be here.
And obviously the Santa Claus rally hasn't wrapped up yet. We've got 2 days left and we're recovering here.
We're not for sure yet, but we're going to find out shortly. Now, who's this? Oh, look funky.
But you know what?
Woo, he looked funny.
It's no slouch at all. We closed out last year with 52 record highs across the board. I mean, you know, we could lay out a scenario where the Dow's up double digits. the
Nicole
S&P
likes
up
flirting
double
with this old
digits,
man.
NASDAQ up double digits. Gold
I don't know if I appreciate it too much.
silver
Up triple digits. The only thing that was down 6% for the year was crypto and Bitcoin, and then obviously oil had one of its worst years. But, you know, for a year that has had absolutely everything possible thrown at it, from a new administration, the tariff thing, Independence Day, the
104.
February, March, April, like the summer of love, you know, with interest rate potential cutting cycle, and then
Everybody call up Schwab and complain that Washboardjim's upset that he thinks Nicole is flirting with this old man.
Right, then really great numbers coming out of Thanksgiving.
And then, you know, that bizarre thing that happened.
Boom, Randy!
Remember when they decided that AI was a bubble, right? And some weird, they were like abducted by aliens. I'm not sure where the probability of a cut went down to 15% and then spiked to 88%, right? And then we were able to come out of great numbers in.
I take profit when you feel like you want
And
to.
Cyber Monday were spectacular, and I think it was important to note that that meant that the economy was doing a little better than we thought. But what I think the most
I would take some off the table. We have a chance to pull back one more time. And that'll be the support for the bottom line. You're at 114 now. You can sit and sell. There's almost a house payment right there. Hello. My mom, she watches you on a daily basis, and please don't tell her this, but I'm going to call you and tell you every time you get on and you start talking about sticks. My mom, she goes and gets into the refrigerator and grabs a glass of beer every single time. You're at the VWAP. She just said VWAP. Spy at the VWAP. Spy at the VWAP. It's crazy. Spy VWAP. Jim, you've said that before. Spy VWAP. What do you mean by that? Well, when you're scalping a trade or you're day trading, it's a technical indicator that tells you either the stock is going to be bullish or bearish. It's a pivot point. It's an equilibrium between the support and the resistance level. For I am a robot, I am programmed to receive. Does that make any sense? Anybody say yes or no? I got an A plus from Sheba. Oh. Green Machine's here. Uh-oh. Woo! Say what? Oh boy. Oh, Jim. I can't believe it. What just happened to my purse? Yeah, we're sitting in here. We took it on the bottom down there on them 3 black crows with the tweezer bottom. And I'm sitting there going, damn, it's at 185. You're up 100%. Sell it. Sell it. Sell it. I don't know how he does it. But I was sitting here watching him smoking a big fat doobie, and all of a sudden, boom, up 50 cents a contract. Yeah, magnificent. You can tell Sheba's seen such talent coming out of the room this morning. We're not sure how he does it, but he does, and he did it. You gonna be talking about Nvidia today, baby? Yep. When I get up, oh, look at old Apple. Jimmy mentioned. Meta mentioned Santa Claus. Santa Claus is coming to town. Santa Claus is coming to town. Santa Claus is coming to town. Everybody do had a big pop this morning. Google's got a big pop. AVGO got a big pop. /ES got a big pop. Unbelievable. That's what you are. What? Do you know what 193 to 1? Do you know what 93 cents to 193 means? $0.93 to 193. You're exactly right. That trade didn't take but 3, 6, 9 minutes.
Right, a similar setup here in terms of our chart style this time. Gold since October, 4-hour chart, a channel going toward the upside here across our lows, duplicate line going across the highs, gives us these boundaries that we've been looking at here. For now, gold staying above this heavy volume area that we see right here, just below 400. We've been hanging on to the previous highs from this range as well after a bit of fluctuation here. So now the next spot to be watching would be those highs near 418.45. When we do look at our yearly chart here, we can see that it's a bit of a different picture in terms of our volume nodes. There are smaller nodes that you can see that stick out a little bit more, around 370 or so right here. And then 385 or so, 395. So those are the areas to watch here. But our horizontal levels, 401, right about here, represents some old highs. And then we also had some older lows here. That's where our volume starts to drop off as well. You're about 395 or so. RSI trending downward here. Big interruption here after we saw some bearish divergence in this product here. But we remain above the 50 midline. Finally, when we look at our expected move for the next few months here, our orange box 4% for January 16th, February 20th expiration almost 7% here, our yellow box, finally March 20th green box 8.6% potential expected move according to the options market.
All right, great stuff as always. Thank you so much, Rick DeCat, for getting us across the S&P and gold today for us. Let's update today's trading with our market meetup panel. That is the panel of one today. Alex Coffey joining me now. So obviously we're seeing a bit of mixed performance. Actually, a nice day for the NASDAQ. Usual suspects. We've got NVIDIA higher. Very, very nice day for some of these chip stocks. I mean, look at some of the memory names. We've got SanDisk running up 10%, Micron up 8%. So really building on the triple digits that we saw last year. But a bit of softness in the down today. Perhaps a few things weighing on that. I see Salesforce, Mickey D's, Walt Disney. Just talk us through what your takeaways are in the market for us today. Happy New Year to you, Alex.
Yeah, Happy New Year, Sam, and good morning to you. What I would say is this is a market that's much more reflective of the market of the last several years. It's a little bit more narrow in its focus, and it's found itself with AI big tech leadership today. You know, we closed the day on Wednesday with less than 5% of the S&P 500 components higher and only one of the NASDAQ 100 components higher on the session. It looks a little bit better than that today. You see about 35%, 37% of the S&P 500 higher and close to 50% of the NASDAQ 100. That doesn't really tell us the story, though. Is if you were to look at just the top 4 names today in the S&P 500 in terms of their contribution to today's rally,
Story is Wall Street has it wrong.
And Alphabet. Those 4 names are accounting for the entire rally in today's session of this 40 or so points higher on the day. So to me, this is much more indicative and reflective illustrating of what we've seen from this kind of concentrated market of the last several years. We have seen that broaden out just a little bit in the recent months, but starting 26, much like much of 2025 and 2024 and 2023 before it looked like. You also see this reflected in the dispersion index, which essentially what the dispersion index is seeking to measure is the relationship between the average S&P 500 components volatility and the index itself. And so as you start to see this DSPX tick higher, it's basically saying the movement within the index is starting to pick up, especially relative to the index itself. So you see volatility lower today, but you see the average constituent volatility of the S&P 500 increasing, and that leads to a dispersion index increase as well.
Okay, we've got tech stocks back in the driver's seat. We've got less than a minute to go. Just a quick answer here, Alex, as far as what's on the radar next week. We're going to be getting more information as far as labour data is concerned. What are you going to be looking out for?
Yeah, you know, I'm not the biggest fan of the JOLTS report, but I do think that we got to start looking at that as job openings are going to be so critical to the conversation going forward. And then, of course, non-farm payrolls at the end of the week is the must-watch data point every single week or every single month.
Yeah, absolutely. And obviously we're looking for a little bit of a better picture as far as the data is concerned, as far as
Gator.
painting for
She said it.
economy. Hey, thanks so much, Alex. I'll check in with you a little bit later. Appreciate your time this morning. Thanks so much for joining us here for Opening Bell. Sitting in for Nicole Pedalini.
She said it.
I'll be right back with you on Morning Trade Live after this quick break.
We got to get better data.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD.
That data ain't going to work out too well.
With Investor Checking,
We need better data.
Award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features.
That's 5 minutes right there.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I need to call up my little lesbian girlfriend.
Welcome to Schwab Network, where real-time
Leave her a message.
coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing up houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Very good. Who would that
Stay
be?
connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Exchange. We have plenty to get on both here and abroad over the next hour. So here's a look at what is coming up on today's show. We'll dive into the potential market drivers to watch in the new year and what uncertainties are still looming for investors.
Question is, are we going higher, or are we going to break out, or are we going to pull back?
And Nvidia memory stocks are rallying hard across the board today after a strong 2025, and Nvidia is more than 10%.
She said it, Nvidia!
We are inching closer. Let's take a look at where markets stand around half an hour into trading for 2020.
Please, can we have a moment of silence?
Risk on tone.
She did say Nvidia. I heard her say it.
Things looking a little bit mixed now, although the Dow
So
Jones
that's going to
has
be a
just
good
recovered.
day
We were looking in the
if you're
red
trading
over the
Nvidia.
last course of the last 10 minutes or so. But we are 0.6% higher on the S&P 500
NVDIAER,
right now. The
Nvidia.
Nasdaq very much is leading the way here. So we've got technology back in the driver's seat, as we mentioned. A very nice rally for memory off the back of what we've heard from Samsung.
Let's go, baby.
We'll unpack that throughout the course of the program. Also, of course, some of the bull case coming from what we've seen in Asia overnight. A big IPO over in Hong Kong.
Spy just had a jump right
News
there.
around Baidu, of course, the internet giant. So this is obviously what we're working with this morning. 25,551 on the Nasdaq, and the Russell 2000
6900s on Nvidia are up from $2 all the way to $6.90.
So we are looking at a pretty good start to the year here. And as far as foreign markets, how they kick things off, it was a very, very strong note. As I mentioned, from London to Seoul, we saw the FTSE 100 actually crossing past that key 10,000 mark. We've just dipped below that now. We're at 99.71 there over on the FTSE, 0.4% higher still. Germany off to a strong start as well, doing a similar thing. And the CAC over in Paris up 0.7%. So we did see a nice rally across most of Asia too. Futures products looking like this. We've got the 10-year yield picking up. We're at 4.17 right now on the benchmark. We've got the US dollar index, of course, coming off its worst year since 2017. We're at 98 on the DXY. Gold catching a bit this morning, 0.6%. We're seeing a nice recovery in precious metals actually off the back of the volatility we had earlier this week. 43.64 right now on the yellow metal, and then crude oil, 56 bucks a barrel. We're down 1.2%, and we've had Bitcoin now reclaiming that 90,000 mark. We're up almost at 3%, so it's risk on for the cryptocurrency as well today. So that's your scorecard as we get up and running for the new year. Everybody joins me again for a little bit of more of an update on what's happening over in the economy right now. And we've got the S&P Global Manufacturing PMI, not something that typically moves the needle, but what are you seeing there? I see that conditions have improved, but there's a bit more sort of nuance within the survey.
Yeah, I would agree. The number came in at 51.8, meeting the street's expectations, but it is down from November's print of 52.2. Now, this report actually does signal that we are seeing a slowing when it comes to demand. And actually, we did see new orders declining for the first time in 12 months. On the back of that, you are seeing a deceleration when it comes to
Jimmy's not sure if he likes that.
There's something in here for everybody here. Once again, the expansion within the manufacturing industry is obviously a good thing to be able to see, but you are seeing a lot of tariff headwinds, which is being cited as the number one issue that you are seeing when it comes to new orders.
Intel looks very nice today.
At its fastest pace that we've seen since August. So overall, this is actually a pretty decent print. Not a major mover when you're looking at the broader market and some of the other indicators. We will have this potentially being reaffirmed next week with ISM data coming out, which really will probably move the market one way or another. But once again, I would say this report is mixed, but there's some bright spots, especially if you're looking at the inflation side. Maybe that's going to subside here over the next couple of months for these manufacturing companies.
Yeah, as you say, I mean, that's what you want to see, upward growth remaining solid, but I mean, of course, you need those orders as well. So obviously, some of the tariff concerns still weighing on the minds of some of these producers. Employment growth strengthening, though, I suppose that's a little bright spot there. Gold and silver, KG, I mean, you and I have been on the roller coaster ride this week talking about this. What are we seeing as far as this rebound in prices?
Yeah, you're seeing a little bit of a bid taking place here in gold. Gold up about 0.5% at this point in time. If you're looking at silver, it's up about 4%. We have seen this consolidation along with very elevated volume here. So really they're kind of we are consolidating and potentially going to move a little bit higher here, Sam. And that's
excuse me.
To keep your eye on when you're looking at the metal space.
Oh boy.
And the narrative around mining as well as supply.
The 685s are now 182.
Continues to be bullish in nature. Meaning that supply could be constrained here, demand still outstripping supply, and that could push prices a little bit higher. We are seeing that within the nickel market as well as some of these other markets like aluminum.
Santa Claus. That could be all it is right there. And I was in on it. Thank you, Santa. As we approach the 200 SMA and the 63 EMA and the VWAP, pay very close attention if we want to keep the higher highs, higher lows, the higher lows. Yeah, I thought you said higher. I meant higher lows, you idiot.
Obviously, we are looking ahead to the OPEC meeting, but you and I have been talking about some of the tensions.
Calm down, Jim.
You know, Iran, Yemen, Venezuela,
well, heck.
With this peace deal between Ukraine and Russia. What's on your mind?
A lot of geopolitical risk.
Higher lows.
We did see over the last couple of days, some Black Sea ports when it comes to oil exports also getting hit. But the market had a short bid for that, and now we are selling off here a tad bit. Some of the geopolitical risk
could be a problem.
Like it's kind of unwinding within this.
Not quite yet,
and
but it could be.
That Russia is trying to.
This will be your entry.
Ask the United States to stop
if you want to take the risk, I'd say it's risky from here. But if you're in it, I'd stay in it.
Venezuela, it seems like we might be open to that, and that also might be driving down some of the potential.
And it could come down and hit 685.83.
But obviously, the headlines when we were looking at supply continues to be
50-cent drop. If it doesn't hold the higher lows. Let me repeat.
Total capacity is going to be a theme.
Higher
just meaning that
lows.
Now we're basically going to ask for documentation and evidence that some of these countries in OPEC that state that they have,
yeah, we get it, Jimmy.
5 million barrels of capacity, additional capacity they can bring online.
Because there you had a higher low.
It should be a very interesting deal for this market, and could actually be a sign for this market if we do start seeing a lot of those capacity numbers coming down here. So overall, selling off here today, getting close to that level of around $55.
Here.
Buyer step in.
Has to hold here.
I wanted to get your thoughts on technology this morning. Obviously we're seeing tech very much back in the driver's seat today. That leadership, which obviously we saw most.
Crowd's going wild at Sports Arena.
I'm wondering what's driving that, because there is a conversation out there that some of the bull case for AI this morning is coming from Asia, with what we're seeing from Baidu. There's a strong IPO on the Hong Kong index as well.
Where are we here?
But we are seeing obviously a nice rally across
the SPY.
Memory space too.
If you bring it down to 686.
Well, we have some comments coming from Samsung as well.
Let's do that. 686.
Demand for high bandwidth memory, so that's actually pushing the
buy 10 of these son of a guns.
And I think that's also dragging up a lot of these other semiconductor companies like Nvidia.
Pay very close attention right here.
What you are actually kind of seeing today, Sam, and one day does not make a trend, but keep your eye out
these
on
are
this.
The SPYs.
Last 3 weeks, 4 weeks.
These are the 686 strikes on calls.
This market here, and right now what we are.
These are for the lotto. No, this will be my last lotto trade of the day. We're at the 63 EMA and the 200 SMA. Let's not be no stranger to that. And it's dead. That's dead.
Blessed to be higher here, dragging the S&P 500 as well as the NASDAQ to new all-time highs potentially.
Yeah, I mean, that's obviously something we're going to be watching, that rotation back into what had been working at the back end of last year. Hey, thanks so much, KG. I'll check in with you a bit later. Coming up, we will take a closer look at the bigger market and potential 2026 growth drivers with Thomas Martin from Global Investments. Morning Trade Live is back after this.
Oh, what? No, oh God, no, we can't do that. Oh, no. How dare you? Just 1 second later, it'd be in at cheaper price. Okay, the crowd's going wild here at the Sports Arena. They don't know what to look at yet. We're at the VWAP. This is the last support. The last one to keep it bullish. VWAP.
I'm Nicole Pedalides at the New York Stock Exchange.
Trying to tell everybody
Live
that nobody wants to listen.
Market movers and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest.
We're at the 63 and the VWAP.
Not to mention, Schwab has a team of specialists.
If I was to add, it would be right here, Junior.
All with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you
Ooh.
covered.
No.
Get inside the minds of pro traders.
My point is,
Okay, we're at 72 now.
rate of change in
66.
sales based on their guidance, but not the same rate of change on EPS.
Follow
Okay.
the big headlines, live analysis, breaking news, and sharp trade ideas.
Business decision.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Well, it didn't hold the VWAP, that's for sure.
Morning after Raymond James resumed coverage of the stock with a market perform rating and no price target. The firm believes Apple's current valuation is appropriate and that there is limited near-term upside for shares. Apple stock gained 8% in 2025. It's currently trading up 1.6% this morning. 276 and change. Let's
PMI was equal
session, and no surprises
as
there.
estimates.
Been talking about, SanDisk, which has had a very, very good year in 2025, rallying in triple digits, up over 500%. Is up now 11%, and this, of course, as KG pointed out, coming off the back of some of Samsung's comments that they like the DRAM. So we'll be digging into that throughout the course of the program, but that's having flow-over effects for Micron and Intel.
Be surprised how easy it is to
very nice gains across the
monitor your
space today, not to mention some of the developments in China around chips too.
your
And here are the laggards.
PMI,
which
your
has been very much on the decline since around
your inventory.
December, but still over the last year, 12 months, it's up at 96%. So it is down 5.5%.
knowing what you need when you need it.
And of course, across the software space, we're also seeing Workday down 4.5%, Intuit down 4%, and Fair Isaac down 3.2% right now. So that's your winners and the losers on the session for 2026. Joining us now is Thomas Martin, Senior Portfolio Manager at Global Investments. A very good morning to you. Happy Friday. Happy New Year. Thomas, thanks so much for joining us
Is that a
today.
business?
Hey, look, you say that the
Okay, come
narrative
on.
is favoring bullishness but
Let me see if we can do
nervousness.
good. We're looking at the same
just talk us
stock.
through some of the cautious optimism here.
Sure. Well, Happy New Year to you, and thanks for having me on.
I had a
the
business
program. That was really meant
Let's
for
say
the end of
80% of
last year,
my
but nothing really changes on New Year's Day except that we
my draw
have a
came
full
from 2 months out of the year.
365 days to see how things go. So I think that the market remains nervous because everybody, every strategist, analyst, etc., is almost universally positive about the year, and why not? The fundamentals are pretty strong, and when you have that, and you see a first day like this today, where it's back to risk on, as you pointed out earlier. You had people going into the end of the year, just sort of wanting to.
I got to figure out a way to dig
get it
my
over with.
head out of
Now
this
we
one.
have a full new year. It should be positive, but you don't
It's
know
all
how
of a sudden
it's
just
going to come out
tanked.
of the blue to bite you. And valuations are high, so if the market gets a little bit antsy, you could see a correction.
Okay, that's certainly been some of the conversation that's been creeping in, and certainly in the back end of 2025, with some of the questions in the market around, just these stretch valuations. I mean, some have been saying that, we're not in a bubble just yet. We're perhaps a couple of years away from that.
Probably
But,
get one
as
good
far as
big
the
scalp
narrative
off
for
and
this
then
year, Thomas, I'm just wondering, what is the story here? Because from what I'm hearing is it's not just about
see how it
everything
reacts
rally,
after the
it's
first
really
one.
now picking the winners and the losers, the picks and shovels, as to who sees the most gains in a sort of magnitude versus those who might be left behind. Is that how you see things?
For the most part, yes. And again, today you're seeing it with the memory companies. Really, if you just look at supply and demand, and what we've seen recently with memory is that there's just not enough supply and there's lots and lots of demand. And as long as that continues with the large language models, moving forward, being useful, being able to generate revenues, and the capability of those limited by processing processing power. So in other words, we don't get huge efficiencies that take that away. The story continues. And as you said, we could be in the first couple of years of this. And that's a long time for the market to look forward, is 2 years.
What are your expectations for the Fed moving into 2026? Because, of course, they're penciling in at least one cut. The market seems to be penciling in around 2. I've had conversations with people who think 3, and then the counter argument to that being, well, if they have to do 3, then there's a problem. Where do you see things?
Well, we see employment as being the big issue with, inflation, of course, a close second.
We got a 1, 2, 3 coming up
number one
on the
job
SPY.
is to make sure that inflation does stay under control. But it seems like what they need to do for that job is mostly done. They just need to be careful in here. And so that brings a recession or reduced employment as being the next biggest problem. They really can't have that with the debt levels that they have to be able to get the tax revenues in to be able to pay for that. So they're going to have to be very careful of that and watching that. But in the meantime, the economy is performing very strongly. Employment is hanging in there, and so they're going to be very cautious, and that's why you're really not seeing that first rate cut happen until sometime in the second quarter, mid part of the year. So they'll just be watching things very carefully, and that's what we expect too.
Okay. And as far as positioning this portfolio in the new year, I mean, you're talking about maintaining diversification and dry powder. I mean, where are you looking right now? And, what are you waiting for as far as a catalyst to sort of deploy some of that?
Well, we have always thought that even when we've
Don't
had
give
sort
up
of a
yet.
correction here with the growth
Still
names,
way
and
early.
the large cap names, and this rotation that you spoke about earlier to more cyclical names and to value, that the market rally is still on for this year, like I said, unless it gets derailed, and that is back to the old leadership. And again, that's what we're seeing so far. The growth is still in most of the Mag 7, not all of them. But that's where the growth is and in technology. So we're, keeping our positioning where we're favoring those sectors, the consumer communications and consumer discretionary, select industrials, and the, select utilities in the AI and the data center thing, and of course in technology. Whereas we're still watching those value names in healthcare and in consumer staples, which will do well if the market corrects. But they, the underlying fundamentals just aren't providing the growth and the firepower there.
Yeah, okay, we'll be watching. Hey, Thomas, thank you so much for joining us today. We really appreciate it. We've got to wrap it up there. Happy New Year to you. We'll catch you next time. Thomas Martin, Senior Portfolio Manager at Global Investments. Coming up, we'll dive into crude oil and the energy patch. How much will geopolitics factor into crude prices in 2026? That and more when Morning Trade Live comes back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going? First day, so.
Sometimes,
Next. Try it again.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade.
Coming down more.
More specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat.
Tesla 446.
With Schwab.
Ooh, look at Tesla.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
We're back on Morning Trade Live. Tesla is moving lower now after a drop in fourth quarter deliveries. The company delivered 418,000 EVs in Q4, a 16% drop year on year. The dip isn't too surprising after the government ended the EV tax credit in September, effectively raising the cost of electric vehicles here in America. So we were higher on Tesla this morning on perhaps the thinking that it was better than the whisper number, but now we've taken a turn to the downside. We are 8% lower on Tesla right now, trading at 446 and change. Now let's take a look across other EV stocks, and remembering we also
Nvidia's about to hit the 200.
BYD overnight too, with its full-year sales target being met, 4.6 million cars, up 5% in trade right now. Rivian is higher, and Li Auto also tracking higher, 2.5% for the Chinese.
Oh man, Amazon.
Welcome back to Morning Trade
227.27.
Alan Wald now, senior fellow at the Atlantic Council's Global Energy Center. Of course, we have to have crude coming off its worst year since 2020.
227.222222222222222222.
Happy New Year. Yeah, I think there's really two competing forces here. One is the supply chain situation, economic conditions.
We hit my support level.
For certain producers to keep producing.
Well,
and
SPX.
then the other is the geopolitical situation.
One of them.
And so I think that those are obviously going to be the
Yes, we
competing
did.
forces
Spy
in
2.
2026.
Spy's only 15 cents off.
Obviously, we're looking at is China going to continue
Ladies and gentlemen,
strong imports?
would you please buckle your seatbelts? Look to the window of the left of you at the price of 682.03 for the ticker called the SPY.
States on the other side.
Washboardjim. Oh, we just said 02. We just okay. Red alert! Red alert! Red alert! Red alert! Red alert!
Okay, or are we going to experience any kind of economic downturn that could impact demand?
Red alert on the SPY.
Side, of course, we've got OPEC. Some of the members are meeting this weekend, and it's expected that they're not going to change any policy, although considering that oil is really pushing that
It's
$60
right
floor,
here,
if it does go
baby.
below 60,
That's
could see
what
them
I
potentially
call
trying to enforce some cuts, or at least keeping policy the same, and then maybe trying to put in some more cuts the
on
next
the
time
side
they
of
meet.
my
And of course, we've got the shale producers in the United States. Are they going to finally pull back on production, or are we going to see them continue to produce at the very high rates that they have been this year?
Okay, so a lot of moving parts, obviously, with the supply-demand dynamics. We're looking for some durability in growth from the world's two biggest economies, obviously here in the US, but also over in China. We're starting to see some, good PMI numbers at the back end of last year. I've seen a note out sort of suggesting that, China is likely to continue to buy higher crude to keep the stockpiles higher as well. So that's obviously something to watch. You mentioned, obviously, supply concerns. We're going to be watching out for that OPEC Plus meeting in a couple of days, but that seems to be the sort of prevailing narrative in the market last year. I'm just wondering if you believe whether the supply worries in the market are justified.
I don't think the supply worries are really justified. I think there's plenty of supply to go around. I think for a long time we were hearing this narrative of there's too much supply, we're oversupplied, and then there was this
There's gonna be a bummer sitting in this chair.
narrative saying actually, we're not so oversupplied.
I can't sit in my
and
other
things are
one at
actually
all.
much closer to equilibrium than you're saying. And so I do think that in 2026 we're going to see some kind of understanding of whether the market is
Gonna
actually
be a big
oversupplied
bummer.
or we're actually doing just right for what we're consuming.
Okay. You mentioned, obviously, some of the moving parts with respect to global conflicts. We've seen
SPY just went below it.
Premium being priced into the oil market. We are waiting for an update on the Ukraine-Russia peace talk plans. Obviously, we've seen this sort of renewed flare-up with respect to what's going on in Iran, what is happening over in
just looks
Yemen.
real
We've
weak.
been keeping tabs on what's been going on in Venezuela. What are you paying attention to the most?
That's a great question. Right now, I think the hotspots, as you mentioned, are what's happening with Russia, Ukraine. I think that is there's a lot more optimism, I think, than we're actually seeing on the ground. I don't think we're that much closer to a resolution that would bring Russian barrels back on the market and not on this kind of sanctioned market. I think we're much farther away from that than perhaps we've been led to believe. So even if we do see, meeting of the minds,
resistance on the SPY would be the 9.
Process. It's not like Russian barrels are coming back.
682.67.
Then we've got Venezuela. You've got the U.S. blockade there. I actually think that this is
683.08.
serve to push oil prices down, because right now Venezuelan oil is already sanctioned, so it's technically sold on the black market. If the U.S. is commandeering this oil at its plan, as far as we know, or at least according to President Trump, is to then funnel those barrels into U.S. supply. So it could end up in the SPR, it could end up on the regular market being sold by U.S. companies, and that would actually increase the total supply here. With Iran, they do produce enough barrels that if these political protests and political turmoil there does keep their oil from getting to the market, then we could definitely see an impact on prices, though they're not huge major producers. I think the question really is, we've seen a lot of protests before, we've seen a lot of political protests. Just because we're seeing widespread protests does not necessarily mean we're going to see some kind of revolution or coup. And when it comes to oil, the question is, are oil workers striking? Are they part of these protests or not? Because if they're not, then the oil is going to continue to flow, and it's not going to have that much impact on the market at large.
And of course, just changing the calendar year doesn't change a lot in these markets, but obviously the tone setter is going to be coming from OPEC Plus come this weekend. That seems to be sort of the next major catalyst as far as the oil markets are concerned. Granted, we don't get anything else that sort of flares up in the next 48 hours, but I mean, how important will this to bring some clarity to the markets? I mean, does this have the scope to move the needle come Monday?
I don't think it has the scope to move the needle that much. This is a bunch of voluntary producers meeting to decide whether they're going to continue their voluntary cuts or they're going to pull back on them. And it's unlikely that they're going to do anything. They're not likely to make any changes right now. So if that's going to set the tone for 2026, then it would seem that 2026 will be more of 2025. But, things can change in a heartbeat, as we've seen. So I wouldn't necessarily view this particular OPEC meeting as a trendsetter for the entire year.
Okay, that's certainly something to watch. Hey, Dr. Ellen, thank you so much for joining us here on the Schwab Network. Really appreciate your insights on the energy markets. That is Ellen Wald, who's the Senior Fellow at the Atlantic Council's Global Energy Center. Coming up, it's time for the Morning Trade, and we'll get a closer look at memory stocks after the sector outperformed in 2025 and is having a nice rally this morning. Morning Trade Live. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching.
Flirting with disaster. Who'd support?
With Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our Investing Webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movements.
Where?
Just the trades that matter. As the bell hits and the markets react
When?
in real time, Opening Bell, live at the NYSE,
What?
right when it counts.
Where? Petalides?
Memory stocks are moving higher after Samsung rally overnight in South Korean trading. The company says it has regained its tech edge in memory, citing strong customer feedback for its HBM4 high bandwidth memory chip. Memory stocks are here following along. As you can see, we've got Micron up, we've got Western Digital, Seagate, SanDisk, which was our outperformer of the year. These have been up in triple digits in 2025, and so we continue to see them carrying the baton over into the new year and running with it. So this is obviously getting a lot of tailwind from that Samsung story. We know that this story is around tight supplies and of course those higher prices. So those have all been beneficiaries of that narrative. That's the focus of the morning trade. Joining us now for a closer look at this name is Alex Coffey, co-host of Next Gen Investing. So memory stocks had an incredible performance, as I mentioned, in 2025. So what do you make of the fact that we've now got Samsung, which helped the Kospi hit a record overnight, really just assisting these stocks rally to start the new year, Alex?
Yeah, no doubt, Sam. Good morning once again. Happy New Year to everyone. And in a New Year's address, co-CEO and semiconductor chief of Samsung said what you reiterated there, which is that customers have responded positively to Samsung's upcoming high bandwidth memory 4 products. And this HBM4 ramp in the speech, the CEO, the co-CEO is saying Samsung is back, and so optimism for those shares in South Korea as they trade at a new record. And that's led, names
got
like
whacked.
Micron and SanDisk, as well as Western Digital, some of the best performing names in 2025 amongst S&P 500 companies, to pick up right where they left off in 2025 and work higher.
You got a hold here.
Something like,
I'm up.
2 decades ago.
You had 684.37. No, 30 cents. And 685.48. 685.50. And then after this trade, I'm getting into tomorrow's. The crowd's going wild at the sports arena right now. $0.22. You're going to get ready to squeeze again. We want it to go up, not down.
on this day off the back of this and Samsung.
Video.
We're going to look at a micro chart right now because, of course, that has been rallying in triple digits throughout the course of 2025 on everything that Alex just spelled out. And obviously, we are seeing a nice extension of the gains today. This is one of our, obviously, best performers here in the US as far as when it comes to some of these memory products. And this, of course, happening off the back of some of the commentary around Samsung, which, as you mentioned, helped lead the Kospi to a record high overnight. So Samsung, SK
We're getting to a wall, that's for sure.
Market, both up overnight on the customer feedback that, hey, they like the DRAM. This is obviously something that we've seen following on from the US headlines around them getting their manufacturing for some of their facilities. Coming up, we will on the move this morning, what's moving markets overseas, and we'll start to try to re-establish our connection with Dan Deming. Morning Trade Live will be right back after this.
Okay, I'll take it.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime.
So you start to approach a wall right up in here.
Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
We're at some resistance. Can we break it?
My point is that they're getting a higher rate of change in sales based on the guidance, but not the same rate of change on ETFs.
Follow the biggest headlines.
Jim was right.
Live analysis, breaking news, and sharp trade ideas minute by minute.
He was right.
Action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Common insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest in trade on your own.
And if you want, they can even manage for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Trading Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills
with tailored
Just a few candles,
Get an
like,
expanding
just
library
from here to
filled
here.
with new online videos, webcasts, articles, courses, and more.
It's like 12 cents.
All crafted just for traders. And with guided learning paths, stacked with
Jimmy
content
warned
curated to fit your unique
that we were at a
goals.
resistance
You can spend
level.
less time searching and more time learning. Trade brilliantly with Schwab.
Don't miss
Yeah,
our
that little
one-on-one
wall there.
interview with Strategies Michael Saylor.
And those are all big numbers, 63, the 200s, and the 9. Those are all.
Pioneer of Bitcoin treasuries is on Market Overtime.
I haven't quite. There's got to be just one little secret,
The need to know
one little
info
purpose
on crypto.
that I haven't picked up yet, but I think I'm getting close.
Catch my full interview with Michael Saylor here on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Bartis, coming to you live from the New York Stock Exchange. We have reconnected with Dan.
Like
Deming,
everything's
and he's
under
an
the
example trade for us
63
from
and the
Micron.
200s
Dan,
and
we
the
can't
9,
we
which
can hear you. What's your
does that
trade
mean we're kind
for
of
Micron today?
we got a J hook pattern here,
Thanks, Sam. Sorry
or a
about the
cup and
technical
handle,
difficulties, sorting that out, but nonetheless,
Yeah, Micron.
Could just be the
big,
possible
move here to
reversal.
start the year, and when you look at the semis and you look at the storage,
See, we're
the
back
data
in
storage
27
areas
from
having a
17 to
strong move,
15
even with
right
the
there
market
from
giving back
27.
the gain early in the session. And when you look at Micron, it's hard to really fade this stock, given the fact that you see tremendous
Just like
upside
that, within two candles at 10 cents.
So today's trade example is to try to capture further upside in Micron, and I'm looking at buying a February call spread, the 310, 340 call spread, and then selling the February 270, 240 put spread to finance the cost of some of that call spread. You can do that for about $4 versus 306.
Oh my!
Further upside. If we do see some weakness
This is
over the
horrible.
next month and a half, then you have the opportunity to get put in the stock at a better level. But really, the idea here is
I don't think I've ever been so sick.
Okay, a good look
Well,
at
I have,
for
but
us.
I mean,
Outperforming today across the memory space.
continuous.
We are up 8% right now, 308 and change on the name. Thanks so much for that, Dan Deming. As always, Happy New Year to you. Hope you fix your tech gremlins today on this Friday. All right, it's time now to take a look at the sectors that are moving markets this morning.
We're
So I'm
about ready to
joined by
make
Kevin
resistance.
Hey, Kevin, a lot has changed, I suppose, since we last spoke this morning.
break
Obviously, we've seen a
resistance
little bit of a mixed picture. The Dow
Prepare ye.
picked up a bit, but the SPX lost a little bit of altitude over the last course of the hour or so. Talk us through your major takeaways on the day.
Yeah, that's exactly right, Sam. It's about as mixed as it can be. I've got 5 sectors lower, I've got 5 higher, and I've got communication services pretty close to unchanged on the day. What's up on the day? Consumer discretionary, consumer staples, they're both down. Healthcare's down. Financials and real estate are down. What's on the upside? Energy, materials, industrials, information technology, that's a good sign.
back at resistance.
And utilities are higher on the day. So, you know, this is a day that, yeah, you're right, not as strong as it looked pre-open and into the open. And so you've got Amazon lower on the day, I see. So I just think that this is a market starting the year much like it ended, kind of lost, looking for new direction. So
Spies at the VWAP.
You know, it's the old story, Sam. If you have 1 foot in a bucket of scalding hot water, 1 foot in a bucket of freezing cold water, on average, you're comfortable.
Yeah, I'll go with the hot water. I'm not one of these sort of ice bath type of people.
Spy VWAP.
Hey, look, you know what? You're right. I mean, you know, go back to what's working. You know, as far as you know, sitting here looking a bit directionless as we await for more confirmation on the data. I guess that's what the sort of thinking is here in the market today. But you know, as far as tech back in the driver's seat, that leadership very much taking the charge once again today. I mean, what's behind that? I mean, is this CES? Is this the Samsung story? Is this the memory chip story? Is this the China story? Or is it just more of a sort of technical thing playing out right now?
Yeah, that's a really good point, what you mentioned about CES.
33
It's
cents.
coming up in the next couple days. And you know, everyone who's anyone is going to be there and presenting. So I think the good news on NVIDIA and China H200 sales are starting to set in. So that's having a nice day. But yeah, I think CES to start the year is going to be really explosive for some of these names. Someone's going to make headlines. You know they're going to come out of there, Sam. You just don't know. We're not sure which ones yet, but the CES always puts out, and that is, since that's the sectors of this economy that are such in focus, yeah, it's going to be high profile from there.
Yeah. Look, it's kind of a weird day because we've turned a page, we're starting fresh, it's the new year, but it's Friday. So we're going to go off for a weekend again tomorrow, and it sort of feels like it's like the longest week we've had this year, you could say. I mean, that's factually correct. But, you know, as far as what's on the docket, we mentioned CES, some of the macro data. I mean, there's going to be some big sort of catalyst event risk on the horizon. Talk us through what's going to be standing out on your mind.
So forgive my 40 years in these markets, but today is still holiday markets. Until we get to Monday morning, that's when you're going to see all the eyeballs back on this market. And then hopefully we get a fair amount of economic data next week that we can trust, like the labor market, like ADP and JOLTS on Wednesday, jobless claims on Thursday, payrolls on Friday. Hopefully we'll get that in a timely and normal manner, and some of this data will get back to normal. That's what most traders are hoping for as we you know, as we march up towards earnings season on the 13th, but you just want the data to come out and be timely and not be stale, and have data that the market can react to, Sam.
Yeah, as you say, holiday markets a bit directionless, waiting for a bit more information, and sort of in wait-and-see mode, a holding pattern right now. Hey, thanks, Kevin Hinks, as always. Appreciate your time. Let's check in on how international markets kicked off 2026. We've already seen, as I've mentioned, records from London to Seoul. The FTSE getting off to a strong start to the year, breaking past that 10,000 level. We ducked below that just now, but that was the first time ever after its best year since 2009, rallying over 20% in 2025. Trading still a little bit thin on the ground out in Asia right now, with Japan and mainland Chinese A shares out of action, still for market holidays, but the South Korean Kospi outperforming, hitting a closing high thanks to Samsung's nice rally, as we've been talking about. Hong Kong was back in action with some big movers. Internet giant Baidu rallying hard after announcing it'll spin off its AI chip business, Kunlun Xin, and list it in the city. The IPO pipeline already getting off to a good start, though, with a newcomer on day one of 2026. AI chip designer Shanghai Byron is surging over 70% in its debut, underscoring China's push for domestic alternatives. And BYD has also been a standout for us this morning, meeting its full-year sales target. Chinese EV maker had over 4.6 million vehicles.
Doesn't matter what trade you're in, but if someone announces VWAP, you need to kind of think about it.
To its US counterparts. Coming up, it's time for Inside Out. We'll take a closer look at
Because
Nvidia
here,
and bring
5
you
minutes
some
later,
examples
these are
when we
down
get back
10
from that.
cents. Depends on what kind of trader you are.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring.
Well, that's
you can
right,
count on
James.
Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. It is the first day of trading for 2026, so let's check in on chip stocks. Here is the price action for the major players in that space.
Nvidia rallying up 2.5% right now.
Nvidia.
Almost 4%, Broadcom 3% higher, and Intel is our winner on the day, 6.7% higher after that nice rally we saw in 2025. So really that is the focus right now for us this morning, as tech is back in the driver's seat and leadership is back in action. Let's go inside out on Nvidia. Joining us now is Francis Newton, who's the editor of Scarlet Oak Financial. Joining me on the desk this morning. Happy New Year. Happy New Year. It's so nice to see you. It's great to be here. Hey, let's talk about Nvidia. Obviously, we're seeing it up in trade today. few catalysts for that. We were just talking about, obviously, CES on the horizon. That's going to be the big sort of event risk next week. We've had this Samsung news. They obviously like the memory. We're seeing some nice gains for the storage stocks today in double digits. Just talk us through what you're thinking about as far as this particular name this morning.
Yeah, so it's interesting. So we don't get a new earnings report until February 24th. But in the interim, we have all of this news. And the reason that NVIDIA is so important is because it's been propping up the market.
Yeah.
It's been the story behind the CapEx AI, which has been propping up GDP. So that's like not a small effect, right? So anyway, so the idea is that it's got, you know, it was NVIDIA or die. It was the only option. And so now these tech companies like Amazon's got the Trainium and Google's got TPUs, and they're coming in to compete with the GPUs of NVIDIA.
Yeah.
Now, nobody's going to take them over. They're 20 years in the making. They first came out in 2006. Can you even imagine that?
Wow, okay.
And so they're 20 years in the making, so nobody's going to really disrupt them. But if they peel away at some of the market share with a credible alternative, that could sort of temper the margins with NVIDIA. And that's kind of the best case scenario.
Can I just ask you something about that? Is that okay, though? Because Jensen Huang is saying, hey, look, we're sold out. We don't have enough capacity.
Right, so the supply constraints are going to remain. So what's very interesting is that this is the move that they did, the sort of soft acquisition or whatever we want to call it with Grok, because he's got to get embedded quickly into the other parts of that AI stack.
Right.
In order to it's not that they're going to overtake NVIDIA, it's the narrative. And we all know how markets love to price narratives, because you have people like, you know, more me than you up here, you know, talking about these things. But so he's got to get into other parts of the tech stack where, you know, inference is the big, you know, thing. So if they're able to, the only thing is that, so market participants like to price things in advance. So if we flop over to these other sort of competitors of NVIDIA a little too early in a market pricing event to try and get alpha out of that, that could be a little tough on NVIDIA. The other risk that they have going forward in 2026 is the interesting financing that's going on with sort of the lease debt structures where they're sort of leasing things, but it's not on the balance sheet. The only reason that would come into, you know, that's being done in the space. The only reason that would be problematic is if we have some kind of rate shock credit situation, which would go, okay, let's look at this interesting financing and see how viable it is, and does that support earnings?
Is NVIDIA the problem here or the concern here? Because, you know, it has the cash. Is it more about the circularity and everybody that it's holding hands with in the circle? That is the concern, because if one falls over, this is how someone described it to me, then the rest kind of fall down as well.
There's that, but the thing is when you're on top, everybody goes for you. If you are the most profitable, and all of these companies are now chasing NVIDIA's market share by creating these alternatives to the CPUs and GPUs. And so even if they were to peel off a little bit, it's not that it's going to kill NVIDIA. Nothing's going to kill NVIDIA. It's just, does it put pressure on the margins? What do the multiples look like? What does credit look like? What's the overall market? And I would say the credit risk, I mean, obviously spreads are really tight right now. The credit risk is going to be linked to liquidity, and that's going to remain quite high. And so, but then, you know, risks you have is 90% of the consumer comes from the top 10% of wealth in America. So 90% of the consumption comes from the top 10% of wealth. So is that vulnerable at some point? Those are sort of the risks at hand. But anyway, just looking at the chart, because all of these acronyms will put anyone to sleep. You know, I didn't drink over the New Year, but looking at acronyms could give me quite a hangover. So, you know, just looking, it's above the 50-day moving average. It's got some resistance. It's got double top resistance at that 195 on either side of the all-time high. And just watching that, if it puts 195 in the rearview mirror because we have a market rally, we could test the all-time high. Otherwise, it's probably going to be pretty range-bound until we have some news, unless DeepSeek interrupts or earnings.
That's right. Okay, something to watch out for. But we are still within arm's length of those all-time highs, as you pointed out on the charts. Hey, Frances, thank you so much for joining me today. It's been an absolute pleasure seeing you. We'll catch you next time.
Yes, perfect.
Awesome stuff. That is Frances Newton, who's the economic strategist at Scarlet Oak Financial. Let's trade it now with George Tillis, the senior markets correspondent. Happy New Year to you, George. An example trade for NVIDIA for us this morning.
Yeah, happy New Year to you as well, Sam. Thanks. Yeah, looking at NVIDIA, obviously it's retracing back off of its lows over the last couple of weeks, still below the October levels, but nonetheless, there is positive price action and positive momentum. So that possibly could carry through as we move into the beginning of the year. It looks like there's appetite for risk taking, at least so far today. Things can certainly change, but nonetheless, the stock has now reclaimed over the last week the 20-day moving average. So I'm going to use that as a proxy support for a trend continuation here, at least in the short term. And so I mean by short term, this is a 2-week trade. What I'm going to do is I'm going to structure, because there is some volatility in the name, what's called a long synthetic combo. So basically, I'm going to go out to the Januaries that expire on the 16th, again, 2 weeks, and I'm basically going to buy a 185 call, which is in the money, and then I'm going to essentially sell essentially the 185 put, which is currently out of the money. So that's essentially a 2-legged structure. Now, altogether, this would cost you about $5 a share in debit or $500 a contract. So the whole premise behind the trade is it's a synthetic combo.
Getting close to lunch.
As a long stock position, but your outlay in case of 100 shares is certainly less than $18,500 if you were to purchase the shares outright for 100 shares.
Snake breakout pullback. We're going to find out.
If you trade this is 190, so it has to hit 190 or higher by expiration in 2 weeks. Lastly, you have to consider the risks, and it does have unlimited profit potential. That's the first thing to keep in mind. But the risk is if it drops below the short strike, the short put 185, you'd be assigned the shares at 185, but you have to take into consideration your cost basis of the trade of $5. So that's, again, 190 would be your break-even level. So if you do get assigned the shares, you do have risk just like you own 100 shares at the downside.
It's too scary.
This morning we're trading up almost 2% higher, 190 and change right now on the name. Thanks so much for the example trade for us today, George. I'll check in with you later. And that's going to do it for us here. And we are, of course, looking at up arrows across the board, although we have come off the highs. Thanks so much for joining me on Morning Trade Live and Opening Bell. I'm Sam Butters. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. We've got Trading 360 coming up next. I'll catch you later on Market on Close.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing up houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm here. I'm here. Well, what to expect of 2026? I'm not quite sure. I was kind of with the camp of, oh God, here we go. Oh, in 2025.
Happy New Year, good morning, and welcome to Trading 360. I'm Alex Coffey in for Marley Caden, coming to you live from our Chicago headquarters. We've got a lot to get through. Coming up on the show, we'll have our 360 spotlight on crypto and what that landscape looks like in 2026. We'll be joined by the CEO of C1 Fund for that. Our disruptor today is Apple. George Chellis will join us, go through some of the stories driving the action in Apple, and look at an example trade. Then we'll close the show with our 360 round, and we'll discuss all things the Federal Reserve and the path they may take in 2026.
There's a knife.
Before we get to all that, let's take a
I'm
look at
about
the
ready
market,
to jump into
because
that
things
trade
did
too.
just turn red in two of the most important market benchmarks on the planet, the S&P 500 and the NASDAQ 100. After opening the year with quite a bit of strength, some interesting things started to happen under the surface. Earlier, we were up about 40, 45 points in the
We need to consolidate sometime.
Yet, if you were to look under the surface, the market performance has
I think this kind of happened under Biden.
Interestingly enough, we had about
that first year, and then the second year came.
Earlier, it's now closer to 60%. But that mix has shifted and led to the math leading to a red S&P 500.
We had a disaster in the market.
Areas of the market we watch, you do see an uptick in the 10-year yield.
Tesla was down like at 110.
Dollar index continues
GM
to kind of,
down at
straddle the 98 mark.
Boeing down at 125.
Weakness here today. The gold market has completely given back its gains as well. It is almost perfectly unchanged.
Video was under 100. Meta
continues to slump after
then they all just ran like 6, 7, 800,000, 1,200, 2,400%.
February crude contracts, so something to watch there as well.
Just out of the blue,
Bitcoin,
nothing changed really.
A topic of discussion in just a bit. During our 360 spotlight,
it just printed a lot of money.
A healthy 2.2%.
Real fast.
Let's shift gears, though. Look overseas.
More than I could ever remember in a short period of time.
A near 13% rally. We do see Baidu on the move, and for more on the reasons behind that move, we welcome in our first guest of the program and in 2026, Mr. Kevin Green, senior markets correspondent for the Schwab Network. KG, Baidu. On the move big time here today, but kind of an interesting reason driving this, not maybe the typical headline we wake up to.
Yeah, definitely. We're seeing the shares up about 12% and hitting a key area of resistance. Let's see if it's going to be able to break out to the upside here, but we have gotten reports, and it has been filed that they are going to spin off their AI chip unit. This is going to be a hardware chip unit here, and it could be IPOing here on the Hong Kong exchange. So this is actually a very interesting development. I think you are probably seeing some optimism, not only because of the spinoff, but also unlocked value for Baidu as well. Sometimes you have
NVIDIA.
Some portions and segments of their business might be a little bit more undervalued.
I don't know what they were getting ready to talk about.
So this might be a little bit of optimism here. Now this kind of aligns with the fact that China is still trying to focus on AI chip production in-house, and this could be a major player within that space. Also, its ability to kind of raise capital can also then expand their overall operations just in general here. So you're getting a lot of excitement around this situation right now. You are seeing Jefferies actually raising their price target on the shares to $181. That's up from $159, and reiterating their buy rating on the shares here. Once again, citing valuation and upside potential when it comes to earnings multiples in the future could lead this name a little bit higher, even a lot higher from where it's currently at right now. now. So that's some of the optimism here that we are seeing in the chip space and why we are seeing the stock up over 12%.
KG, real quick, I think that was a good breakdown of kind of what's going on with Baidu, but I do want to get a quick market thought from you if I can. Some strength out the gate. Kind of a more narrow rally when we saw the thing open to start the year. And then we see the strength start to build up under the surface, yet the market turns around. What do you make of that? Is this just kind of early year trade, don't make too much of it yet, or is it alarming?
I wouldn't say it's alarming. It's the first day of the year. We did see a distribution day for the last trading day of 2025 as well. We started off with Mag 7 showing some relative strength this morning, but obviously we have seen some selling pressure here, especially when you're looking at Microsoft. You are going to be concerned Microsoft is the reason why we are seeing the dramatic drop to the downside here, or at least early on, right? Some of the other Mag 7s are actually catching up here. Volatility has been actually relatively cheap, Alex, so we are seeing volatility kind of re-rate a little bit higher. Liquidity is starting to come back into the market. But we are seeing this kind of rotation trade taking place, and it's just the start of the year. But I think I'm a little bit glad that we are seeing some volatility. It gives us intraday traders some opportunity both to the upside and downside here.
Yeah, to your point, Microsoft, the biggest contributor to the weakness today, contributing about 9 points worth of S&P downside. Amazon in second place with 6 points. NVIDIA, the best performer when it comes to contribution, contributing about 6 points of upside. So interesting dynamics in some of the trade under the surface. Kevin Green, always a pleasure. Happy New Year. I'm sure we'll talk more as the year rolls on. So say goodbye to KG. We'll welcome in our first guest. That is Jed Ellerbrook, Portfolio Manager from Argent Capital Management. Jed, Happy New Year to you. Quick kind of thought, I guess, on how the market closed out 2025 and is beginning 2026, and what you make of it.
Yeah, good morning. Happy New Year. Today looks like an infrastructure day to me as it relates to AI stocks. NVIDIA's up, Marvell and Broadcom, a lot of the industrial AI exposure companies are up today. Vertiv sticks out to me up 7 or 8%, Comfort Systems as well. So, and then software on the other side down quite a bit this morning, almost across the board. I think that explains the Microsoft comment you made earlier today. You look at Salesforce.com, see pretty material declines here this morning too. I think it's just overall it's a holiday trading day, light volume most likely. We'll all re-engage here over the next couple of weeks as earnings begin, and that's really going to tell the tale, I think.
Jed, I glance over your notes.
Yeah, I see that last year.
First things within them, favorable equity market setup for 2026. You want to elaborate on why maybe you feel that way in a time where there doesn't seem to be a lot of bearishness, but maybe not as much optimism as we've seen in recent years.
Yeah, it feels kind of strange being optimistic about the stock market after 3 really big up years in a row, but that's where I find myself based on decent economic growth, decent GDP growth, but a really big AI infrastructure cycle going on, continuing, getting stronger by the month. It seems all the demand signals remain very strong. And then you also have opening up of IPO activity, increased merger and acquisition activity too. Equity markets near a record high, credit spreads are tight, the Fed reducing interest rates, perhaps quite a bit depending on who the next Fed chair is. I think that's probably the biggest swing factor in 2026 is the Fed and interest rates. But yeah, you add up all those factors, I think it's a pretty strong, environment for the U.S. equity markets. And I think the risks or downside, the flip side of that is valuations are a hair high, and inflation has been a little stickier than we all would like.
You mentioned the Fed and some of the shakeup in leadership that we're going to get in the next several months, but beyond that, what are things that you're monitoring to kind of confirm your feelings going into this year? Is it the rate of CapEx from the hyperscalers? Is it going to be credit spreads? Is it earnings growth? What are some of the metrics that our viewers could jot down right now if they're looking for a handful of things to monitor to see if we're on that path?
Yeah, estimate revisions. So EPS estimate revisions are always a big focus area for us. The S&P 500 is expected to grow its earnings in 2026 about 14%. So I'm curious how that will, either trend up or down over the next handful of months. And then I think the biggest fundamental indicator will be the CapEx plans of the big 6 hyperscaler companies. So watch for Microsoft, Amazon, Meta, Google, CoreWeave, Oracle, earnings announcements and what they're planning on doing with CapEx. I think CapEx estimates are going to continue to be revised higher, and that's fuel for this AI investment cycle. That's fuel for NVIDIA and Broadcom and Marvell and all the industrial companies that help get those data centers up and running.
Jed, as a portfolio manager, I'm sure you're faced with the question of how much allocation to the big hyperscalers do I want within a portfolio? Where do you land on that? Are they just must-own kind of liquidity sponges? Do you feel like you need to be overweight them because of where their investment is in terms of growth within AI, or where do you fall on that?
Yeah, we are overweight Google, Microsoft, and Amazon. Amazon is probably our favorite idea today. We like those 3 big hyperscalers because their revenue growth is accelerating. I think they're proving a positive, strong ROI on their CapEx investments. We see that in the margin trend. We see that in the revenue growth acceleration. We see that in revenues growing double digits while the employee counts are largely stable or up just a bit. So, that cloud computing group, sometimes called the hyperscalers, is probably one of our favorite areas to invest today, and we are overweight all 3 of those companies, even though they are big weights in the benchmark.
And so I'm sure that's obviously a critical piece to performance, whether you're benchmarked to the S&P, whether you're invested in it. But beyond that, as a portfolio manager, I'm sure we're on the margins, the outperformance and underperformance is the next question, which is where else are you looking? What parts of the market that are maybe underappreciated or less covered stand out to you?
Yeah, TransDigm is a favorite of mine in that category today. The company just announced a decent-sized acquisition last week. Investors have been concerned that the company doesn't have remaining merger and acquisition targets that they can complete as they've grown larger over the last 5 years. I think that argument is incorrect. The company does have merger and acquisition opportunities, and in absence of those, they will simply pay out large special dividends to shareholders, which we've seen many times over the last 5 years, including 3 or 4 months ago. TransDigm benefits from very strong core end market demand. Their 3 big core end markets are commercial aerospace. Boeing is ramping up its deliveries. Commercial aftermarket, the airlines running those planes full and quickly, keeping really high load factors. That's a positive indicator for aerospace aftermarket demand. And then finally, the defense market. The U.S. defense budget is growing double digits. So all 3 of those end markets doing well. Merger and acquisitions are going to contribute, and special dividends will get the leftovers. And I think that formula is going to be a positive for TransDigm shares.
Really appreciate it. Great start to the year here on Trading 360. A good look at what to expect for 2026. That was Jed Ellerbrook, Portfolio Manager for Argent Capital Management. We're going to take a short break. We get back. We'll be joined by Rick Ducat and Tim Bowen for our Big 3. We'll look at MU, Exxon, and Rocket Lab right after this.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute
minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, opening bell live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Trading 360. It's time for the Big Three. I'm Alex Coffey alongside Rick Bucat, lead market technician for the Schwab Network. We also like to welcome in Tim Bowen, who of course is the chief technical trainer on StocksToTrade.com. Tim, happy New Year. Good to see you, my friend. Let's talk big picture market-wise. If you got a thought, weird turnaround or just classic first day of the year?
Well, first of all, thank you for having me back, Alex and Rick, and hope everyone had an amazing Christmas and a Happy New Year. But yeah, I mean, kind of like you said, I don't read a ton into the shakiness today. I mean, the reality is, I mean, flat out, we have that midweek holiday, and then
188.18 the video.
A lot of people traveling, a lot of people are just not
We had
really.
3 white soldiers.
I'm looking at mostly what I trade and day trade day to day is small caps, volume through the floor. Just I don't think there's that many buyers out there. Now I think that will change next week. So when I see these pullbacks, I don't really read anything into it. Really, it's just a lack of market participation. But when it comes to the next year, just crazy bullish. I just love the explosion of retail. I was reading a Wall Street Journal article yesterday, just the massive amount of retail traders, basically taking over the market, and that excites me. I'm a retail trader myself. We primarily, 99% of our clientele at Stocks to Trade is retail traders, and I just think of it as really the power to the people, for lack of a better term. And, everyone talks about the days of COVID and being kind of a one-off with Wall Street bets and all that, but I think it's the new normal. And I just think because of that, a lot of those traders just aren't in the market today. But I expect a big week next week and an absolutely massive year into the midterms.
I love that point, Tim. I mean, with the democratization of finance, it's never been easier for someone to gain access to the marketplace. The education from people like yourselves, the things that we're doing here on Schwab Network and beyond have never made it easier and more accessible in my mind. So I think that's a really good point, and it's certainly had its effect, and we're seeing that in real time. But I want to get to some of your stock picks that you brought for the viewers here today. And the first one is Micron. So in many ways, I guess, picking up where 2025 left off, you're looking at one of the big winners from last year.
Yeah, so this is an idea I've shared a couple times on Trading 360, and you can kind of map it up. It's been doing really well. And I just look at it like, I think this DRAM story is far from done. I'm actually glad, I run a Mac Studio computer. It's got 128 gigs of RAM. I'm glad I bought it about a year and a half ago, because it'd probably be about $1,500 more if I bought it today. But, the simple reality is all of these AI plays, they need memory. They need massive amounts of memory. And Micron, going back to the 90s, back when I had my computer company and internet company back in the 90s, we were using their technology. They were always the most well-respected DRAM name 30-plus years ago. They're still that. And I just think when you've got that insatiable demand for the product, and they're one of the best, I mean, the stock's just going to continue to trend higher for quite some time.
Yeah, Tim, maybe the commodity of the 2020s and beyond is data, so having a place to store that data might be pretty critical. We're going to take a look at some of the technicals with Mr. Ducat here. Rick, as Tim said, pretty clear when you look at this chart. It's been a winner, but as we look ahead, is it accelerating from what you can tell, or is this just one that's just been steady in its outperformance?
We can see that we had this breakout to the upside, and it's a quiet day to kind of piggyback what you guys were saying, kind of a muted volatility day here. But we're seeing this strong push to the upside into new highs. We're near the highs of the day still. We're near the top of this short-term channel that you could draw. One trend line conventionally going across these lows that we established here, duplicated, put it across the highs. I would be very interested to see what happens if we do start to reach the upper edge of that boundary near about 315 or so roughly. But to the downside, if you were looking for some prominent horizontal areas, we had our old highs here near about 257 and our old highs here near about 265. So if we do get some kind of pullback, which is a common situation that happens after a breakout, the stock could pull back to prior resistance levels that then become supportive. Those could be some areas to watch. Not saying that's going to happen certainly, but just saying that would be the areas that traders may be on the lookout for first. We can see our weekly 5-day EMA here in blue, our exponential moving average, coming in near 292, 293 roughly. That lines up with our trend line, so that could be a potential breakdown point. Monthly EMA comes in near 266 in teal there. And as we were saying for momentum though, a pretty interesting situation because we've broken above this longer term downward sloping trend line. Now we're making new relative highs and we're pushing into the overbought area at the same time, often regarded as a sign of strength in a trending market here. So pretty interesting development for this name that has already seen such strength during this past year. Volume nodes, the places to look out for in terms of heavy trading activity in the past, 240, right around this area here, and then below here, near about 190. I'll notice as well, too, very heavy volume after earnings.
Still down there at the bottom.
We had our gap to the upside, often suggests high conviction on the part of traders.
Yeah, 1 year for Micron as we saw the AI chip trade expand into some of these memory stocks. We'll see if 2026 can continue along that same path. Now let's shift gears. I was just saying, hey, maybe data is the new commodity, maybe it's the new oil, but let's talk about the original. Let's talk about oil. You were looking at Exxon here, Tim, as we go into 2026. You say it's the year of drill, baby, drill. We'll see if that happens. What's beyond that in terms of performance things you're looking at here for Exxon?
Well, I'm a big believer that it all comes back to energy. At the end of the day, I mean, the world runs on energy. Obviously, the AI case is, I'm very bullish AI. I haven't changed during any of this kind of bubble stuff. But, the reality is that you can't run any of this stuff without electricity, without energy, etc. And when I look at the biggest name, now this is probably the slowest moving idea I have for you guys, but I just love this one as a safe play as well. But when you just look at the explosion of energy, if the situation in Ukraine ever comes to an end, I just am a big believer in a massive market or massive economic expansion over the next few years. And I just go back to what I said, that everything runs on energy. It doesn't matter if it's this, this broadcast, or if it's an AI, or if it's anything. You can't expand the economy without energy. What do? You start a fire and try and burn something off of that. Like, you need oil and gas. And I mean, at the end of the day, I think we've had kind of this pullback from the green energy idea. I think that kind of got ahead of itself. So we go back to oil and gas, and I just expect Exxon to continue the trend as it has.
We don't need it.
To be a massive winner. But for those that are risk averse, I think that this could come back, this summer, this fall, and you'd be very happy that you put some Exxon in your portfolio.
Tim, real quick, before we look at the chart on this one, my question would be, what would you have to see to maybe scrap this idea, given that this one isn't maybe as clear as the Micron thesis? Oil's been kind of stuck in a rut as a commodity. Quite frankly, I think the Exxon chart looks better than oil, but what would you have to see to maybe say, hey, maybe I was early on this, or maybe my thesis was wrong?
Well, great question. Thank you. To me, really, I think that this stock is one of those that has benefited from the century rule, they call it. These stocks that break $100 tends to bring a lot of interest, bring a lot of buyers, because they're like, oh, look at that stock over $100. It's obviously at 120 right now. If this can kind of just start to stall out, grind sideways, and head back towards 100, then I'd call it a busted idea. I think that would be a good stop loss, because if it breaks 100 and you had all those buyers that piled in because of the century rule, they're probably going to be sellers at 100. That would be the point where I'd say, you know what, this one was wrong, cut it, move on to the next idea.
And with that, Tim, we'll take a look at the chart, Rick. Where does that $100 mark come into play here, if it does at all, based off what you're looking at here on the tacticals?
Yeah, sure. $100 was back here. That was actually a relatively low point for this particular time frame. And as Tim said, this is more of a slow burn type of a move here. And I got to say too, I definitely don't see wood burning stoves powering the AI computers of the future here. So obviously, that's kind of a funny thought. But I would say too, though, that we can see that we had a consistent ceiling here. 120, if we were to backtrack, that was an old prominent intraday high. Then we had a very large collapse here after the tariff news shock. We had our lows 97.80. From there, we hit kind of a resistance area. We had this area near where our gap opened up initially, 115 to 117. You can see this was an area where price struggled to break above many times. But what I really noticed, though, is the gradual grind upward, the higher sloping trend line that we've seen here. Now, that 120 level, we have pushed above that point. We topped out 120, 180. Then we backtracked. We tested the old resistance that became supportive. You can see now we are having another nice green day here. But we are near the boundary line that you could draw here, this blue trend line. So by one measure, you could have a channel between the two white dashed lines. By another measure, you could think of it as a rising wedge type shape with the blue line being the upper boundary. So an interesting situation we find ourselves in regardless here. Our 21-day EMA near our teal line here, 118.64. That seems like one place to look for possible slowdown. But our quarterly EMA in yellow here lines up pretty closely with our trend line. That comes in near 116.50. RSI still trending upward, but the trend line that you could draw has been somewhat broken here. But watch to see if things stabilize and we get that push to the upside again. Finally here, we can see our volume profile study. All the heavy trading activity is way down below current price activity. In the more area that's more relative and current to where we are now, 120 to 118, that's kind of where things start to really pick up to the downside here in terms of trading activity. So that could be a further emphasis on this as a supportive area.
Good stuff. As we bring back in Tim and we go to the other end of the barbell, if Axon was meant to be the slower moving, lower beta stock, we're way out there now with Rocket Lab. But you got some exciting thoughts when it comes to space and all the things that are going on, perhaps 2026 being a big year for those names. Talk us through Rocket Lab.
Yeah, listen, I think that in my opinion, the biggest theme of the coming year is going to be the space-related stuff. Now, I will admit, I'm a little biased. I grew up in the 70s and the 80s, kind of the tail end of the space age, the shuttle program. I remember being, a young man and thinking that we were going to have bases on the moon and bases on Mars.
Or KLB.
2000. Unfortunately, we lost our way with a lot of spending all that money on endless wars and all this waste of time stuff. But now we've got Elon, and we've also got President Trump talking about the expansion, whether it be to go back to the moon and build nuclear bases, which I know sounds crazy, but, in AI data centers in space, I think that maybe all those dreams I had as a 10-year-old in the 80s are actually going to come to fruition. And what I like about Rocket Labs is it's kind of one of those sexy names, as we say. It's kind of been a meme stock here and there, kind of there with Oklo. Like a lot of retail traders really like this stock. And then you add on all of this anticipation of the SpaceX IPO. I mean, I remember the first day that was announced. I mean, people just hit me up. What do I do? What do I do? And I was like, wait.
RKLB.
Away before this IPO happens, but there's that much interest. And when we talk about, like you mentioned, these more speculative ideas, the more people are fired up, the more people are interested, the more people are buying the stock. So I think Rocket Labs is that good intersection of speculative, but also a real company that kind of fits the role of kind of a short-term speculative swing trade.
You know, Tim, my biggest takeaway for 2025 was the importance of story and narrative when it comes to stock picking and equity trading. And this one, you lay out the story. So I appreciate that very, very much. Rick, let's real quick go through the chart here. It's been such a nice performer. Volatile, of course, but one should expect that with this type of name. Walk us through the performance.
Right. Range-bound trading, breakout to the upside, retreat back to that level near 40 to 50. Then megaphone-type pattern, broadening triangle, expanding price boundaries here, more difficult price activity, more volatility in this name. But we're holding on near 69 here, those old high closes that we saw. Same deal, breakout above old resistance. We touched on support, we're holding on for now. Look for a breakout above that 79.80 level for further upside potentially.
Good stuff, Rick Ducat, Tim Bowen, really appreciate both of you. It's going to do it for the big three. We're going to take a short break. When we get back, it is time for our 360 Spotlight. We're going to take a look at crypto and all things within that marketplace and what to look for in 2026 right after this.
Now 10:30.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Alex Coffee in for Marley Caden. It's now time for our 360 Spotlight. And for that, we welcome in our next guest. That is Najam Kidway, the CEO of the C1 Fund, to discuss the landscape and outlook for digital assets into 2026. But Najam, before we get to 2026 and beyond, you want to do an exercise with you. Let's look back to 2025 for all things crypto, digital assets. Seemed like a step forward, maybe in the maturation of these assets, but maybe a step backward in terms of price and performance. What did you make of 2025?
Hey Alex, thanks for being on the show and happy New Year. And I think 25 was a great year, right? We had a lot of regulatory clarity in the US with the Genius Act being put into place. We saw several IPOs actually happen in 2025, including Circle, Bullish, Figure, Gemini, eToro, 21. So it was a year where you had quite a few IPOs in the digital asset space, and I think they were relatively well received by the market overall. And I think that bodes well for 2026, and particularly with the sort of regulatory framework now being put in by the Trump administration. It shows that this year should be a stellar year for crypto IPOs.
You know, and as we get into that outlook for 2026, particularly amongst companies that are going to seek, access to public markets and beyond, another thing that stood out to me in 2025 was a lot of these kind of crypto mining-centric firms also were in the right place, right time with the tremendous demand for power and data centers. How much is that going to factor into things as we look ahead?
I think, look, that is going to continue, right? The demand for energy, the demand for data centers, the demand for AI. There's going to be a lot of cross-pollination as well between digital assets and AI. So a lot of that is going to drive compute, mining power. So there's going to be strong demand for that, right? And as we see the spot Bitcoin ETFs and all of the products where you can get exposure to Bitcoin are going to increase, mining requirements for crypto.
As we look ahead then, and we talk about some of these companies that are maybe going to tap public markets through IPOs and other processes to increase funding and increase access for investors, what are the kind of firms are we looking at in this space? Are we at a point now where the amount of projects or the amount of different firms fulfilling different things within this space is going to consolidate, or are we still in a rapid expansion phase?
It's a great question, right? I think you're going to see companies like Kraken, Consensus, BitGo, Animoca Brands, Securitize, Ledger, and a bunch of other companies that have sort of given indicative and filed respective paperwork to go public this year. And I think for investors, things like exchanges and trading platforms, right, are going to definitely see exposure in the public markets. You're going to see stuff like financial infrastructure and custody, right, that provide settlement and institutional infrastructure like BitGo. They're also emerging as public candidates, right, giving predictable service revenue and integration with institutional workflows. You're going to see stuff. Larry Fink's been talking a lot about RWA and tokenization and real-world assets, and I think that's going to become mainstream. That's not on the fringe anymore. And then you've got, digital asset managers like Grayscale and public entities focusing on digital asset companies. And obviously the company I run, which is the C1 Fund, which gives investors exposure to companies like Kraken and Ripple and Alchemy and others, where investors can get exposure to those companies and while they're still privately held.
Naj, as someone who spends a lot of time, I'm sure, thinking about what the future might look like in this space, a year from now, let's say we were having this conversation, what do you think we're talking about?
I think we're talking about hopefully a stellar year in 2026, right? A bunch of those companies that I talked about will have gone public. You're starting to see institutions continue to increase allocations to this space. Around infrastructure, there's going to be compliance-centric offerings, and companies that are building real infrastructure like custody, wallets, developer tools, exchanges, real businesses with real revenues, right? I think profitable as well. Companies that have cash flow, that are focused on regulation and compliance, that have business model transparency, right? They can clearly articulate how digital assets contribute to a long-term, sustainable competitive advantage, and not just sort of short-term price action. And I think you're going to see a lot of companies actually have, predictable revenue streams, right? Not just sort of short-term price action. So in a year's time, you're going to see institutions really get into this space. I think, for the last year or so, banks were still on the periphery of should I get into this space, but you've seen people like Morgan Stanley now, Bank of America, Merrill Lynch, all of these guys saying that you should have between 2 and 4% of your exposure to digital assets. That number will only grow, and I think banks and institutions that are not now in the digital asset space are going to get left behind.
Yeah, it does definitely feel like there was some sort of a tipping point that was reached, and we're on the other side of that now. But Najam, we got to leave it there. Really appreciate you taking the time, and Happy New Year to you as well. That was Najam Kidway, the CEO of C1 Fund. We're going to take a short break. When we get back, it is time for our Disruptor. And today, we're looking at Apple, as Apple continues to make news headlines and disrupt the world of tech. We'll be joined by George Tillis as he'll go through some of the news and look at an example trade right after this.
Bitcoin at 91,000 and 1,100. That's for you, Bitcoin.
Stay connected to the markets with the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Alex Coffee in for Marley Caden. It's now time for the Disruptors. We're joined by George Tillis, and we're discussing a company that's been doing some disruption for quite some time. That's Apple. Maybe they're not the first to act these days, George, but when they decide to step into a market, they tend to do it well. That said, who could have seen the Vision Pro headset and these VR headsets maybe a bit of a flop? George, no one could have ever predicted that.
Well, I mean, there's questions about, virtual reality, these headsets, and we know that, Facebook or Meta Platforms has launched the Oculus platform, and they've had some mixed success, but nonetheless, Apple did launch it. They actually had quite a large unit sell base in 2024, around 390,000 units, but if you look at some of the numbers for Q4 of last year, which just came out, they're running around 45,000 for the quarter, which places the annual run rate down.
I'm feeling the bullish in it.
180,000 for 2025 versus 2024, where they sold nearly 400,000 units. So they're actually cutting back production. That's to be expected considering the lackluster sales based on last quarter's results. The other thing is there's some questions about what's going on with the business. I think one of the reasons the stock is actually performed quite well this year, respectively, is that it was more spendthrift in terms of artificial intelligence, which seems to have been rewarded for that, especially in the last 6 months of last year, where we saw the spend-heavy names, companies like Meta Platforms, actually perform quite poorly because of too much capital investment in artificial intelligence. And I think the sticky ecosystem for Apple really makes for a steady-state growth in terms of earnings and sales. And sales are really only estimated based on consensus at around 8 to 9% in terms of sales. And this is what Raymond James is also looking at, where earnings growth is actually relatively stable in the high single digits as well.
Raymond James is looking over there?
Raymond James actually came out with a note. And this is also interesting. If you look at their rating, they had an outperform rating, now they have a market perform rating on the stock. They didn't actually assign a price target on the name, which is quite unique. But nonetheless, they actually see the stock right now trading around 31 times 2027's earnings as potentially at fair value. So they're not saying it's a sell, they're not saying it's a buy. They're basically looking for essentially a situation where the upside is limited for Apple. Irrespective of that, the unit growth they're estimated for iPhone is around 3%, and if their sales growth estimates are 8%, gives you an idea that they're generating more scale on the unit devices, but also on the periphery areas, which have been growing quite well and nicely for Apple, including services and, of course, their entire ecosystem.
That was Melissa Fairbanks over at Raymond James, and I respect the work that all these analysts do. It's a tough job trying to predict the future, but you can't be wrong if you just say it's going to basically do what the market does, and I have no price target. So perhaps an indication of sort of the uncertainty as we turn the year. But you got a chart you want to look at, George, and you got an example trade. You want to walk us through what you have for us?
Sure. So, I mean, look at how the markets performed today, Alex. We had a really nice run up early, and they rug pulled us as we moved throughout the day. So I suggest that there's probably going to be a lot of volatility until we get a reestablished direction in the market, because the market, at least in the NASDAQ, has really been drifting slowly to the downside off some of the highs we saw back in October. Apple also, if you look at it price-wise, there's a confluence area of price relative to the 50-day moving average. It seems to be trading slightly above to slightly below. So in case it does fall below that, I think the next level may be the 100-day moving average, as of course Apple may drift lower alongside the market trying to find some footage. So what I'm going to do is I'm going to structure a neutral bullish trade with a drift to the downside in mind. I'm going to go out to February with 49 days to expiration. Very simply, I'm going to sell the 260 cash secured put. Now altogether, by selling that put, you could harvest around $5 a share or $500 a contract. So the premise behind the trade is very simple. The max profit of $5 is achieved if the stock trades above the 260 level by the third week of February. And again, that corresponding price is right around that rising 100-day moving average. So that's why I'm structuring it this way. But also, that 260 put yields essentially about that $5 premium. And the statistics around it, around 30 delta sold, implies about a 70% probability of profits by expiration. So it doesn't mean it's actually going to trade above it the entire time by 70%, because you can certainly see that drift lower. But nonetheless, there's about a 70% probability of expiration of the money, and that's what you want to see in this trade.
You know what's amazing, George? I was just looking. We've had about $7, $8 turnaround intraday in Apple, and kind of this ho-hum, quiet holiday trade. You do the math. I mean, we're talking about over $100 billion in market cap. So $100 billion just isn't what it used to be. Is that just another day for some of these AI and big tech stocks?
That's right.
Just
another day.
Trade. But George, tell us, always a pleasure. I appreciate the insights. That, of course, our disruptor being Apple. We'll take our final break of the program. When we get back, it's time for our 360 round as we'll preview 2026 outlook for the Federal Reserve, changes in leadership, monetary policy path, and more. We'll be right back.
Give me the bottom of the bear flag.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Curious about how companies are performing heading into quarterly earnings, or how the macro environment is influencing the markets, or even specific sector performance and how they're faring? Connect with me on social at Marley Caden.
Welcome back. Time for our 360 round. For that, we welcome in Jeanette Garrity, Chief Economist and Managing Director for Robertson Stevens, as well as Chuck Lieberman, the Co-Founder and Chief Investment Officer for Advisors Capital Management. Chuck, I'll begin with you. As we start to look ahead to the path of the FOMC for monetary policy in 2026, probably important to look at where we left it in 2025. What did you make from the latest FOMC meeting, and then, of course, the subsequent minutes that were released just last week?
Yeah, it's clear they're very divided. They're trying to figure out how to proceed. Some of them would like to lower interest rates some more, and others are looking at the data and they see the economy doing pretty well. Inflation is not anywhere near their target of 2%, but the first group is, I think, engaging in some wishing and hoping that it's going to move closer to 2% and therefore justify more rate cuts. But that may not happen, and the others want to see the data first.
Jeanette, as Chuck mentions, data and the trajectory of the economic performance of the U.S. is going to be the big question mark that probably gives us the answers to what the Fed does. How do you assess that in 2026 in terms of all of the different factors, from GDP to inflation, and then all these tax implications as well?
Getting old.
Well, Happy New Year, Alex, and I'll tell you, I'm looking forward to a year in which we can put behind us all this delayed and questionable data that we had to deal with at the end of the year, which is what the Fed is dealing with.
Exactly.
Data provides some answers, but for this Fed, the Fed has set itself up as being data-driven for a long time. So yeah, it kicks us back to that, and the question I have is, what data they're going to have by the next meeting that is going to really minimize the dissent or bring the FOMC together in agreement of what to do about interest rates.
Who's this chick?
We're going to
give her an A.
Employment numbers at the end of next week for December.
Good point, baby.
That's great, but I don't know that anybody at the FOMC really believes that what they do with interest rates is going to solve any perceived weakness in U.S. labor markets. So it's back to this issue of inflation, and those numbers are still sketchy. So, per what has just been said, that it's not at the 2% target. They are committed to the 2% target. I think it's going to be a tough one for them to do anything other than say, let's take a breather and wait for another month worth of data. But politically, that's dicey, as we all know.
Jeanette, how important is the next Fed chair and who that is in terms of determining this path?
You could have given that to somebody else other than me, but okay. It's important. The Fed chair is always important. I do think it's very interesting that some of the candidates who have been vocal about this have now started to say, well, look at, we understand the importance of the independence of the Fed. I think they do. I think that message has been delivered. So it's going to be important. I'll tell you, the one thing that may be just as important that people only sometimes talk about will be the question of whether Jerry Powell stays on the board. Mm-hmm. Because he steps down as chair, but his term as a board member is not up.
That's a really, really good point. Chuck, as we think ahead and we think of what Jerome Powell's last speech kind of centered around, kind of sounded to me like he was threading the needle of technological productivity gains that were going to be kind of deflationary.
But in a way, that would have an impact on the labor market, would it not? And to Jeanette's point, how can interest rates really fit into this equation?
Well, it's a complicated situation, as you clearly recognize. In terms of AI, there's no doubt that AI is going to help in terms of productivity gains, softening inflation, all of that kind of good stuff. And it reminds me of a period back in the 1990s when Greenspan decided not to hike interest rates because he saw large productivity gains offsetting larger wage increases. And he turned out to be right, which is exactly why he picked up the nickname the Maestro. This is a period like that. But at the same time, we also see very slow growth in labor supply. Immigration has declined, has collapsed. Few people come across the border now, so we're basically dependent on growth of the domestically grown labor supply, and that's a small number. So it doesn't take very much growth in jobs overall to soak up all of that incoming labor. And if the economy does well, as it appears poised to do, then that's also going to increase some demand for labor. So I don't see the labor market getting all that slack or seeing a rise in the unemployment rate. And therefore, I see the Fed hard-pressed to use that to justify multiple rate cuts.
Jeanette, do you see any world in 2026 where the action would be tightening in some ways from the FOMC?
No, I don't. I really don't. I don't think the inflation numbers justify that. I don't think that any issues on the employment side, such a tight labor market that we would see significant wage-generated inflation, that's not in the cards right now either. So I can't see that happening. And I couldn't agree more. This issue of employment, this is the one thing that's really going to be the theme, I think, of 2026, as if it hasn't been already in 2025. There's a mantra that says if the economy is growing at 2.5%, which is, I think, at least what we've got going into 2026, that the U.S. economy generates 250,000 or thereabouts net new jobs per month. That mantra may be something that we have to change, because I just don't think there's the labor force to support that. So we're going to have to see, and productivity is going to be the key, whether we can continue to grow 2.5, 2 3/4, a little bit more maybe than that, with a relatively flat but not deteriorating labor market.
Jeanette, Chuck, I appreciate both of you so much for taking the time. Happy New Year to both of you, and we'll catch up soon. That's going to do it for us here on Trading 360 for the first trading day of 2026. Thanks as always for tuning in. Coming up next is Fast Market.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time, with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Exchange, and after starting the new year with gains, investors are curbing their enthusiasm as we hit the lunch hour. Let me get into it right away with a check of your scorecard. The S&P 500 fading some after a strong start to the session, off by a little bit more than 0.1%. Weakening, you've got weakness in consumer discretionary communication services, which is weighing on the benchmark. Keep in mind, we're coming off of 3 years of double-digit gains for the S&P 500. The Dow right now has a gain of a little bit more than 0.1%, so we've been flip-flopping here. NASDAQ 100 a little bit lower. It had started out at the top of the leaderboard today, was the start of the show. Now that started fading a little bit. The NASDAQ 100 off by about 1/3% there. Russell 2000 still has gains. Small caps right now develop the ball better by about 0.5%. Here's the roadmap for today's show. We'll look at example option strategies for Amazon, the weakness of the Max 7 Plus. The team from Portfolio will be along with new sentiment data on Tesla, which just released its sales numbers today. And Alphabet Google, the best performer of the Max 7 last year, is also on our radar as we kick off the new year. Now that we've got the roadmap for today's trading action, it is time to bring my co-hosts and to ring in the new year. You've got Kevin Higgs and Joe Mazzola, head trading and derivative strategist Charles Schwab. All right, guys, so we're coming off of 3 years of back-to-back double-digit gains for the S&P 500. Wall Street started with optimism today. There's some bumpiness here as we hit the lunch hour. Maybe this is a little bit of a lunchtime fade. Kevin, what's your take?
Good morning, Diane. Good morning, Joe. You know, unfortunately, here's what I'm going to say. I think today, Friday, is an extension of the holiday trading week that we've already had. I think, from someone who's done this for a little while, the first real day of trading comes Monday the 5th. And I think that's when we'll start to get, next week we'll start hopefully getting some labor market data that will be accurate and timely, leading up to some non-farm payrolls at the end of next week. But I see today as still the drift from last week. We like to open higher. Tesla came out with some news. We're going to talk about that in one of the next segments, but all things considered, I think this still feels like a holiday market until we get back on Monday, where all the eyeballs will officially be back, guys.
I think you make a good point, because even on my way in today on the train, it was still light. It feels like holiday season. You know, people are like, why bother coming back on a Friday? I asked myself the same question this morning, although I was like, listen, we're light on our bench. We need all hands on deck. But Joe, when you think about the market action, now to be fair, even though we started higher and we've had strong gains for the S&P 500 for 3 years now in terms of double-digit gains, but at the same time, at least the past couple of years, even though we had strong gains for the year, the first day of trading day of the year actually was weaker. What's your take?
Well, my first take is yes, you are light on the bench. That's why you had to bring in the reliever from Westlake here to come pitch in for Whitey. But you know, it is interesting. I think you both make good points. There's volume is light today. There's not a lot going on. You know, you mentioned the train. I'll tell you, the office right now looks pretty sparse. It's a Friday. It's a holiday week, and I think there's a lot of valid points that you really want to pay attention next week. And I think next week is important, not just because traders will be back, probably more close to full force than what we're seeing this week. But as Kevin mentioned, you get a lot of economic data. A lot of that economic data could be market gain. You have ADP. You're going to have job cuts. You're going to have, of course, unemployment at the end of the week, payrolls at the end of the week, and from what we've heard from the Fed, that's what has really caught their attention right now, and I think it should be catching the attention of investors and traders alike.
Okay, let's talk where we're not seeing weakness. Memory stocks, they continue to charge higher today. We're turning the calendar from one trading year to the next, so 2025. These were the winners: Micron, SanDisk, Western Digital. You know, you've got, for last year, 500% gains, 200% gains, nothing to sneeze at here. Continuing to gain ground. SanDisk rallying 11% today. You got gains in Micron and Western Digital. When you look across the memory landscape, Kevin, what's your thought?
Yeah, those are the three stocks that I picked out watching memory. And you know what this is, Dan and Joe? This is an extension of last year. There's still positive sentiment going around these companies. Remember, I think one of the things that I've stated for 2026 is that we're going to see winners and losers in this whole AI movement. People are going to start pulling off, and the winners are going to start showing up. I think memory, at least right now, is proving that they're one of the winners. And in these stocks, I've got Micron up 8%, SanDisk up 12%, Western Dig up 7%. Those are big moves to start a year. Now, some of that might be holiday, thinner markets moving, but I still think to start a year, that's a really good start to the year for some of these memory chips.
Absolutely, strong start to the year, especially considering the moves that they had last year. We just had the chart with those year-over-year moves on all of those. SanDisk up more than 500% last year. I mean, when you think about the year, who knew that's where things would. But when I talk to different analysts, they say you have to be nimble around these names. And I also wonder if there is also some FOMO at play. Joe, what's your thought when you look across the memory stocks?
Well, I'll broaden it a little bit, Diane, if you don't mind. I would look at this as a momentum trade. What did well at the end of last year is carrying forward now. So not only is it the memory stocks, but even some of the commodities, the metals, the material stocks, those are all up today. So it's not like the entire market is getting bruised today. I just think that people are looking to see what did well at the end of the year. They want to carry that forward. One of the things that I tend to look at is factors, right? And so when I talk about factors, is it low volatility? Is it price earnings versus growth? Well, the factor that did really well in 2025 was momentum. Those momentum leading stocks. You need to be careful about that word momentum, because it doesn't always mean high price, high volume stock. What it means is, the stocks that are doing well, they're continuing to carry forward, and that's what we're seeing at least on day one of the 2026 trading year. Is a lot of those names, whether you look at the valuations and you say, well, they can't go any higher. That doesn't seem to be resonating with the market right now. People are holding out of those winners and they want to see them kind of carry forward until they jump, right? And there'll be some signs along the way. We have earnings coming up in the next couple of weeks that will really kind of kick things off in about a 2-week period where we'll get some idea from the financials whether or not, because that's been a strong sector as of late, whether or not that carries forward. But it's been a really interesting kind of trade below the surface as we've been seeing this momentum shift between some of the IT leaders, outside of them, maybe some of the memory names and the stocks that you were talking about. But like I said, materials, financials, those have been sectors that have really kind of picked up these last couple months. And whether or not that carries forward would be really interesting as we go through the earnings cycle to see.
Okay, let's talk about some other interesting moves. Looking in the furniture maker space, you've got shares of RH rallying more than 8%. Wayfair, Williams-Sonoma, those also rallying after the White House said it's going to delay the increase in tariffs on furniture. They put out a fact sheet, kitchen cabinets and vanities until next year. What's interesting to me when I look across those, for instance, yes, it's a big move today, but when you think about last year for RH, it was a terrible year for that stock. Wayfair, though, was a standout for last year. Williams-Sonoma, I haven't calculated the full year on that one for last year. But again, there was even a bifurcation within that sector, even though there is a tariff effect there. But it looks like that chilling effect is pulled back today. Kevin, what's your take?
I think what you just talked about with Wayfair versus RH, that's a continuation of the discussion we're having all over this economy, which is discounters are outperforming full-price retail. And I think the Trump administration delayed these. They claim that it was ongoing productive negotiations, but I think the overall effort to lower, remember, they still have 25% tariffs on both these, but the one was going to go to 30%, the other one was going to go to 50%, and they left it. They did not increase the tariffs, is what they did. So it sounds like they're negotiating along the way. It sounds like the Trump administration offering a little olive branch here, not raising those here at the last minute. He did it on New Year's Eve, so it looks like this is part of the negotiation going on here. So it's relatively good news for all those. But like I said, I think the discount versus full price retail, that's got many different chapters and themes.
That's a great point. I hadn't thought about it with applying it to that sector. Joe, sorry, go ahead.
You know what it is? Take a look at the Michigan consumer sentiment numbers over the last couple of weeks. They're about the lowest that we've seen in multiple years. Consumer sentiment is down. I think the Trump administration recognized that and they said, here's a way for us to maybe pick up some of that sentiment. Let's lower the prices on some of the things that we can affect right now. Because ultimately, gas prices are lower, or at least at the pump, but natural gas prices are much higher. That affects electricity bills. And we've talked all year about kind of how the data centers have led to those cost rises. But there are some differences that can be turned right now on the furniture side. Outside of Mrs. Mazzola, helping RH this past year as we moved out to Texas, you did see that, like Kevin said, a lot of the discount retailers have outperformed. It's the same story that you see in Walmart, relative to some of the other names in that space. Same story that you saw with Costco up until it got to like a 50 PE, right? Where you had started to see that momentum building within those discounters, and that's carried forward.
Okay, that's a great point that you made. Because what's funny is I thought last year, I did wonder if the K-shaped economy effect would actually help RH, but didn't because the tariffs were obviously too much for that. And I even remember that earnings call where the CEO was on when the tariffs first hit, literally while, he let out an expletive during that earnings call. You guys remember that.
I remember.
And, today at least they're on the road to recovery. We'll see what the year brings when it comes to RH. I mean, there's some pricey furniture there. I prefer to go to Facebook Marketplace to find my RH items. But it's nice to get it straight up from the store. But let's talk about Berkshire Hathaway, you guys. It's the beginning of a new era. Warren Buffett is now officially retired as CEO. Greg Abel taking over. You wonder what that means directionally, possibly more of the same. Buffett in the CNBC interview saying he thinks it's going to be around another 100 years. Kevin, what's your take?
The event of Warren Buffett stepping down and Greg Abel taking over, that's a designed event that was going to happen. Everyone knew that was going to happen. Charlie Munger, let it slip a long time ago that Greg Abel was going to be the next CEO. The real question for Berkshire Hathaway going forward, because remember,
is what?
they're only up 11% versus versus 17 for the S&P. So they didn't have a great year as compared to the benchmark, but $385 billion in cash. What is he going to do with that? That's what everyone wants to know. Does he have a different vision for this company than Warren Buffett? Similar, but different. Does he see something out there that Warren Buffett possibly didn't? I think that's what I want to know. What are you thinking about with 385? But depending who you talk to, it's 355 to 385, something around 350 plus billion in cash. What are they going to do with that? That's my question.
Hey, good question. Joe, what's your thought?
First off, hats off to Mr. Buffett and his amazing career, the greatest of all time in this industry. So he will be sorely missed, and best wishes to him in his new endeavors. And I think, what Kevin said is absolutely correct. Everybody wants to know what they're going to do with the cash. Now, the story for 2025 was, well, are they sitting on that cash because they don't see opportunities? Well, there were opportunities out there. Maybe it doesn't fit within the wheelhouse of what they invested in, and that's okay. But, if we do start to see some pullbacks in the market, which, look, I think it's fair to question whether or not the market can get a 14 to 16% return this year, given that that's what expectations are for earnings in 2026 for growth of 14 to 16%. Can you get that if analysts are expecting that growth to maybe rotate out of the Mag 7 and into some of the other names? I'm not so positive that you can get that without IT participating without at least a 20% year-over-year growth. And maybe that's what Mr. Buffett and the people at Berkshire are asking right now is can we find opportunities for growth maybe outside some of those IT names and move into the sectors where they've done very well over years, whether you talk about furniture today. I mean, Mohawk has been a big part of the Buffett portfolio for many, many years. Are there going to be opportunities for the growth in those pockets of the economy to kind of sustain and get them back up to those multiples or at least those returns that exceed the S&P 500? I think that's going to be one of the big questions in 2026.
Joe, also, I want to go back to the point you made earlier about power. My power bill for this month, I was like, what? I know it's usually higher for this time of year because of Christmas lights, but I didn't even put up as many lights this year. So that's a great point. I just want to, give you a nod for reminding us of why the data centers racking up more power, nat gas as well. All right, let's put a pin in that conversation. We've got bull versus bear coming up. The guys who get their example trades put together for
I think we're trying to break out here.
we get to the Mag 7 for 2025. Can that story change in 2026? We'll have more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
sometimes, you know, you could have done better. Same goes for where you invest.
Correct.
Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Amazon is kicking off the year with a weakness, down more than 1.5% after turning in the weakest performance of the Mag 7 in 2025, only gaining about 5%. Every other member of the Mag 7 posted double-digit gains for the year. Many analysts say this is the year for Amazon. That's your year in the buy camp with an average price target that suggests more than 20% upside from its current level. All right, let's get ready for the tough one on Amazon. For that, we want to welcome back in our co-hosts, Kevin Hayes and Joe Mazzola. It is bull versus bear time. Before we get to those example trades, we got to talk about your thoughts on the e-commerce giant. Joe, I'll actually start with you with this. When you think about Amazon, it was the weakest performer in the Mag 7 last year. There were analysts at the beginning of last year who said it would be a great year for Amazon. This year, you got most of them saying it's going to be a great year. What's your take?
I mean, it could have been a great year. If you look at kind of what happened off the last earnings announcement, it spiked all the way up to around 260, and it's just been really drifting ever since. We are like 226 and change after the stock pulled back. It's interesting because with Amazon, you have multiple legs of that stool that provide revenue, and we also talk about AWS, but now we can also talk about kind of the revenue that's generated from its ads within what it's doing for its network. So there's a lot of different ways that they can pull levers, and on top of that, you still have the strength of the consumer ultimately, driving the Amazon business. I think what's interesting for me about this stock from a chart perspective is it's just gone nowhere. It's one of the things I look at Dan quite a bit is like an ADX, right? An ADX is an indicator that talks about trend strength, and it's down around 10. I mean, that's basically just telling you that this thing is just it's out at sea, it's drifting along the tide. There's not much going on, and could that set up for a big move either way? Well, it's potentially setting up for something like that as we head into the earnings cycle in the next few weeks. When I look at something like that, to me, we talked about this regarding Apple a couple of days ago, where you've got a stock that's just kind of trading in a range-bound area, and do you want to own that volatility, the implied volatility of that earnings event? And when I see something that just hasn't moved like this, I prefer to sell volatility for the upcoming weeks and then own that earnings event volatility, because that's when something could move and it could break out of this malaise where it's been in, really going all the way back probably since the end of October.
Okay.
It's true.
And when you think about Amazon, those are some great points Joe made there. What's your thought?
I've been watching this stock a long time. It seems to have a personality that struggles with the current environment we're in. What do I mean by that? When they spend money, when their CapEx numbers go up, the stock struggles. Always has. And then what they
I expected this to move kind of up here. I was just watching to see if it would.
The stock would linger or languish, and then all of a sudden they wouldn't. The stock would make a bunch of money, big earnings beats, and up it would go. But the environment we're in with CapEx and all these other people, it's just not a comfortable place for Amazon to be in. So I think it's struggling. But remember, a year ago, we were having the same discussion about Google Alphabet and how it was languishing and the cheapest of the Magnificent Seven. And look what think about everything that this company does. It's got e-commerce and retail. It's got AWS. It's got subscription services with Amazon Prime. 200 million people. It's got advertising services. It's got logistics and fulfillment. It does everything. Basically, that's key to this economy. It's involved in it. So when I look at a name like this, it's just, I think they've got to just trim back some of the CapEx or do a Mark Zuckerberg kind of year of efficiency and let the profits run. And I think it'll do everything that these analysts want it to do.
Okay, so that's what you say, what they have to do. Let's get into the example trades. Joe, why don't we start out with yours? What's your
Yeah, I think I kind of set it up a little bit before Kevin spoke there, and just the idea that I'm looking for some type of movement around the earnings announcement. So if I can buy a put, in this example I'm looking at the 215 put, now it doesn't necessarily mean that it is a bearish trade, and let me explain why very quickly, because What I'm doing is I'm selling the January 16th expiration against that, or excuse me, the February 6th expiration against, or buying the February 6th against selling the January 26th. And what I'm doing by that is I'm collecting some time decay to allow me to maybe change my viewpoint on the stock while it's kind of in this drift mode. And in doing something like a calendar put spread, which is what we're doing right here, it gives you the ability to roll, and in essence, that lowers the debit cost that you pay for the 215 put in this example. And so it doesn't have to be bearish. What it is right now is it's looking for a grind down. And with the stock trading 226, a grind down of $10, that's what, 4%? That's not a big move. We've already moved 2% today. So, it's basically a couple days more of movement if you continue down this road that we're headed right now. And if you get to that area around 215, there's a reason that I chose that. That's exactly where that 200-day moving average is. The 200-day moving average is right around 217, that level right there. We bounced off that level a couple times, really basically going all the way back to October, prior to the move that we saw on earnings, and then that drift back down towards it. Boy, it sure does seem like the stock kind of wants to go back there. We don't know for sure, but it looks like it's kind of gravitating towards that. It broke below the 50-day moving average, broke below the 100-day moving average today. We'll see where it settles out. But in order for this thing to work out, it really needs that move back down towards that strike. And as you get closer to that earnings event, where we actually are long the implied volatility from that option that we have, at that point, what you can do is you can make your decision on whether you want to close that out, or whether or not you want to keep this as a bearish trade and just own the put itself, or you could turn this into a bullish trade by selling a put strike up above where that 215 strike is. It gives you a lot of optionality, it gives you a lot of choices while you're waiting for that earnings event.
The choices there from, I guess, a slightly bearish take to another strategy there. Kevin, let's get your thought on this before we get into your trade example.
If you find yourself in the situation where you are bearish, a name like Amazon, what you can do is you can do a put calendar like this, where you take advantage of not only the direction of the trade, but the long Vega component as well. And so the fact that Joe's buying the earnings event is February 5th, so he's buying that week, that implied volatility there is bare minimum to hold, right? It's probably not going down, which is the Vega component's a big part of a calendar spread. So Joe's bet, or Joe's pick the money trade, is looking for two things: directional move and implied volatility going higher. He's buying options over a month out. So that is the advantages of a put calendar if and when you have a bearish posture. Now, mine is similar trade in terms of it's in the calendar spread family, but it's, number one, it's bullish, and it's the diagonal, which is where you buy a calendar spread, but there's an embedded vertical spread in there. And I went out to the January 23rd expiration, staying ahead of that earnings event, bought the 225 call, just about $1, maybe $2 in the money, and then I sold the January 9th 230, 2.5 call. So right in line with next week's expected move, up or just over 232, right around there. So mine is a bullish call vertical. I put it, the debit was around 530, and so looking at that, that's the risk on the trade. Because it's a 2-weeker, you do have an opportunity to extend duration and chip away at that, but certainly this is one where both are in the same family, put calendar, call diagonal, and both looking to buy Vega and collect data as we wait for our move, Diane.
Joe, your reaction to Kevin's approach here?
Yeah, and I think one of the other interesting things about that trade, and it's similar to mine, is that it doesn't require much movement at all for it to work out. So if he gets a little bit of a move to the upside, I get a little bit of a move to the downside. These are both trades that could be effective. And actually, you don't need, one could be bullish and one could be bearish, but they don't need to be exceedingly bullish or bearish. Like I said, I gave about a $10 move to the downside is kind of my sweet spot, and his sweet spot's a couple dollars to the upside. So we're not looking, or at least these trades aren't looking for big moves in the interim while we're getting closer and closer to that earnings and expiration date. What we're doing is we're looking as a way for us to collect time decay by selling that front month option against it in order for us to kind of build a position and maybe
Okay, something's going to happen, or this is a fourth move.
All right, choose your own adventure there with the example trades there for Amazon, and you have some flexibility with both of their example trades. Thanks, guys. We've got cash tags coming up. The team from Likefolio will be along with new data on Tesla. Today, it released its sales figures, quarterly sales figures. Those were weaker than expected. The stock initially rose. Now it's under some pressure. Keep it right here on Schwab Network. Fast Market. We'll be back after this break.
They were weaker last time. They're weaker last time. There it goes, it broke.
I'm Jane.
And I'm his mom.
His mother.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Varnas, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Did I saw it say boom or what? I did.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trades.
I did.
Connect with the Schwab.
Yes, I did.
Our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market.
Just the market.
Close and beyond. Streaming 24/7.
Yeah, we're coming up to the 200.
SchwabNetwork.com.
Welcome back to Fast Market. You're on the Schwab Network. I'm Diane King Hall alongside my friend Kevin Haynes. Time now for our
Ladies and gentlemen,
For today, we want to bring in our next guest, and that is Andy.
I want to bring in my next guest. His name's Washboardjim. He talks about chart patterns, moving averages, and being in the now. And is it true that you're talking about when something hits the 200 SMA on the 1 minute time frame that could be a support or resistance level of that certain entity? Yes, it is. I want to thank you for letting me on your show today. Well, we were sitting here calling this trade out. I said, get ready to break out. This is the fourth chance. And this is where I talk about a trading strategy where if you can count to 4, you might make a little bit more.
What does that tell us now?
So we were developing somewhat of a small little megaphone pattern on a pennant flag. As we started to pull back on the bottom part of that their megaphone, which I'll show you and illustrate, we come out with a big old hammer. Hammer. And here's your little bitty megaphone. See, the line doesn't go straight across. It will go uts.
They're going to work their way through that. And then ultimately, I think
Uts is the word for dog talk for up.
Has bought into Elon Musk's vision that Tesla is more than a car company, that the future of Tesla is a enormous.
Just in case you're curious. So this is the proceeding of the megaphone as it goes round, sound. I don't think I ever made a word for down,
bought in, so Tesla gets away with
but I have for uts.
in terms of misses on deliveries and unit numbers.
As we pull back, oh!
In order to buy into this vision, you really have to look at what Tesla's doing versus its nearest competitor.
That didn't want to happen.
I mean, that's Waymo.
For it to stay bullish.
The biggest chart here is you look at how many miles per day.
So we had one of them, 2 bits, 3 bits, and a 4 bits, and it broke out.
And that's 15 million miles per day versus Waymo at under 500,000 miles per day.
The prison guy's on.
Tesla records and learns from.
I'm not sure I gave him permission to talk.
Waymo does in an entire quarter, and I think that's the biggest deal going forward.
You'll be muted. You'll mute until I get you back on, sir. So here we got the 1, 2, 3 bits. Actually a 4 right there if you want to count that wick. Okie dokie. Well, as I was saying earlier, as we approach that 200, that's an idea of maybe getting out of the trade. You're at your last support, not your last support, but you're at your second support. Right now, you hit your first one, and that was the top of the megaphone, and the second one would be the pivot point in the megaphone, and the third one would be the bottom part of the megaphone, somewhere in here.
And a lot of people put off, if they were going to sell shares, they put off selling shares till after the new year for tax reasons.
So I think there's a natural, kind of built up supply ready to come into Tesla stock here at the beginning of the year. But look, 5-6 years ago, the haters, the critics were saying that the Tesla supercharger network would never be truly built out, and now it has been built out and won so big and so dominantly that every other EV manufacturer is adopting the Tesla supercharger standard for their vehicles and is waving the white flag and saying, we're willing to make our customers pay Tesla to charge their cars on the road. And that's the way Tesla works. Either they lose and they lose quickly and they lose big, or they win and they win over the long term and win in an enormous way. And that's the way we think autonomous driving is going to go as well. Just like the supercharger network, it looks like they're behind it, looks like they're slow, until all of a sudden it's everywhere, they're dominant, and competitors are waving the white flag and licensing the technology from them. And that's the way I think this will go for Tesla. I don't think it's about deliveries. I think good enough is a really good way to put it, because when you're putting, 1 million plus vehicles on the road every year, that's expanding the fleet size, that's expanding the running potential of the network, and that's ultimately what's going to drive the value of this company and this stock.
Andy, how much of this though hinges on one man?
A lot, an enormous amount of it. I think with, the premium that you're paying to be an investor in Tesla is the same as the premium that people are going to be paying to be an investor in the IPO of SpaceX, and that is you're betting on one of the greatest entrepreneurs in the history of civilization with, the largest vision of any person that I can think of in terms of how the world and how actually the galaxy should work. And so,
there's a lot of fluff in there, there's a lot of bravado, but it works long term. And so there is enormous single man risk to owning Tesla, to owning SpaceX, etc. And we're definitely glad that he got the compensation package he wanted to get in order to retain control of the company that he wants. But yes, there's an enormous single man risk with this, and probably larger than any other company in the world.
Kevin, you got a final thought? A question?
Sure. Andy, one last thing. Let's talk about China and their competition with they are overproducing these cars in China, but Elon Musk appears that he can still compete on price with these cars. And frankly, I don't think those China cars are ever coming here. I don't think the Trump administration will ever allow that. But their overproduction and dumping, is that going to affect this, or is this something where this is the time to preserve capital, hold your own in EVs, wait for the dust to clear, and look forward to all these other things? I think robotics are going to be one of the more exciting things that we've ever experienced. It's going to be just as important as the EV cars down the line.
Yeah, I think Wall Street has it right when they basically just kind of shrug off the China EV story. Again, I think it's just about your mindset and your outlook as an investor. If you think of Tesla as an EV company, then it is wildly overvalued. And it does have significant competition coming out of China, which could disrupt a global EV manufacturer sales. But when you think of Tesla as larger than that, when you think of it as power storage, autonomous driving, etc., that robotics company, everything gets so much bigger that the binary bet becomes much larger and much more attractive. So once again, we're in a position where we're going into a new year, for probably the 8th year in a row, saying Tesla is a binary bet with asymmetric upside potential. And that's the story for Tesla. It's going to be for a very long time. Investors have to get used to volatility that comes with making these types of asymmetric bets on very, very big and bold visions.
And that's the thing with Tesla, it can be very volatile, so you have to hold on and buckle up if you are a believer in that one. Because even, when you look at the analyst community, it's extreme views on both sides of this. All right, Andy, we'll leave it there. That's Andy Swan, co-founder of Likefolio. Now, for the trading perspective on all things Tesla, let's bring Joe Mazzola back in the conversation. We got a lot of insights from the Likefolio team. I don't know, Joe, if you heard all of that. Feel free to make a comment before you jump into your example trade.
I mean, two words kept popping in my head when I was hearing you guys speak. I kept thinking of, if you want to be a long-term Tesla investor, you need two things. You need gumption and you need capital. And I think that as long as they can continue to kind of feed into this vision that investors, that are looking to Elon Musk as a visionary, then the stock probably has more additional upside. I just wonder, when I see the charts, the way I'm seeing right now, some pullbacks that are occurring, and I'm seeing some weakness, and you're seeing some, what today looked to be a decent opening, kind of pulling back a little bit. Now, we're not talking about a big move. I mean, the stock's down 2% on the day, so it's not a huge move. But I do wonder what's that next leg that's going to pull it forward. Because it's probably not going to be earnings. I think Kevin mentioned that once the energy credits kind of kick in, and then yes, that can help with earnings. Well, that's been the story for years, right, with energy credits. So it'll be interesting to kind of see how investors react to the latest earnings data when it does come out. They've been given, or at least Elon and the company have been given a favorable pass now, really basically since the lows we hit around 215 earlier in the year. It's almost, the stock more than doubled since that point. So the trade that I'm looking at also requires a little bit of that gumption and capital. And once again, on the surface, it looks like it's a bearish trade. It's what we call a front put spread, or a ratio spread, if you will. And what we're doing in this example is we're buying one of the 420 strike puts to sell two of the 395 strike puts, doing it in the January 30th expiration, which will have earnings built into it. And so why am I doing this? Well, think about a trade where you construct it where it's got a put vertical embedded in it, and it's got a cash secured put embedded in it. So that put vertical can make money if the stock pulls back, right? And if it continues to move back down towards a level where we've seen some support around the 100-day moving average, which at this point is right around $400, or even if it goes all the way back down to where it was kind of pre-breakout, around that 370, 375 level. This 375, this trade can still kind of break even. So the way that this trade works is it expands in value as you get that move down towards your short strike. Anytime you have a vertical, or anytime you have a calendar spread, like we've been talking about a little earlier, we call those kind of horizontal spreads, you kind of want to move towards that short strike. So in this example, if we buy that 420 and sell two with the 395, this thing will expand in value to $25 at that short strike. Now, the difference between buying a put vertical and the way that this is constructed is, since I'm selling that cash secured put as a way to finance buying that put vertical, I can do this thing for basically even money or even a small credit when I was pricing it up a little bit earlier, which does two things, Diane. Number one,
we hit the bottom of that flag.
Up front. Now, you will have buying power considerations, right? Because it is a cash secured put tied in there, so you have to cover that additional put that you sold. But your break even then moves all the way down to 375.
Here's the pivot point.
If that put spread expands from that 420 down to 395 strike, I've got another $25 taking it actually down to the 370, where that's where my break even is on this trade. So it gives you a lot of room for this thing to pull back.
Excuse me.
Before this thing really starts to hurt you. Now, the flip side is, since you are
short, no, it don't work like that.
You could be taking delivery of those shares at 395, even if it's below that level. But that's a level where we did see some bounce heading back towards that end of November 20th and 21st sell-off.
All right, Kevin, what's your thought on this really quickly?
This is two trades. It's a $25 put vertical, and it's a cash secured put. You gotta have the cash, the capital for the cash secured put, but you do get the benefit of a $25 put vertical, and if he does it for even or credit, you have no upside risk.
All right, good stuff, guys. Thank you, both of you. And Joe, thank you so much for stepping in. Joe's our head trading derivative strategist for Charles Schwab. Kicking off the new year with us today, filling in for Tom White. We've got the breakdown coming up. We'll take a look at the best performing member of the Mag 7. I know you know which one that is. We'll be right back.
Google. Couldn't break the pivot point of that megaphone. It's sitting at the 50 SMA. Do you think it might hold and break this today? Yeah. The lady says, man, people are at lunch in New York. One more pullback would really make this thing worth the while.
Stay connected to the markets with the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab.
The big candle.
You'll learn tips and tricks to help
I was looking for. I didn't expect it to be that big.
Swim and mobile-based platforms. Best
Yeah,
of all,
God.
you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live
And
or
watch
on demand. Head over to schwab.com/coaching and start learning today.
SPX, where are you? Okay, we're going to move them up. Stifle. One of them 6850s. Those are the ones I like. Okay, prepare ye. $360. Okay, the crowd's going wild here at the sports arena. None of them are really knowing exactly what to do. But he's trying to put the pedal to the metal. Whoa, 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 whoa. They're 370, 360. It was George. Thanks for showing up, George. Oh, yeah. Let's go. We're now at $4.40. This could be my trade of the day. Very good, very good, very good. George. 380, George. We're now back down to $3.60. I refuse to sell. But it's a 360, 370, and all of a sudden within a second or 2 seconds, 420, I'm going, okay. Within a few seconds, 3 seconds, 4 seconds. The SPX 6850s, lottos, the calls are at 360. They are now at $4.40. Some up $80 a contract. Should I sell? See, right now you're bearish because you're below the trend line on the flag, but you're kind of squeezing above the 9. Which, if we can break this here trend line, I'd be a lot more bullish than just sitting above the 9. And then you got to give 3/4 of a cent or a half of a cent correction there, leadway. Woo! See, I'm still bearish as long as I'm under that trend line. More than if I was above the 9 EMA, which is the blue line. From here, that's the 9. That's the trend line. If it goes above the trend line, I'll be a lot more bullish. No. No. You were so good. See, just like that, I'm back down to entry. $3.80. It seemed like it's wanting to be as bullish as I wanted it to be. You couldn't break that trend line. That was important. But, so I'll give a few more seconds. Because I said so. Hello.
Happy New Year, good afternoon, and welcome to Next Gen Investing. I'm Alex Coffey. Jenny Horn has the day off. Joining me here at the top of the show, though,
she does.
Sam Vadas live at the New York Stock Exchange. And Sam, although the market has dipped a little bit lower here, interestingly enough, under the surface, more of the names are higher. So it's one of those situations where, as the rally broadened, you actually see a little bit of weakness on the cap-weighted index level. What do you make of that?
Yeah, interesting, as you say, Alex, what we're seeing when you look under the hood, and I heard one of the guests on your earlier program pointing this out as well, it really feels like we've got an AI infrastructure type of story emerging in this market today. Look at the memory stocks. I mean, they are on an absolute tear. That has really been the focus this morning, particularly off the back of what we heard from counterparts out in South Korea like Samsung, SK Hynix, saying, things are looking good. They're getting good feedback from the customers. And so we're seeing the follow-through effects with respect to that. With the data, it's a no-brainer. That's what some of the analysts are saying, that you need the storage as well. So we're really seeing the data centers as something oxygen when it comes to some of the memory space. And then, of course, you've had the industrials that have been up. You've seen the materials that have been higher. Take a look at rare earths today. Take a look at critical minerals, all the things that go into this stuff as well. And so that's sort of the story that's playing out. And it is, as you say, a bit of a different picture to how I opened opening bell this morning when we saw everything higher. And that was really back as tech was in the driver's seat again, and we saw the leadership taking the charge once again. Look, names like NVIDIA are still higher, but that, of course, no doubt is on some of that chip news, as I mentioned. Not to mention we've obviously got some new developments.
Well, get ready to do it again.
Baidu story as well, looking obviously to spin off Kunlun Shin and look at a potential listing of the H shares, so that's rising up almost 14%. You have other Chinese names up at like 6%. So obviously this is a market where we're seeing this AI theme playing out, but this is still a holiday market, as we've been talking about all week, Alex. We do get a lot of information out next week, so it's just sort of been a bit of a holding pattern, but we are seeing precious metals rebounding. Tesla's been a big story for us today as well. We're down 2% off the back of those quarterly deliveries, 16% year-on-year down. It was actually up initially despite that, but then took a leg lower as well.
Yeah, a lot to explore. We're going to talk a couple of those names here coming up, particularly with the memory space. I'll cover Tesla during our FOMO segment with Kevin Green. We'll have Austin Lyons for the Magnificent Seven, sort of the setup for 2026 there. And then also charting and trading AMD and Broadcom with Rick Ducat in our next segment. But as we transition from the major market, Sam, into some of these movers, call on opening bell, I discussed with you that NVIDIA, Broadcom, Apple, and Alphabet were contributing like 40 to 45 points worth of the rally.
We are in the 68.50 strikes right now.
About 2/3 of a percent.
I have the SPX Lottos. They're now at $4, $4.10. The entry on the landing was at 360, going eastbound. Now they're at $4. As we break the resistance levels, these resistance levels could move up to 68.42.96. So please keep that on your biometer.
Of an update and a stronger sort of AI type of narrative.
But right now we're at 390. You could sell if you were a little nervous. What we have is a sneaky snake breakout strategy.
James reinstating coverage here. Market perform rating on the shares
So coming in, but sort of
It was
sitting on
just
the
like that.
sidelines here, still a bit
$4
on the
back to $3.50.
suspending the coverage here. It had actually rated Apple as outperform. They believe that the valuation already reflects
Not being very nice.
They do think that investors are already paying a premium basically for what they're getting here. They think that things are pretty well baked in at this stage, and so more neutral on this name. Don't see enough catalyst for meaningful upside or any sort of outperformance here. They're optimistic, however, on the iPhone 17. Obviously, as we've seen that pretty strong quarter since that release at the back end of last year. They believe this will drive things. Obviously, there's been some strong sales in places like China, which has been encouraging. They do argue, though, and this is quite the interesting part, is that the user base is already there. 2.4 billion on customers. They believe that incremental growth will become more challenging because of that. Obviously, we've seen this upgrade cycle, but they don't believe that there is sort of meaningful upside as far as that is concerned. They think services is a bright spot, but not really a game changer here. So they do believe that there are still risks to watch here, and those include tariffs and also component costs. Interesting with the tariffs, because there seems to be some thinking in the market right now about more of a de-escalation and re-escalation, is actually rewind back the clock to some of the conversations we've seen out of the White House with regards to Apple. I mean, the Trump administration seemingly cutting Tim Cook a bit of slack here, saying, hey, look, if you invest hundreds of billions of dollars here, we'll give you a little bit of a break when it comes to those tariffs. So that's a really interesting one. But, obviously, when you look at some of these analyst polls, it's good to compare them. We've had Dan Ives very much saying that, the AI story is the elephant in the room here. It's very much time.
Right now, the elephant's me getting mad.
To this, as far as monetization.
We got a triple, 1, 2, 3.
He actually believes that Tim Cook will stay in the spot CEO through at least until 2027, because obviously the leadership changes have been a big focus for this company as well. So that's kind of the setup as we move into the new year for Apple specifically.
Yeah, Sam, Raymond James is Melissa Fairbanks is the analyst that issued that call, that market perform call. Of course, there's no price target, but I was just looking at sort of the general analyst universe for Apple. About 30% in the hold camp, 65-ish% in the buy camp, 5% or so in the sell camp. But if you were to take their consensus price target, it's around $291. That applies about 7.5% upside, which is pretty much in line with sort of that long-term historical average performance of the S&P 500, around 8% or so. So it does seem like, although Melissa seemingly moving into less of the consensus, is still kind of in line with the consensus, saying, hey, Apple probably going to perform like the S&P 500, like the broad market does, at least for now. But the story of the day, as you mentioned, is this memory move, and a lot of this started with the optimism exuded out of South Korea, particularly from Samsung. What did you make of this story, Sam?
Never heard of it.
Yeah, well, obviously this is part of a broad theme that's emerging in the market, as I mentioned, with the sort of AI infrastructure, but it's rallying after the Samsung news. Now, the story for Samsung is that basically customers have praised its differentiated competitiveness of HBM chips, which of course is in the business of. So we saw Samsung rallying 7% overnight, helping the South Korean KOSPI hit a record. Remember, the South Korean markets are rallying over 70% in 2025, driven by a lot of these types of names, the AI story, Samsung, SK Hynix. The company says Samsung is back. Now that's important because it's been seen in the market as playing catch-up to its competitor SK Hynix in this space. Now SK Hynix has also made some New Year's comments. According to Reuters, which has seen the remarks, the company has been benefiting, they say, from good external demand, and they say competition is heating up. So it's going to be a very interesting story in the market this year, I think, Alex, as they say the business environment is going to be tougher this year than last. So what we're seeing right now is a follow-through as far as US memory names. So these were the 2025 performances. I mean, look at SanDisk. I mean, you have to sort of double take there, don't you? 560%. And so we're seeing Micron, SanDisk, Western Digital, all these names, in fact, that have a very good triple-digit gain as far as percentage performance is concerned, all up in trade today. I mean, you've got SanDisk, for instance, rallying in double digits. This really is about
the fact that we've seen tighter supply and higher prices, and data centers have really been sucking the oxygen out of this as well. I mentioned that earlier. Chips also go into PCs and smartphones, but this has really been driven by a lot of the AI data center demand. So as I mentioned, this really goes hand in hand with the sort of broader theme we're seeing, where we're seeing industrials, materials, rare earths, critical minerals all rallying on a day like this. And then obviously that's having knock-on effects for the NVIDIAs and some of the other sort of chip makers as well today. But yeah, Micron in particular, great earnings at the back end of last year. Remember when we did start to see that pullback in technology, this almost gave it the green light to kind of get the rally back in action when we heard from that report card following the latest earnings we got from them.
Sam, before we get to Block and then ultimately Chipotle, I always feel like we wrestle with this dichotomy. In one way, we've talked about this before. We said it a lot on Market on Close in recent sessions. That sometimes it's not taking a tremendous amount of analysis to say, hey, as 2025 goes, largely 2026 will begin at the very least. So it does make sense that some of these big winners of last year would be kind of early out the gate to be big winners in 2026. But also on the other side of that, it's very rare that the same leaders just carry the market year after year after year. So when you start looking at...
Last year was a lot easier to suggest what to watch. I know what to watch this year, but last year they were more or less telling you that we were up 40% in 2 years and we were overbought and we needed to pull back and blah, 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 blah. And we had just like a 6-week correction and boom, we were back up there before you knew it. But if I was to trade, I like that memory, what they were saying. That's a good idea. Probably a little late. But I'm going to stick with it. The Magnificent Seven and the way I've been kind of doing it, because I nailed a few of them, the Boeing and the Tesla and the Microsoft, and there's another one on the pullbacks, Apple and Meta. Oh, yeah.
Always talked about, always making news headlines, and it just doesn't carry that same amount of clout anymore. But what's driving the action today, Sam?
Yeah, you raised such interesting points. Look, the news of the day seems to be this KBW price target update on this name, recently lowering the price target now to $85 from $90. Despite that reduction there, they're actually maintaining an outperform rating on the stock. So we're seeing just a modest downward adjustment here, as I say, from 90 to 85, as far as their expectations for the share price performance over the next year or so. They do still see this as an outperformer as far as the broader market is concerned. Look, they indicate that the view here is that the business fundamentals or long-term growth prospects are largely intact. They're just not as bullish as they perhaps were before. Other analyst calls I've been looking at recently, BFA cutting the price target from 88 to 86. I mean, another sort of modest downward adjustment there too. Speaking of the fundamentals, just obviously a recap, revenue falling short of expectations in Q3. That was the latest report in November. Despite that, though, it had actually raised its full-year profit target, also reporting strong growth in consumer banking. And after that, we did see JP Morgan actually reiterating its overweight rating on the stock. But it has had a pretty tough old 12 months. I mean, down more than 20% over the last year or so. If you look at the one-year chart, this has been a story of really mixed results, as I mentioned, and analysts trying to kind of come to terms with that, digest that. As you say, a crypto exposure as well. We know the bumpy ride for that as well, as far as that sector is concerned. But, not to mention the fintech space, highly competitive business,
very sensitive to macro changes as well, particularly the consumer activity, particularly small business activity as well. So, obviously we're seeing this one under pressure with respect to this latest analyst call this morning.
No doubt, as we look at XYZ, trying to stabilize, but just unable to really stage any sort of significant rally. Last one on our list is Chipotle, Sam. This is the cautionary tale for, hey, stock split happens, I need to get involved, that sort of feeling that we always hear about when these names offer stock splits. This stock basically peaked out when it split and has not been the same performance ever since.
It's had a tough time this year, but so have others in the quick service business. I mean, take a look at Carver, take a look at Sweetgreen, but this one, we've actually had the folks over at Mizuho raising the price target now to 36 from 34. Now, what they're saying is that they're keeping a neutral rating on the shares. They do believe it's appropriately investing in pricing strategies aimed at revitalizing that transaction growth. So they believe this approach limits the risk to Q4 and also same-store sales growth expectations moving into 2026. They've raised the same-store sales growth estimates, in fact, for Q4 and full year 2026 as well, to -3% and 2% plus, respectively. Now, this is obviously coming off the back of, in recent weeks, Chipotle announcing its first ever high-protein menu. It rolled this out in, as I said, the last couple of weeks. And, these sorts of things like cups of chicken, etc., are all part of the kind of strategies that they're trying to come up with to attract consumers. Obviously, it disappointed in the previous earnings. They were in line, revenue slightly missed. They cut the same-store sales forecast. They're expecting this to shrink by a low single-digit percentage. So really seeing a change of tune here. They're contending with the macro pressures, the cost-conscious, value-hungry consumer, as we know, and they're not visiting as much. And also, it's been an interesting story with this one. While they have insulated themselves previously from a pullback because of the high-income consumers, now they're seeing it really across the board. Consumers who make less than $100,000 making up for 40% of its customers. So that's really important to keep in mind here. But restaurant stocks as a whole, Alex, mixed performance. As I mentioned, your Chipotles, your Carvers, your Sweetgreens, not doing as well as your fast food did last year. I mean, take a look at McDonald's, take a look at Yum Brands, they did okay. So I think the key themes in 2026 is going to be, these value offers and what kind of things they're coming up with, like protein cups, etc. I don't know what that is. That's just chicken in a cup.
What stands out to me is this is Nick Setyan over at Mizuho Securities, Sam. I always like to, in these types of spaces where there seems to be an easier logic to winners and losers, similar to maybe apparel around the holiday season, the sort of the popularity component. This analyst only has one sell or underperform rating, and that's on Wendy's. The vast majority of the coverage, 11 of 18, in the neutral camp, like what we're seeing from Chipotle. But they like Brinker, Cheesecake Factory, Domino's Pizza, Texas Roadhouse, Wingstop, and Dutch Bros. So I look at that and I'm like, I don't really see any key themes across any of them, other than maybe they're just names that they see executing at a higher level at the moment, compared to maybe some of those fast convenience stores,
245,
CMG, or even your traditional quick service restaurant like Wendy's. But Sam, it was a pleasure. Look forward to talking to you more as the day rolls on Market on Close, and we'll catch up soon. We're going to take our first break of the program. We get back, it'll be Chart Master time. Rick Ducat's going to stop by. We're going to chart and trade two of the big time GPU and AI chip makers.
We're back at 260.
We'll chart and trade next.
God, you're loud.
connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest in general.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Approach to wealth management.
Whether you're a bull or
He's
bear,
back.
you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back. Time for Chart Masters. We chart and trade some of the big semiconductor winners of 2025. Joined by lead market technician
Needed that to break.
here in the studio. Taking a look, beginning with AMD. It took a bit, but it finally joined the party. Came back a little bit towards the end of the year, but all in all, really, really nice performance last year for AMD.
Yes, yes, that's true.
Start of the chip companies.
Quite true.
There was a time when AMD was viewed kind of as this higher-end gaming chip maker here. So if you were like seriously into more high-end graphical processing units, AMD was really one of the more interesting names you could try out for. Now, kind of in this whole AI change significantly. When we look at this whole chart, we can see that 186. This was
We have a misunderstanding? Uh-oh. Uh-oh. I think we can go higher, guys. And I could sell these. I'd be very pleased. Randy? Just in case you're curious, I'm in the 68.50 calls, lottos at $3.60. Now, these things went down on me, and I sat here and held them. I could make a business decision. Oh, you were gone when it bottomed? Well, shoot. Hold on. Just like that. Back down.
Broadcom kind of notably later in the season. So for those looking for kind of that next big maybe tech event, perhaps AMD earnings would be one of those names on the short list of
no, he did not.
Keep an eye out for towards the end of January, early February, as it historically reports. Taking a look at an example trade, though, in AMD, Of course, you could look at that 200 or so range, do something neutral to bullish below, but
Yeah.
the stock is trying
He
to
should've.
recover off that most recent test of those levels once again. So perhaps you think that this...
But I think we'll get another chance here if we can hold this trend line and get back up there and hit that 200. We got, this was kind of... I was excited to see them, and then I was excited to see this one here. So I kind of... Let's see.
700. You will need some help for the market, though. That is, of course, because the break-even is 233. So you think there's going to be a rally throughout the next month of trade? Perhaps this is an example that would benefit from...
I don't want to throw a lot of money in it.
Need that to happen.
It's kind of boring.
Just to break even, not even talk about the $700 in max profit potential. But as we go from AMD to its bigger counterparts in the tech semiconductor world of this AI trade, let's talk Broadcom. If there was going to be an adjustment to the Magnificent 7 to make it Magnificent 8, this would be the name I think many would add in that group. Talk to us about what the technicals show.
Right, so there's some similarities between this
similarities.
chart. One thing that caught my eye is that we had a similar gap to the upside here that was followed by significant support that never really closed that gap. In this case, 325, our green line here, notably was the low boundary several times during the past quarter or so.
Very nice in RDW.
375, our high point here. We did breach that a few times, but for the most part, there were a few closes above that level. We did have our breakout eventually here. Support was held on. The bulls held the line there, heading into earnings. Then we had our collapse after the report came out, a bit of a disappointment there. But 325, we held the line there once again. So now our short-term trend line has been broken. Our long-term blue trend line here also has been broken. Not really seeing a clear pattern forming just yet here. So look for a breakout beyond this range-bound area for further directional clues. Now we can see when we look at our moving average studies, a similar picture. They are congested here. The range now is between 348 to about 353 or so, or 355, excuse me. So now we would be looking for the bulls to hold on to this here. We're kind of testing the lower boundary here, our weekly EMA. Again, a strong close below that level, or when we start to see those faster moving averages start to outpace the slower moving ones in the direction of the trend, those are other signs of impending trend shift. As technicians, we would want to get in on the trend shift as early as possible. But the caveat is we have to be sure that it's actually happening. We don't want to be faked out. These things can happen in trading, but never a fun situation. RSI gradually sloping lower and lower here. We've had several resets with this momentum indicator. Now, though, we are below the 50 midline. We are not really showing, again, strong directional bias either way, kind of mirroring our moving average situation that we just discussed. So now, if we were to look at the volume profile study, in this case, the standout area, this thick red line here, our point of control, this is the heaviest trading area of all that we can see here. It comes in right around 341, 340, 341 or so. The general heavy volume area would be about 330 to 350 in this case. So now we can see that things really start to thin out once we get too far above 350 here, which is where we would start to see this breakout activity once again. So that would be the obvious level the bulls would have their set their sights on here. Additionally, a smaller pocket of activity here around more like 375 or so. So that would be another potential speed bump to watch out for. But one last thing to point out, extremely heavy volume we saw, suggesting high conviction on the part of traders, taking advantage of that relative low point at that key supportive area we outlined earlier.
Yeah, good stuff. Rick Ducat, lead market technician for the Schwab Network, technicals on AMD and Broadcom. As we look to a Broadcom example trade, I think the thesis for this is pretty straightforward. I don't think what Rick just highlighted on the technicals was overly positive, but this is still a market leader. And with that big chunk of volume between about 330 and 340, perhaps that area acts as support. And so what would a trader do if they were looking to be neutral to bullish but use that level of support as a potential place for the stock to find a footing. We'll go just below that, and that's what we did here. Same expiration, January 30th, but going to the 325, 320 short put vertical, collecting a credit on this particular trade. And in this case, say we collected $1.25, that would create a 3-to-1 risk reward where you risk $3.75, chance to make $1.25 on a break even of $323.75. So idea being, have those support zones hold, and then as time passes, this one could expire worthless. That would be your max profit scenario. It's going to do it for our Chart Master segment. Coming up next, it's FOMO. We'll be joined by Kevin Green, and he'll walk us through the news in Tesla, some technicals, and then ultimately an example trade. We'll be right back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back, time for FOMO. You're watching Next Gen Investing here on the Schwab Network. I'm Alex Coffey now, joined by Kevin Green, Senior Markets Correspondent for the Schwab Network. And KG, we discussed Tesla this afternoon. And much like the overall market, this is a stock that saw its year begin higher and then quickly unravel as it's now down 2.5% on the session.
Yeah, and actually, if you look at Tesla, it's been down over the last 4 to 5 trading sessions here, but we did actually get some of the production and delivery numbers for Q4, and that's why we were seeing this pullback to the downside. The company actually did produce 434,358 vehicles in Q4 of 2025 with deliveries of 418,227. So we actually did see the delivery numbers coming in a little bit lower than the street's expectations by about 16,000 vehicles. Now, obviously, we have seen some headwinds when it comes to this company because the environment has changed. We have seen the reduction and actually the elimination of the EV tax credits, which has also kind of adjusted demand here in the near term for this name. But we also have to be mindful as well, the global sales in general outside of the United States have also weakened a tad bit. They are losing a little bit of market share to BYD. And after the delivery numbers that we actually had today, BYD actually did deliver and produce more vehicles than Tesla and delivered them on a global scale more than Tesla this year, which is something that is a first. So we are seeing the shares moving back to the downside here, but you are seeing analysts still optimistic around this name. Obviously, we see some near-term headwinds because of these delivery numbers, and that could have an impact when it comes to free cash flow, but there's a lot of optimism when you're looking at the humanoid robots that could be hitting the market here, as well as the robo-taxi, and a lot of analysts are believing that that's going to be the catalyst for this company over the next 5 to 10 years, not so much EV sales. The EV sales right now are kind of a ways or a means to an end here if you're looking at this company, and that's why a lot of bullish investors are still optimistic on this name. We have William Blair right now, pretty much once again kind of holding their market perform rating on the shares. You have Stifel once again, buy rating on the share, price target of $508. So a lot of optimism when it comes to this name. Unfortunately, you are seeing a pullback here and maybe going into a critical area of support over the next couple of weeks.
Yeah, talk to us about that critical area of support, KGs. I know you got an example or rather a technical chart that you wanted to look at. I couldn't help but notice something like 10 of the last 11 candles are red, which doesn't always mean it's a down day, but it means that you opened higher than you closed. So it's not a good streak they got going over at Tesla when it comes to stock price performance.
Yeah, at least in the near term, yeah. So if we're looking at a one-year daily chart, what you're kind of talking about is that topping pattern, if you will, right? A lot of volume at that level, but the sellers outpaced the buyers, and we started seeing a pullback. And you are seeing volume selling a little bit more, obviously, today with the news headlines. But we are actually getting close to a key area of support right around this $415 level. That's the primary trend line that we've had since the April lows or the March lows of 2025 here. Now, MACD, bearish formation, 12 EMA below the 26 EMA, still above that zero line. Let's see if it actually crosses below that. That would confirm the bearish signal for this company. And RSI, once again, kind of getting close to the oversold territory. But we have seen some buyers stepping in at that white trend line, which once again kind of coincides with the 415 level. So we might be getting a little bit closer to an area where maybe some buyers want to try to step in and take a shot at this name on.
Yeah, and speaking of, if someone was going to go about doing that, what are some things to consider? I don't know if you got an example for me or not, KG, but I know this is a name that many traders look at. So what are some insights you got?
Go get something
to
eat.
This example trade that I actually brought here is more on the neutral to bullish side. You are actually looking at a put vertical spread, selling this put vertical, looking at the January monthly expiration, January 16th. Selling the 415 put, buying the 405 put, doing
just even take the day off.
60 cents. So the max,
we're down here at the bottom. We got to do something.
$60. The max loss potential could be up to.
Oh, you pumping Tesla? Puts. Oh, how dare you?
There's a lot of ways to do trades. You can structure it based off risk and reward. You can structure it based off of a directional bias, whatever it may be. You walked us through a technical picture. You structured the trade around that. Really interesting example and interesting stuff, as always, out of Tesla when it comes to news and the volatility on the charts. Kevin Green, always a pleasure. Happy New Year, my friend. We'll talk soon. That's going to do it for our FOMO segment. Coming up next, look at the Magnificent Seven and tech investing broadly in 2026. We'll be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
Jim's Way.
Is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day.
Like
From
this.
volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome to Extra Investing. I now welcome in our next guest. That's Austin Lyon, Senior Analyst for Creative Strategies, to help look back and look ahead on big tech and all investments in things AI. Austin, Happy New Year to you. First question, as we close the book on 2025, what lessons did we learn when it came to big tech that we can take into 2026?
You know, 2025, if you remember, there was a big inflection back in April, and there was all this scare about DeepSeek and what was going to happen to NVIDIA. We obviously corrected from that, and probably the takeaway lesson there was all along NVIDIA and their customers, the big hyperscalers, were saying, we're going to buy a lot of GPUs this year, we're going to do a lot of training and inference, and that held true. And so I think that's a lesson that I'm taking into 2026, which is to look at hyperscaler CapEx as a guide for how will NVIDIA do, and then the sort of up and downstream players like the TSMCs that manufacture the chips.
That being said then, Austin, they've already told us they're going to spend a ton of money, record-setting money in 2026. What does that mean? Does it bode well again for a lot of these same names that we saw be winners over the last several years?
Yes, so it's a good question, and it's a little nuanced. Because it's been told, and essentially forecast to us, there are expectations that I think from a stock market perspective are being priced in, right? We know that these hyperscalers have given particular ranges for how much they're going to spend. You can back out how much of that is on NVIDIA GPUs. So, of course, as far as revenue for these companies is concerned, that's great. Now, I think there'll be questions around, like from an investing perspective of, will we see any surprise upside? For example, Micron had some surprise upside recently. I think because 2026, the spend is getting so high with CapEx and it's so forecasted, there's probably less opportunity to be surprised to the upside and more about being surprised to the downside. What is preventing from all of these GPUs from actually being shipped and getting into the hands of customers? And that could look like data center build out issues, or it could look like supply chain issues.
Is that something then, if we take that as sort of, hey, expectations are sky high, more likely to disappoint than exceed, is that something that time can correct? Because it kind of sounds like we're basically also saying, hey, these stocks are expensive, but they're expensive because there's a lot of expectation that they're going to have to deliver on.
Yeah, there's definitely a time component here, and there's the horizon, we can only see so far is with respect to like the applications that'll take off, the consumer applications. So we definitely, there is a capability overhang where models are being trained.
So weird.
enterprises are adopting AI and they're getting value out of it. We see CapEx spend is really high, but there's not yet like really a killer app or something that is going to take us up to that next side, where consumer use might skyrocket or enterprise AI adoption might happen even faster. On the other hand, one of the things we saw in 2025 was the rise of these thinking models or long reasoning models. And a lot of value has been created out of those. And mind you, everything that was shipped in 2025 was trained, the models were trained on NVIDIA's Hopper generation. Right now, models are being trained on the Blackwell generation. So there is some optimism that as even more intelligent and useful models come out, that we will see even more value that can come in the form of new use cases or just things that weren't possible yet. So on the one hand, the cautious stance would be, yes, it's all priced in and adoption just takes time, and so let's see what happens. On the other hand, maybe we'll be surprised with even more intelligent models or longer form video generation or things that don't even exist yet. So there's still some upside, that might happen.
When it comes to things that I think have changed since the last time we had a chance to talk to you, it seems to be this discussion around TPUs and particularly Alphabet's role now within the hardware conversation. NVIDIA seems to have made a swift decision to compete in that space with the big-time deal with Grok. How big of a story is this? Or is the story pretty straightforward now and NVIDIA already made its play?
Here's how I would think about it. NVIDIA has GPUs, which are great for data center, AI inference, and training. They're flexible, they're very performant. On the far end of the spectrum are Grok's LPUs, and NVIDIA just made this $20 billion sort of pseudo acquisition of Grok recently. And those LPUs, they solve a particular workload, a particular use case, really ultra low latency, which is really fast responses, but they're not as flexible. They can't hold as big of models, so they can kind of do like good enough models, but super fast. Those support two different use cases. Google's TPU sits in the middle, but it is a little bit more like a GPU in that it's pretty programmable. So I don't really look at a TPU as a perfect substitute for GPU or a substitute for an LPU. They kind of serve different use cases. And so we will continue to see customers want NVIDIA GPUs for the flexibility. I think we'll see a rise in these like ultra low latency use cases. And then I would position the TPU as really just diversification for hyperscalers or companies like Apple who will use a TPU to diversify so that they don't have all their eggs in NVIDIA's basket.
All right, let's talk some Apple. Looks like not so exciting when it comes to Vision Pro. Meta's kind of scrapped that. I don't know that that's a big surprise, but where does Apple end up in all of this? Is the stock kind of quietly rallied up to all-time highs towards the end of the year?
Yeah, here's how I'm thinking about Apple. Apple got knocked a lot in 24 and 2025 as not being an AI play and kind of missing out on the AI trade. On the other hand, at the end of 2025, they did really well doing what they do best, which is making new devices, introducing new colors, introducing a new form factor, the iPhone Air. And even if the iPhone Air wasn't a smash hit, it was enough to get people in the stores buying phones and Apple just being Apple. If you're cautious on the AI trade, Apple would be a decent growth opportunity. They're going to ship the iPhone Fold that's rumored to ship in the coming year. And so again, it's traditional Apple bringing out interesting devices, interesting experiences, and just trying to win customers that way. So that's how I think about Apple in 2026, is maybe a different play than an AI picks and shovels play.
All right, Austin, you know as well as anybody the importance of the story and the narrative when it comes to equity investing and everything involved in it. A year from now, what do you think we're talking about if we're having this same conversation?
Ooh, a year from now, I hope that we're talking about more edge AI, more inference, whether that's on your laptop or something. But what I'm really excited about is autonomy and other opportunities like the humanoid robotics. I think humanoids still have a ways out, but if you think of cars as big robots, I think we will see continued advancement in self-driving. That could, of course, be from Tesla, from Waymo, but it might also be from Rivian. And so I think what will be really interesting is to stand here together a year later and see how far that comes. And then, of course, ask the questions, how does that impact companies like NVIDIA or memory companies like Micron or even the AMDs and Intels?
Good stuff. Austin Lyons, Creative Strategies. Always a pleasure. Happy New Year. We'll catch up soon. Coming up next, we're going to talk Core Scientific for under 30. George Tillis will stop by as we talk where blockchain meets AI when it comes to the infrastructure and all things needed right after this.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with
It's real hard to be a wait-and-see bull right now for some reason.
7 days a week on Schwab Network.
Real hard to see sitting here and be a wait-and-see bull. It ain't working. Been like that for about a month. I'm out of coffee, I'm out of snacks. George.
Into essentially an AI infrastructure and high performance computing and co-location technology company. The reason I brought up CoreWeave, in fact, is because CoreWeave made a bid to purchase the company. It was around a $9 billion acquisition attempt, and Core Scientific actually rejected the bid because they see their value as a standalone company much more so than what the CoreWeave shareholders were offering at that point in time. And in fact, in the last 6 months, you'll notice there's been a little bit of a divergence away where CoreWeave has been an underperformer, I think, because of their exposure to OpenAI. And Core Scientific has been down over the last 6 months, but it's only been down about 8% relative to CoreWeave, which is down a lot more. But nonetheless, this is a company that's certainly growing, in terms of what their business model is now projecting to become more so in high-performance computing and AI and cloud infrastructure. Their top-line sales are expected to continue to grow. Last year, $334 million in sales. This year for 2025, so that includes the Q3, this full year of 2025, $346 million. Next year, for 2026, which we're already in, I have to correct myself, around $780 million. So they're expecting to more than double their sales going forward. And in fact, this last year, 2025, estimated loss is around $1.70, but this year in 26, they're expected to become adjusted profitable with 16 cents on an adjusted basis. So I think this is one that's interesting from the standpoint of, yeah, they're getting closer toward adjusted profitability. Last year, they did lose quite a bit of money, about $770 million on $4.5 billion in market cap. And again, most of that was share issuances to expand their operations and capital expenditures. So I think this is one maybe worth watching. You know, looking at it, it's bounced off its 200-day moving average or your 50-week moving average. If you look at their cash position, it's pretty strong, around $450 million. And, you know, that was a pretty big risk to stay as a standalone company. I think they're very confident in their business going forward. They do have about a $10 billion backlog. I think that's important to mention. That's pretty significant considering, again, that this year they're expecting around $770 million in sales.
George, safe to say, and this is a big if it does continue to transition away from traditional mining as its primary source of revenue generation, easier to say that volatility of revenue, volatility of earnings comes down as it becomes almost more REIT-like in its structure?
I think so. I think it's a good point. I mean, if you want to look at it from purely a Bitcoin mining standpoint, keep in mind that's still the majority of their revenues. Over time, it doesn't look like that will be the case. They're getting a bounce today with the stock up around 9%. It's a high beta name associated with crypto right now. And so we are seeing, you know, crypto moving higher. We're seeing a translation effect or a sympathy effect in the miners. And so that's, again, what we're looking at today. I can't say what will happen with crypto going forward. Maybe we'll continue to retrace back to the upside because crypto basically went into a bear market, down about 30 to 35% from the all-time highs earlier, late last year. So with that said, keep this in mind that a lot of these commitments that are expected to generate revenue for Core Scientific are contingent upon customers continuing to build out their infrastructure. So I think maybe, again, worth watching, but keep in mind lots of volatility associated with these names.
George Hill, it's always a pleasure. Happy New Year, George, and thanks for the update on Core Scientific. That's going to do it for us here on Next Gen Investing. The watch list is up next. Everybody have a great weekend.
You bet. 2 more hours left in market.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
You do.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and
Looks
stream
like you made the
live
right decision, young man.
Good afternoon, everyone, and welcome to the Watch List. I'm Diane King Hall. Coming up on 2 p.m. Eastern here at the New York Stock Exchange. Let's start out with our roadmap. Here's what's coming up on today's show. Chip stocks continue to rise in 2026. We'll have the latest headlines to start the new year. Plus, one investor explains why the market acts like it drank a double espresso, and our panel breaks out their crystal balls to see what happens in the markets this year. I think everybody's got a crystal ball out today. Let's take a quick check on the markets with just about 2 hours left in the trading day. We're watching some mixed action. We started out stronger to start the
Acts like it
new
drank
year
a
off.
double
Bumping up
espresso.
at the start of today's session. We've pulled back some. I call it curb your enthusiasm right now. But keep in mind, even though we're coming off of 3 years of double-digit gains, this is how things started in the previous year. The first day was actually weak, so we'll see how things shake out. The S&P 500 off by 0.2%. NASDAQ 100
I don't know if this
lower
market
by
remembers the
0.5%.
past.
Earlier was the star of the show. Now it's flagging. The Dow right now better by 0.2%. Small caps are currently the belle of the ball, up 0.4%. Let's take a look at across some of the other price action across asset classes. The dollar a little higher here right now. Gold pulling it back. Gold earlier was higher. It's off by 0.3% there. Crude oil continuing to flag. Keep in mind, crude oil is coming off of its worst year since 2020.
Okay, I gotta figure out what to do here.
Currently, we're looking at crude oil lower for West Texas Intermediate, lower by about 30% there. Bitcoin catching a bid right now, breaking through that 90,000 level. That's been a level that we've been watching right now as it relates to Bitcoin. Bitcoin higher by a little bit more than 2.5%. For some of the biggest stories in the markets, we want to welcome in Kevin Haynes, co-host of Fast Market, my partner on that show here on the Schwab Network. So let's talk a big picture take on today's market action, Kevin. I know earlier you said it feels like this is a continuation of that kind of holiday sleepy action. Is that still your thought?
Yeah, exactly right, Dan. And here's why. Look at the S&P 500 down about 0.2%, but the equal weight S&P is up about 0.3. So this is the large cap tech, information technology, communication services. Those two, along with consumer discretionary, those are weighing on the market. It's like the 493 doing a little better than the Mag 7 today. Some of them are a bit higher or firm, but all things considered, this is a broadening of the overall market, not a rally of the overall market. So, watching that, I think it's an interesting equal weight higher, but the S&P lower, Diane.
Okay, and then let's talk about the memory stocks. I mean, these were the winners for 2025. You have Western Digital continuing its gains today. You've got Micron continuing its gains today. You've got SanDisk, and these are all winners to the tune of 500%, more than 500%, more than 200%. It's like, how much further can they go? More today, it seems like. What's your thought?
Yeah, this is another, just like the overall market being a continuation of the last few weeks, this rally in memory stocks, Micron, SanDisk, Western Digital, those are the three most high profile names. That's a continuation of what they did last year. And 2026 is probably going to be the year of winners and losers in AI, and clearly these memory chips doing extremely well. Micron, when we think of Micron and how much that stock has rallied, it's pretty incredible how they are one of the massive winners in the AI trade, Diane.
Yeah, massive certainly is the case. And speaking of massive moves and solid moves to the upside, you got Baidu rallying more than 14%, or about 14% right now. For people who haven't been paying attention to this one, talk us through the trigger here.
The name of the company that they're spinning off is their AI division, Unluxin.
Here we go for our second
they're spinning it off to be
boom
its own
here.
stock. They claim this is the capturing of value and overall, adding value to the pieces of the company. But here's the comment: they announced a proposed spinoff and separate listing.
You're at your second
shares of Unluxin Technology.
You got your second chance here. I added on at this second dip, third dip, fourth dip. I don't know how many dips. But you're definitely at a resistance level. Unless you think it's going to break. The 6850s. It just seems like it's always a broken record with these people. See how it hits that 200 and stops? That was at 245. Blanket. $240, $250. Do it. Blanket. Definitely at the 200. I mean, Could make a business decision here. Business decision.
Up nearly as much as certainly the mortgage market was back then.
This could be it where it breaks out.
I was saying a few weeks ago, hey, when you got one cockroach, which was this first brand situation,
Cockroach.
That's usually not.
There's more.
There's usually more of that.
I don't want to hear about that. I want to hear about breakout, and then boom. I don't want to hear about a cockroach. Who's this guy? You're fired. You're fired. Does anybody take this serious anymore? $2.80. Boom! There we go. I needed that. Oh, I needed it. $3.70? Are you kidding me? Coach Roach, that's right. Oh gosh, $5.40? Okay. From Washboardjim, I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and beating in the now. And I'm sitting on this SPX for most of the day. I added on once, then added on again. These things are at 5:30 now. So it's a little bitty run right here. A nice little run. I'm in the box. So I need to make a business decision. Are we going to have one of them $2,000 days? Well, I bought it real cheap at the 123. You didn't see that, did you? Oh my God. Jim, I didn't see that. You always said if you can count to 3, you can trade with me. And I thought you were some kind of clown from downtown. But I can tell you're some kind of jerk from Spawn Ranch. Bet you nobody knows where that's from. Probably Jesse does. Am I right, Jesse? If he acts like if he says nothing, you know he is. He did. $6.80. Are you kidding me? What should I do when you're up? What should you do? I mean, it looks to me like we could go ahead and break out a lot more. Or we could pull back. Or I get out of these trades right now because I'm up so much. What to do? I think I should make a business decision. Because these will depreciate to zero before you know it. That's the way you do it. That's the way you do it. Hold 'em. Livid Goose says, hold on, sir. $68.67. $6.20. Oh gosh, it's hard to say no. Hard to say no. which is the 9. They could probably drop down and hit the 200 around the 43 area. Oh! Water? No. I gotta get something to drink. There we go. Let's go. 740. We can do it. 980. That's how you do it. December. Oh gosh, I'm getting too old for this. Okay. $9. I still think we're going to go up higher. But you can get caught in one of them fast, fat candles. When you're up like this, you just go. Okay. What to do? Buttock it. You can do it. Then I'll go have lunch. It's 1:30 already. I think we should be having Santa rally myself. We've had a good enough pullback. For the first couple of days next week. Come on, catapult another couple $100. There we go. 1160. Anybody take these? Yay or nay? Oh, you're brave. Live it Goose did. Well, I've got quite a bit, so I don't know. It's hard to look at the... It's hard to look. Not sell. We could see 6867. Jimmy, should you sell? Oh, Jimmy, should you sell? You're up pretty good. This'll take you straight out of the hood. Should you sell? Should you sell? Should you sell? It looks to me like I should. Boom! It looks to me like I should. Well, the year of 1925, it could tear some of us alive. The year of 1925, it could tear some of us alive. I jumped in these at $3.60. I had it on. Got darn air. Now they're at 14.10. Well, I make it to the end. Please be another $20 contract. $68.50s. My average is under 3. It's under 3. I just got through paying my damn rent. Rent's too high. Rent's too high. Come on, break it to a new higher. I want 12. I want 2,000. $2. $20. Oh. Oh yeah, F you to you too. I used to say that to him. We're at 15. 10. Friend. Oh, I come up with a great song lyric last night. Where'd I put it? I hope I don't lose it. I thought this was... I'm a single mother of 2 sets, twins, and one right in the middle. Well, my first set, they were both men. Made great bookends. I'm a single mother, 2 sets of twins, one in the middle. Make good bookends. I'm a mother. With 2 set of twins. I'm a single mother. Oh, and one in the middle. Okay, we're about ready to hit my resistance level. Hold on. I got 68, 67, 90. 68, 67, 90. single mother with two sets of twins. One stuck in the middle. They're about ready to watch another hit record being made. We're waiting for the breakouts. We're actually above the VWAP now on the /ES, and this other one's had a pretty good run. I think it should stop faking this out and go ahead and do it on its next run up. What do you think? It's had its chance here. If it doesn't, I'm going to get out. Because I'm going to go get me a coffee. We're getting a little bit bearish here now. Don't be doing that to me. Yes. Boom, 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 boom. Come on now. didn't panic and sell there. They were down $120 from here a piece. Hold on there. Let's break it. See, give me a second chance here to say, go ahead and take your profit. You're up real nice. Takes most people, and I'm going to be generous, over a quarter of a year to do what I just did right here if I sell it right now. At a job, working 8 hours a day. To sell. I was getting ready to sell it, and it jumped right before I knew it. A red candle came in. It's my major support level right here. Next one could be right in here, but it's hard to say. This was a major. So I'm holding on to this. I'm just flirting. Don't throw your money away. I'm telling you, there's much more to do. Don't throw that money away. Don't throw it away. I was about to throw that money away. Look at that. 1440. Woo! I've been going back and forth for the last, 15, 20 minutes saying, sell it, shit, and get out of it. It's going to be interesting to see where this goes. Got a red flag. If he sells it here, he knows that it's going to fly. If you don't sell it here, you know it's going to die. So what you going to do? Put in a fake sell. Fake order has been put in. I think about had it. Give it just a few more minutes. Because if it runs back down to 68, 54, it'll be down $500 or $600 a contract. 4 at least. Back to 1260. Back to 1260, should I say? You see it's bearish right now because you're under the 9. But we're above the VWAP on the /ES. That's the only thing that's keeping me in this trade. The /ES. That's here on the right. This dotted line. We go below that, I'm out. I'm happy with what I got for sure. That's the closest we got to me getting out of that trade right there. I think even if I'd touched it, I might would have sold it. Okay, we're getting close to that exit idea. Oh, I kept pushing around and I roll myself around on this. Oh God, this is not a good spot. Two more minutes to power hour.
Entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Did a good job.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Happy New Year, good afternoon, and welcome to Market on Close. We've got an hour till the closing bell. I'm Alex Coffey filling in for Marley Caden live from our Chicago studios.
Hi there, Alex. Happy New Year. I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show as we look ahead to 2026 and look back at 2025 with chip and memory names among the biggest winners today. We'll discuss the outlook for AI, the Fed, and the upcoming midterm election. Yes, it is an election year already. Can you believe it? Plus, we'll look at some of the sectors and stocks that could outperform. But for now, Alex, take us through what you've been watching today in the markets.
Yeah, it's been a choppy day, Sam, but as we stand right now, 3 of the 4 major markets in the U.S. are green. After a really nice start to the day that was narrow in its focus, we saw a broadening of the participation. But with that, we saw a weakening of a performance in the major averages. Or as we speak here in real time with just about an hour till the bells, the S&P 500 is trading higher by about 11 points. With about 68% of the components higher. The NASDAQ 100 split 50-50 does trade lower by about 17 basis points. The Dow and the Russell both trade higher on the session. You can see the heat map as some of the names like Apple and Microsoft drag on the major average here, but all things considered, a pretty mixed day. Taking a look at some of the other asset classes on our board, you got a 10-year yield that is trading higher by 4 basis points. A U.S. dollar index that continues to oscillate around 98, trading above that mark right now, up slightly on the session. Bitcoin higher. Crude oil pretty quiet but lower, and gold, after trading higher on the session to start the day, has flipped red, but you do still see silver, copper, and some of the other metals doing okay, Sam. What else are you watching today?
Similar to what you and I were sort of discussing on Next Gen, Alex, I mean, as far as, the interesting kind of wiggles that we've seen in the market today, particularly as far as the rotation is concerned, it's really been a case of a sort of AI infrastructure type story playing out when you look at who is actually leading the pack here, because initially it was technology that was back in the driver's seat. Then we saw a little bit of steam coming out of some of those names, although we still have the names like Nvidia up. We still have the memory names doing very well off the back of that strong performance out in Asia, off the back of Samsung. We're going to dig into that story, the details of that in just a second. But, you know, you've also got the industrials performing quite well, the utilities, which have really been catching a bit off the back of this whole AI trade. You know, what's going to sort of power all of this stuff, the materials, the rare earths, the critical minerals, all the stuff that goes in to building all these data centers, and of course these chips, and then the energy as well, as I mentioned, to power all these AI data centers too. So a really interesting story. Let's see if this sort of sets the tone, because the conversation very much had been that 2026 is going to be one of sort of more winners and losers and more sort of selective strength. You know, as the narrative sort of shifts from what we're doing with AI, particularly around the build-out, the infrastructure, the energy. So let's see if this is really the tone setter for the rest of the year. But something else that caught my attention today, Alex, is these Chinese stocks very much outperforming. I mean, you've got names like Baidu, obviously, with this spin-off of its AI chip company, Kunlun Xin, with a potential listing on the Hong Kong exchange as well. So we've seen that stock up in double digits. We've seen Baba outperforming as well. You've got the internet index KWeb 2, which is higher today. And this is all
definitely at a spot now.
Performance out in Hong Kong overnight. Remembering the Chinese mainland A-share market is actually closed still for a market holiday. But in fact, we did have a nice IPO, not to mention over in Hong Kong overnight. Shanghai
very volatile,
rallying up over 70% in its first debut. And you know, this is important because this just goes to show this is another piece of the puzzle as far as, you know, China coming up with these alternatives to US technology. So obviously we're seeing some follow through on that front as well. But for a further look at some of today's top moving stocks, let's bring in Kevin Hanks, host of Fast Market.
She did that on purpose.
Kevin. So a little bit of a different old day to what you and I were sort of discussing at the open, but one thing that you did break this morning was the Tesla deliveries, and interestingly, as we walked through those numbers, Tesla was higher, then we took a turn lower. What happened? What did those numbers tell us?
Well, I think from a delivery perspective, remember, everyone in the news is going to read the headline. And the headline today is from Tesla. It's going to be they missed on deliveries. They thought they were looking for expectations down around 15%. It came down 16%. 418,227 were the deliveries. So if you think about it, for the year, it was about 1.63 million. That's less than the 1.64 they were looking for. I mean, if you think 2023, it was 1.81 million. 2024, 1.79. So the trend is certainly not going well for Tesla. But at the same time, though that will be the headline, and that's what everyone will look. Their storage, their energy storage business is doing gangbuster business and growing like better than expectations. So that could really, though everyone knows that we're in kind of a down market in terms of EV sales, their energy is probably going to help them beat earnings, but that's not really helping the stock today, as that headline grab has got the stock weaker on the day, Sam. Yeah, you guys, when you look at Tesla, 9 straight red candles, Kev. So a lot of opening higher and closing lower in the last couple weeks of trade. But, you know, the more things change, the more they stay the same, they often say. And, you know, the story of 2025 was this memory stock rally, the Microns, the Seagates of the world, Western Digital. Well, we're picking up where we left off, Kev. What did you make of the moves that we saw in these names to kick off 2026? Yeah, it's interesting, Alex, when you look at these names that have rallied, Micron and Western Digital, these companies, they put up video game numbers in 2025, and they're starting off even better in 2026. You know, we've covered Micron a lot on the Schwab network, and this stock used to trade, you know, in such a cyclical manner, and it was such a low PE stock, but it is just off the leash right now and really going higher. And as we get into 2026, Alex, I think one of the themes for this year might be AI winners and losers. Boy, memory definitely going to be one of the winners.
Well, today's your first day in it.
Yeah, it certainly seems like it. And of course, they're catching a tailwind from that Samsung and SK Hynix story overnight which propelled the South Korean Kospi to a record close to start 2026. So a very, very strong start to the year there for regional markets. Hey, let's talk about some of the losers on the session, though. I mean, I was talking about the AI infrastructure names that are gaining and, some of the sectors that are benefiting from that. But that is compared to software, which is really underperforming. It's going in the other direction. Talk us through what you're seeing there.
Yeah, I'm really focusing on watching Palantir, now down 5.5%, just under $10 it's down. And, let's face it, this stock that does so many interesting things in the decision-making process from AI, taking large data sets and helping with decision, and their ability to go from when they started out a government, mainly with government customers, for them to be able to put that to small and medium-sized businesses in the U.S., that's why this stock rallied. But as you know, when it did rally, and the growth numbers are outstanding and exponential, it still has a valuation that's high premium. So if they start taking digits out of the growth metrics for some of these companies, yeah, you can see more days like this. Palantir, such a high profile name with such a dynamic CEO, really taking it on the chin today to start the year. Interesting.
Kevin, I know you always got your eyes on the apparel space. We've talked Nordstrom's in the past, but I always feel like you had a soft spot in your heart for Under Armour. What are we seeing there? UAA on the move higher?
I gotta admit, I smiled when I saw this in the notes today, Alex, because Under Armour is a fascinating company. They started out with premium brands and high quality gear that everyone loved. And when you looked at the youth of this country, they were everywhere. And then I think personally that they lost their way. They started making less expensive. Their CEO kind of left and brought a new CEO in that kind of messed things up. So the stock has been down in the dumps forever, but it appears that Kevin Plank is coming back to the company. It clears there's good news and some hope in the future, because you're right, this stock has sat, extremely low levels, below $5 for a long time. Alex. So maybe, just maybe, Under Armour has a heartbeat.
Pulse check on that. We've run through a couple of the movers and shakers in the market today, but what's your overall takeaway here, Kevin? I mean, obviously this is a holiday market. We get a lot of information next week. Obviously there's going to be a pickup in market activity as people really get their feet under the desk in earnest. What are you watching out for? What stands out to you about the tone setting we've seen in the market for 2026 today?
Yeah, the first thing I try to do on a day like this is acknowledge that probably the real trading season starts on Monday, when you'll have most people back from their vacations. Today was kind of a throw-in, even though it is the first trading day of the year. I believe that the real trading season starts on Monday, Sam. So I try not to read too much into this. I think it's interesting that the S&P is up about 0.2, but the S&P equal weight is up about 0.8. That tells you that they're moving out of names like Palantir and others and into the other, 493 or, other than the Magnificent Seven. So I think that's an interesting take. Besides that, how about consumer discretionary with Amazon and Tesla both taking hits here? That's a big move. When those two stocks that are a big chunk of consumer discretionary, that'll make that sector of the S&P 500 really weak. So, your first statement, what was the most true, Sam, and that is, I don't know if I put too much into this yet. Next week is really where the rubber meets the road on this trading year.
All right, on that note, we'll let you go. Thanks so much for helping us out today. Kevin Hinks, appreciated as always. Coming up, we will discuss what's ahead for Jerome Powell, the Fed, and the impact of the midterm election on markets this year. Coming up next.
Hey, investors, you know the market moves. and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Yep. Sounds real nice.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close here on the Schwab Network. I'm Alex Coffey in for Marley Caden, joined by Sam Bottas live at the New York Stock Exchange. About 45 minutes till the first closing bell of 2026. Taking a look at where the market sits now with that 45 minutes or so into the first trading day. You have the S&P 500 clinging on to about a 15-point rally. The NASDAQ 100 is mounting a comeback, now down only about 12 or so points. Russell 2000, the Dow continue to trade higher. But as we take a look at some of the sector performance, energy, the leader in the clubhouse at the moment, up about 2%. Industrials, materials, utilities on its heels, though, all of which over 1% to the upside. Mixed performance, though, when we start getting into some of the higher beta sectors. You do have IT up about 7 basis points or so. This after closing the year on a bit of a slide, down over the last week, down over the last month. Communication services down in the session, down about 1/3%. And the consumer discretionary segment, of which of course is powered really tremendously by Amazon as well as Tesla, two of our big Magnificent Seven components, both of which dragging on the consumer discretionary segment here today, down about 1 percentage point. Speaking of that Magnificent Seven and mega cap tech, let's take a look at some of those performers here on the session. Apple, after trading higher, close to 280 earlier today, had about $100 billion intraday turnaround, now trading down on the session by about 0.5%. Amazon, as I mentioned, is down just shy of 2%. Alphabet, after trading higher by quite the margin earlier, still higher on the session, but only about 0.5% or so. Similar story for NVIDIA, although it has been the class of this group for not only the last couple of years, but throughout today's session. It's the biggest contributing factor to the upside in the S&P 500 today. Its $2.30 rally is contributing about 6.5 points to the S&P's 12% or 12-point gain, I should say, here intraday. Microsoft, of course, the biggest laggard of any name, contributing negative 10 points to the S&P 500. But with that, I'll send things back over to Sam in New York.
Thanks so much for that, Alex. Let's welcome in our next guest now. That is Brian Jacobson, who's the Chief Economic Strategist at Annex Wealth Management. Hello to you, Brian, and happy New Year.
Brian.
Just wondering, you know, as far as this whole AI story is concerned, interesting rotation we're seeing in the market today, where we're seeing actually anything that's related to the infrastructure build-out and the data centers is having a very good session. I mean, if you take a look at industrials, materials, things like memory names as well. you know, as we look at AI this year, and this expected to continue to be the key market focus, in what shape do you anticipate that takes?
Yeah, I think that what we're seeing today might be a little bit of a foretaste of what to expect for the rest of the year, where it's basically goes to the maximum, follow the money, right? We know that a lot of the big tech companies that are doing the build out or funding the build out, the cash cows, are going to be throwing cash at a bunch of other companies to really build it out. Now, one of the big questions, of course, is at what point does that become almost throwing good money after bad? So it goes from being a cash cow to cash burn. And that's, I think, the key risk for the markets for the year ahead. Lots of other things, of course, but a big one is just as far as the high expectations of the trends of the hyperscalers to continuing to scale up and to finance everything is, what if there's even a modicum of disappointment in some of the growth rates that we see, or when we see the return on the investment for a lot of the money that's being thrown at it. So I do think that what we're seeing today is one that aligns with some of the themes that we're looking at. It's not just about the biggest companies, it's more about, okay, industrials, materials, other areas, where's the money flowing to?
So if it, pays to be cautious, what do you do in this sort of environment when we're hearing everything about, garlics and avocados and mangoes being thrown at this market, and then obviously we're looking at the picks and shovels more so this year?
Yeah, I absolutely love the names that they come up with for those large language models. You wonder where those really come from. But I do think that it's one of those things where it pays to be cautious. A lot of people might say, oh, I'm cautiously optimistic. But now I'm a little bit more, I guess, reluctantly pessimistic about the outlook, just in terms of how there's so much expectation built into what growth rates could look like. 13% year-over-year earnings per share growth for 2025. Is it a repeat performance? Is it going to be better? Is it going to be worse? I think that we're going to see the economy do really well, see some acceleration there, but maybe the market has already priced in a lot of that goodness. And so as a result, I'm just thinking it might pay to be a little bit more defensive, more healthcare, some consumer staples, focus on profitability, and don't just go chasing the charts. And I think that's what a lot of people have been doing lately.
Oh,
and then obviously,
low blow.
Some of the sectors that you highlighted, we have seen them catching a bid. Obviously, there's an expectation that healthcare is likely to outperform, particularly in a midterm election year. I'm just wondering, as we approach this election, what the impact on the market is likely to be. Who do you believe the winners and the losers could be in a year like this?
Yeah, a year like this, so just looking at the numbers, right, healthcare does tend to be the one that stands out. It tends to be a little bit more defensive because midterm years tend to be a little bit choppier, lower average returns than in the other years. But when you look at almost the month-by-month returns, it seems like it's because of the campaigning, almost like the vitriol, as far as how that can affect the markets, the big swings. And then until we get into October, it gets perhaps a little bit clearer about what the composition of Congress is going to be and what sort of policies may or may not be forthcoming, that the markets tends to get a little bit firmer footing because some of that uncertainty is resolving. And I don't see a reason why it might not play out in a similar way this year, although maybe it's a little bit more accelerated. It could be more first quarter.
I mean, how much is that got the scope to sort of, or as markets, depending on who that person is? I mean, how much of an impact does that have on, the trajectory of rates right now?
I think it could play a really big role, mostly because what's baked in is there's so much confidence that it's either going to be Kevin Hassett or Kevin Warsh or Chris Waller. What if it's some other candidate that we haven't even really been thinking about? So I think that there's the possibility for a surprise where it could be a different candidate, and then we're going to have to rethink things. But if it's one of those three, I think the market would take it all right. Probably better if it's Chris Waller or Kevin Warsh, only because of the optics around it, where keeping in mind that the chair is a very powerful voice, but only one of 12 voices around the table and one of 12 votes, and each one of their votes counts equally. Now, Chair Powell, his term as chair is up in May, but his term as a governor is not up until 2028. And I would not be surprised if he decides that he's just going to hang around, because the president needs to appoint a chair from one of the governors. So chances are it's going to be Myron's seat that he currently occupies. And so perhaps you could see a little bit of a subtle power play here as far as Powell staying on more as like that protest vote than anything.
Yeah, and then obviously the other two political stories that the market is watching very, very closely, Brian, is whether the Supreme Court will overturn the tariff ruling, and also, of course, with respect to whether we'll be facing or staring down the barrel of another shutdown. What are the likelihoods of both of those situations and the outcome on the markets, do you think?
Yeah, I think a high likelihood that we see another shutdown, basically end of January, but probably a little bit more short-lived than the first one. Hopefully, that was a record-breaking one, but typically that is what happens. You get the longer one, and then it's about some of these this unfinished business. Maybe it shuts down over a weekend. Would not be surprised if that happens this time as well. But then, in terms of the IEEPA tariff, so that's where the president basically was saying everybody gets a tariff. I do think that based on the arguments, it's quite likely the Supreme Court will rule that overstepped that particular statute, but it's not as though there aren't other statutes that can be used to put in tariffs. The great thing about that, though, I think, is that it really does put a firm cap on how high the tariffs can go, because one of them, it can only be 15% for 150 days. The other, it has to be fact-finding, and then it has to go through hearings, and so it's a little bit more cumbersome and perhaps more limited. So while tariffs are still going to be an issue, I think, if anything, the Supreme Court ruling is at least going to put a cap as far as how high those tariffs can go.
Great stuff as always. Really appreciate your insights. Happy New Year to you, Brian. We'll do it again very, very soon. That is Brian Jacobson, their Chief Economist at Annex Wealth Management. Coming up, we'll take a look at the sector picks for the new year and investment strategies for your portfolio. We'll be back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Alex Coffey alongside Sam Bottis in New York. Today marks the first official business day at Berkshire Hathaway post Warren Buffett, the longtime CEO, retired on New Year's Eve. The 95-year-old Buffett will remain, however, as the chairman, but has handed the CEO reins over to Greg Abel. Today is also the day that Berkshire's $9.7 billion acquisition of OxyChem from Occidental Petroleum closed. Berkshire Hathaway shares trading down about 1.5% here to kick off the new year. And with that, we'll send it back to New York and Sam Vadas.
Thanks so much for that, Alex. We'll discuss the expectations for inflation, growth and risks in the market. I'm very pleased to say I'm joined on set now here at the New York Stock Exchange by Wayne Piniella, CEO of NextGen EMP and the author of this book, Risk is an Asset, which you wrote about 5 years ago. Just talk us through, your approach to the markets, obviously with regards to the dynamics and, how you look at all the sort of moving parts.
Well, that's a great question. The point that I think people get caught up in all the time is trying to pick the winning horse in a horse race. And they forget about the structure of the market and what they're actually trying to accomplish. So, for example, when we look at an index and how much the S&P is up 16% last year, but that's the average of all the industry sectors. That's not a simple winning ticket. In fact, the one bet they don't let you make at the racetrack is, I want to bet on a horse that's going to be in the bottom half of the pack. And if I get that horse right, I'm getting paid. Right. They're not going to let you make that bet. So what we do is we look at the structure of the market and we identify the industry sectors that are likely to match or outperform. We go long those, and then we're a long short fund. And so we use the ones that we don't expect to match the market performance as hedges against a catastrophic fall. So last year, sitting here a year ago, who would have anticipated that the S&P 500 would drop 20% in the first 4 months and then rally 40% to finish up the year 16%? You can't anticipate that.
No, that's right. And I had a guest on this morning. It was Peter Tuchman over at TradeMass, one of the brokers here on the floor, and he was saying, look, 2025 just proved that seasonality went out the window because it sort of did everything that was the opposite of what it traditionally does. So in that sense, Wayne, what are you looking at as far as the structural drivers in this market right now? I mean, which industry sectors are you looking at in 2026 that are likely to outperform with all this AI build out, the energy, I mean, certainly the story playing out today with the infrastructure build out?
The real interesting segments are anything supporting artificial intelligence, semiconductors. That is creating efficiencies in our universe, our economy that are really, some people may know which companies are going to figure it out first. I don't. I just know that I want to be in that business.
Right.
And then you need energy. So we've been long uranium as a sector because the energy is going to have to come from someplace. And then finally, you have this big shift where people made a fortune in digital currencies, and now they're getting nervous about it. So what are they doing? They're shifting.
Beautiful little setup there at the end of the day.
Into metals. I think that's a big
5 minute.
I mean, I know there's some fundamental reasons why silver took off this year, and it's probably the biggest rally since 1979.
Yes.
Think about it, staggering.
I know.
But is that repeatable? That's a good question to ask yourself.
Right, and so what are the fundamentals? I mean, what do the sort of market stories tell you about whether that is sustainable as far as, some of the rally that we've seen in precious metals, some of the gains we've seen in other commodities. I mean, particularly when you look at things like copper, for instance. What sort of stands out to you? What's going to be the big story this year?
You have, when you look at the broader market, you have incredibly high valuations, largely on the large cap companies. So I think everybody has already anticipated a perfect scenario where interest rates come down with inflation coming down, and there aren't any big surprises. I think they're completely underestimating the potential for economic growth. But that growth is not going to occur in defensive industries. It's going to occur in your cyclical industries as they adapt to these advances in the economy and technological changes. Ultimately, the defensive industries are going to catch up. But right now, we're mostly long things that would otherwise be known as cyclical industries, and mostly short things, not completely, but mostly short things would be called defensive industries.
Gotcha. Let's talk about some of your top holdings, at least. What's on your radar at the moment? As you mentioned, I mean, exploration for oil, gas, uranium, you've mentioned that. Semiconductors, which I suppose is a no-brainer there. Staples, discretionary, retail, and telecoms. Just talk us through why.
I'm not a fundamentalist. And I went to Stony Brook University, and most people that study the markets know the Renaissance Fund that over Jim Simon's life generated a compounded rate of return of 35% a year. And Jim's was a mathematician. I'm a statistician, a baby mathematician. And he said everyone believes that each data price has the same amount of information in it as every other piece. And he says that's blatantly wrong. Some pieces of information, some data points have more information than others. And what you have to do is organize your data in a way that allows you to access that. Because the market is a consensus. It's telling you how people are betting. And when you understand where people are laying their capital, you just need to jump on, grab the tail of that dog and go with it. So I can pick any stock or any industry sector and get 3 economists, and I won't get all 3 of them to agree on why you should own it or shouldn't own it, right? And that's always the problem with fundamentals, because there's an unlimited, perhaps an infinite amount of data that you have to sort through.
Right.
And people, because of their emotional biases, tend to latch onto one or the other. What our algorithm does is it says, what's working? Let's do that. What's not working? Let's use that to hedge our overall systemic exposure.
So, you know, as far as somebody who watches the commodity markets very closely, you must pay a lot of attention to what's going on sort of internationally with all the sort of global cross currents that are going on right now, particularly when you look at energy markets, you know, where a lot of this stuff is sourced from, the geopolitics that's involved in this, you know, with China and the rare earths. And some of the narrative and the story that I've heard moving into 2026 is, you know, maybe with the weaker dollar, you know, maybe places like LATAM get a bit of a look in now. What's your kind of outlook for what's going on everywhere else but here in the US?
The United States is the most innovative country, has been the most innovative country in the world. And what are the 3 tailwinds that always drive market prices higher? It's obviously innovation, and then you have inflation, which we have, and you have increased population. I call it the 3 Ns. And people are still moving to the United States. We have, especially with the current political environment we have, we're deregulating it. So, you know, there are industries like oil and gas that are temporarily going to suffer because as we increase more production, their sales prices are going down and their revenue is going to go down. But in the long run, they're going to be much healthier. In the short term, there are other winners that with this deregulation, now all of a sudden they can do things and the returns are happening very quickly. So when you look across the globe and try to anticipate which of these countries or economies are going to outperform ours, that's a tough bet, and there's so much more regulated than ours. It's just hard for them to keep up, in my opinion. So we don't really focus on them very much. I'm not saying that we don't have American companies with a large international exposure in them, but we trust, just as a fund to fund, we trust the fund managers to manage the individual holdings we have well, and they in turn trust the CEOs of the companies that they've invested in to make those decisions well. It's such a complicated matrix of decisions that you have to find the right people and make sure that those are the ones you're betting on.
And just very quickly, I mean, you know, there was a question around US exceptionalism sitting sort of here about 12 months ago. And I mean, I suppose that didn't really turn out to be true because we saw double-digit gains for the S&P 500. And it really was a rally across bonds and commodities, etc. All but the dollar was a little bit weaker. Obviously, it's worst year since 2017. But I'm just wondering, you know, you're bullish on the US, you're bullish on growth. Is there anything out there that you see, you know, for instance, gold? Some people say that it was a canary in the coal mine. Is there anything that concerns you about some of the risks out there this year?
Well, any of these markets, it's like a pendulum. They can get overbought, they can get oversold. It'd be very hard to imagine that gold and silver could have a 2026 like they did a 2025.
Yeah.
It's but again, it seems that the current demand for silver is outstripping our short-term ability to supply it, so we're draining reserves, and that's lifted prices. And then that has been further supported with money moving out of digital currencies into something tangible that they understand, because people are finally saying, you know, how much risk do I really want in this? And if I pull some out, you know, I'm in a much stronger position. I mean, diversification has always been your friend. As Mark Wood said, diversification is the only free lunch.
Right.
And I think that you saw a lot of rebalancing this year. And, you know, we're coming into a midterm election year, and it's there's going to be a lot of people jockeying for position, and some of it's not going to make any fundamental sense at all. And that's why you have to watch the money flow.
Yeah.
Where's the money going?
Fantastic conversation, Wayne. It's been an absolute pleasure. Thanks so much for joining us here on the trading floor. Yep,
Thank you very much.
Love it. Thank you very much. That is Wayne Pallello there, who's from Next Gen EMP, the CEO over there. I'll send things back over to Chicago with Alex for now.
Thank you, Sam. Coming up next, Options Corner. Rick Ducat, lead market technician for the Schwab Network, is going to stop by. We're talking Western Digital. You won't want to miss it. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Time for our first Options Corner of 2026. We got Rick Ducat here to help us, lead market technician for the Schwab Network. And we're talking Western Digital. Now, big picture overview. I mean, 2025 was the year of these memory chip stocks. A lot of optimism into the new year as well.
It's already seeming like a happy new year for these storage companies, these storage chip makers. Once again here, Western Digital up about 300% or so during the past year. Even the XLK tech sector ETF and the SMH semiconductor ETF, even those are only up about 25 and 53% respectively here. So strong outperformance here. And when you look at kind of an overview of these chip maker names, it's really these storage groups. Seagate, Micron, Western Digital, that are far surpassing the gains that we've seen from the more conventional chip makers here, the CPUs and GPUs, like the likes of Intel, Broadcom, NVIDIA, etc. here. So this is the area that we've seen strength here, and it's so far seeming like it could continue as we head into this new year.
Yeah, there's some positive news out of South Korea with Samsung saying, hey, we're back, and consumers and customers love the memory stuff they're working on. You see, it's still at that stage where it's like good news is good news for all of them, as there's so much demand for that capacity right now. Well, let's talk the technical picture for WDC here as we cross that new year bound. The chart stays the same, and it's been a good chart for investors.
Yeah, for the most part, sticking within these established boundaries that we have here, our white lines here, one going across these lows, extrapolate it, duplicate it, put it across those highs, matches up decently well here. These things often don't fit exactly here, and also oftentimes you see the closing prices can provide a better guideline here for some of these boundaries here. But again, very simple. subjective here. What I see more standing out, though, is this very horizontal period that we've seen kind of these patterns that get established here when you have these strong pushes to the upside. You have a brief sideways to downward consolidation that often follows before those initial highs are then breached once again. In this case, 188.77, that's our high point here. That's about where we're stalling out so far today to conclude this first trading day and first trading week, I guess, too, of 2026. When we look at our moving averages, our 21-day EMA, our teal monthly moving average there, pretty close to where our trend line would start to break down. 173, 174 would be the point to watch there potentially. RSI compressing in a triangular shape here. We have higher lows, but we also have lower highs. So look for a push above this level here, our red trend line here, and for a break above that overbought area once again. Finally, volume profile, the nodes that stand out right about here and right about here, roughly 180 and 155, 160 or so. Those are the standout areas. Notice as well, very heavy volume spike that we saw recently here, very high conviction.
Yeah, a lot going on, a lot of optimism spilling over into the new year here, but with that being said, it is called Options Corner after all. Let's take a look at the derivatives trade, anything standing out, open interest-wise, volume-wise, when it comes to the options.
Yeah, and what we see here today is very heavy concentration in these January 16th expiration options here. This is the most active both in terms of volume and open interest here. Roughly 32% of the volume, almost 40% of the open interest is all concentrated here in this little orange box, 9.7% plus or minus here. Now, what was interesting too, I thought, first the sizzle today, the activity versus the 5-day moving average of options volume, 2.5. So a heavy day for this particular name here. And the open interest for January 16th is very far off from where we are now. Most of the heavy open interest is in the 70s to the 90s on the calls and the put side. Really speaks to how strong and how swift this rally has been here. One notable trade that I saw, minus 170 March 20th, 150 strike calls at a 44.50 credit. This was our biggest dollar amount trade, about 750,000 or so, but unclear if it was an opening or closing trade.
Yeah, one thing that stands out to me for sure is only about a month and a half till that February 20th expiration, but over 20%, high to low basically when we're talking about that potential range for this stock. So tons of volatility still juicing into these options in this stock. Thanks to Rick Ducat, as always, lead market technician for the Schwab Network. And with that, we'll send it back to Sam in New York.
Thanks, Rick and Alex. Well, coming up, it's time for Overlooked Stocks. George Tillers has his eye on Sable Offshore today, which is rallying after a court ruling in its favour. He'll break down the news on that company, what you need to know about the stock coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so.
Sometimes,
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Vardis, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. I'm joined by George Sillis, Senior Markets Correspondent. We're looking at Sable Offshore right now today. It's surging after a court ruling in its favor. This is in the business of oil and gas. Talk us through the story of why it has exploded. Look, it's rallying up 31% right now today.
Yeah, this is a kind of a unique situation, actually a very special situation for a company today. But Sable Oil Offshore Company is essentially the company that has properties like 3 oil rigs, a processing unit, as well as a pipeline off the coast of Santa Barbara. And going back to 2015, there was a spill in that area of the country. So these assets, which were owned by a company called Plains All American, were stranded. They were shut in because of the environmental damage that that spill created in that region of the country. Fast forward into 2024, Exxon ended up buying those assets and then selling them to Sable Offshore, which now is the owner of those shut-in assets. Now Sable itself, if you look at the chart action or price action in the last few years, this was a company that came about as a reverse merger via SPAC. So that's how it evolved as a company. Now, the challenge has really been with these assets, which have been stranded, oil assets off the coast of Santa Barbara for the last 10 years. There's been a lot of back and forth on this restart in terms of restarting the supply off those oil rigs, shipping those through the pipeline to the processing center. And this pipeline is quite large. It covers about 124 miles off the coast in that pristine water. So there's been a battle on restarting this because of the environmental aspects of the spill and potentially some challenges in court. Now, there's been a lot of back and forth. Environmental groups back on the 26th did file a petition to stop the resumption of these stranded assets, or oil, if you will. And it looks like today there was a favorable ruling from a court to essentially rule in favor of the company to begin essentially releasing that supply and bringing it back to that processing unit. And of course, eventually to market, to which point the company will start generating revenue. Because if you look at Sable itself, it hasn't generated any revenue because essentially it's an investment holding company right now that bought these assets contingent upon them monetizing them in the future. So it looks like right now, based on what information we have and based on the price action we see today, that these assets will eventually come to market once again. Again, it's not for sure, but it's starting to look more favorable over the last few weeks as we move into the new year.
Okay, and I mean, just looking at the chart there, as we can see that sort of big dip that came off around September, October, and has struggled to sort of climb back up. And we went down about 50% or so over the last 12 months. Just wondering, what some of the analysts are actually saying here, because I'm looking across some of the consensus. Not a lot of analysts, of course, covering the stock here, but I mean, 4 in a buy camp, 1 with a strong buy. No one seems to be sort of on the fence with an underperformer sell rating here. But I am seeing that, in some of the copy that, there is some worry about, the potential for risk for sort of more litigation down the road.
Yeah, so that's why I say this is a special situation, because you have to consider things like regulatory timing, permitting, litigation outcomes. So these are, again, uncertain outcomes. So with that said, that's why you're seeing, even in the option market right now, the implied volatility of these options are extremely high, as I was looking at them earlier. But nonetheless, if you look at the analysts, for instance, Benchmark has a $20 price target. They have a buy rating, and they say that the company is likely preparing to resume pumping oil through its pipeline system and to that processing unit off those offshore rigs. If you look at the consensus analysts, the low target is $19. The high is $29. The mid is around 22.5. So again, the analysts are looking for resumption of operations. And so again, if you consider their estimates, which there's 5 analysts that cover the stock, they're estimated this year, 2025. I keep saying this year, but I mean last year. 0 revenue, they didn't generate any. And then this year, 2026, they're expecting over 420 million. But with that said, they still are expecting a 90-cent loss on an adjusted basis because it's probably going to cost them quite a bit to resume normal operations. But irrespective of that, if you look at the market capitalization as of the close on Wednesday, $1.3 billion in market cap, short interest is quite high, 19%. So there may be a little bit of a short squeeze going on here. But also debt, because the company had to issue debt, about $900 million in total, to fund its operations, which were not generating any revenue, which amount to about $350 million a year. So they don't have a lot of cash, also is my point.
No, they don't.
There's probably going to be, assuming they resume
They need
operations
cash.
in some capacity, they will issue a secondary offering. This is just my interpretation. But that also might be a buying opportunity for those that are wanting to capitalize on this name, considering maybe it's only trading around 2 to 2.5 times sales for this coming year, 2026, under, again, the assumption that they resume operations.
Okay, good stuff. Good look at this name for us today. Sabre Offshore trading up at 30% right now, $11 and change. Thanks so much for getting us across the news and developments on this particular story. George Sillis, appreciate it as always. We're nearing the end of the market session. We'll bring in Kevin Green to break down the levels that he's watching on the S&P 500 and break down today's action coming up next on Market on Close.
The difference between me wearing a burqa and a nun wearing her headdress, like honestly, I don't see the big deal.
Well, maybe it's because nuns don't just
There's the difference between
fucking explode.
There's the difference between me wearing There's the difference between me wearing a burqa and
6 more minutes. And I had a green day. Actually, a real good day on that one trade. After that, I don't want to push nothing. One, two, three, boom.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Close to my 200s and close to the orb.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
I don't think I've
Welcome to
eaten
Schwab Network,
snacks
where
today.
real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
We're back here on Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange alongside Alex Coffey, who's joining me in Chicago headquarters today. There's just a few minutes left to go now for the first day of 2026. So let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the session. So stocks have sort of wiggled around today, KG, but we're looking pretty flat right now on the SPX. What are you seeing out there as far as the levels in the final few minutes?
Yeah, you know, I think it's actually a pretty decent recovery from the lows, even though we weren't able to hold the highs from early on in today's session. But we did see a broadening trade taking place. We have over around 60% of the stocks in the S&P 500 that green so far. And a lot of the pullback actually has been driven by these mega cap names and technology names in some respects here. So we were able to hold that 68.40. We did go through it for about 30 minutes or so, but we were able to recover it, at least for now. And now going into the close, you are looking at around 68.50, which we will have some pen risk there from an option standpoint, and would leave us kind of flat on the session here. I think that's actually a pretty decent way to kind of end out the week and to start the first day, if you will. Broadening out trade kind of on an intraday basis, maybe setting up for some of this economic data that we will have next week. And so I'm actually looking at around this current area for us to be able to kind of pin here, at least for now, and then we'll ramp up potentially for next week. And I would actually think that expect volatility to kind of inch to the upside next week, just given the economic data that we do have on the calendar.
Speaking of volatility, Kev, I saw your chart, seasonality of the VIX, and it makes me think we should be more worried about March than September like we are every year.
Well, it looks like we should actually be worried about the next, let's say 2 weeks or so. Next week, maybe not so much. The week after that is where volatility could actually rise to the upside pretty aggressively. We actually have the leap expiration for January, so we will see a large amount of notational value running off in the market. And then the last week of January, we will have the Fed meeting as well. So you can kind of see over the last 10 years, we generally do see volatility actually inching to the upside the latter half of January. And that's something that is a little bit normal. And then we kind of prep for a February move to the upside for volatility as well. I don't think it's the first day of trading is not going to be indicating what we're going to do for the remainder of the year, but I think you are still seeing some repositioning happening. Really decent AI themes that are outside of this.
All right. Well, not a bad day. It kind of sit here and concentrating on the 5 minute a little bit more today, looking at the 5 and the 1. I don't know what it's kind of waiting for. I really don't. I don't know. Usually I can tell by the end of the year how I want to trade the market, but I think I'm going to just stick with my plan, keep going with the Magnificent Seven and buy the dips and learn them a little bit more. And the SPX and the SPY has become a no-brainer. I could throw some IWM in there. And I've been sitting in a kitchen table chair with a pillow cushion. My desk chair is gone. I was going to go out and eat, but I decided just go ahead and skip dinner tonight. I'll get back with it tomorrow. Hopefully I can get my schedule back to today's Friday or Thursday. So I don't know what day it is. It's got to be Friday. So we'll catch you later. Have a great weekend. It is Friday, ain't it? Does anybody know what day of the week it is even? Friday. Friday. Adios.